think it's par for the course, and the data is still not worrying at all. Because the institutional data was actually positive, both the FIs as well as the DIs, they were mild buyers in trade. So that was pretty good news. What could have happened is there was some long addition in the previous few trading sessions. And there was some unwinding both on the Nifty as well as on the Nifty Bank. So more amount of unwinding of positions is what weighed in yesterday's trade itself. What about positioning? Well, the FIs are still short, mind you. They're close to 93% of their positioning. Country remains on the short side. If you look at it in absolute contracts as well, the FI net short positions is around 1.89 lakh contracts on the short side, while the client positioning, you have around 1.28 lakh contracts on the long side. So both of them on the opposite ends of the spectrum. Not such bad news, actually. But the FIs, remember earlier, they were selling in the cash market and they were long in the stock futures. Now that appears to be reversing a little bit because these are arbitrage positions. So in yesterday's trading session, there were some shorts that were added in the system and there was some unwinding of long positions as well. Moving to the options data then. Well, in yesterday's trade, you had suddenly call writing that had come back. It outweighed what kind of put writing we saw. But in the last few trading sessions, more number of puts were written. And because yesterday we saw call writing did come back into play, that's why the PCR has come back down to around 0.8. Because the call writers, they feel they're back in the game. 25,100 call, 25,200 call. Aggressive writing is what we saw out there. While on the downside, the 24,900 put as well did see a good amount of open risk build up. So the level should come up for you in the screen. Last couple of trading sessions, we're going to around that 25,200 mark, and that's getting rejected. So this is a bit of a resistance zone. 25,220, you'll want that level to get taken out first on the upside. In terms of a reference point on the downside, 24,800, 24,900 is important. 38% retracement of the move, and even the options data suggests that these levels are extremely important. The Nifty Bank led the way on the way up. However, the 100 EMA is going to be important in terms of a first reference point that you're looking at on the Nifty Bank itself. Remember, it's trading above all the averages, so that becomes the level you're looking at. And today, you'll have earnings season that will kickstart. Yesterday, there was some optimism going into it because you had, tech actually that did do well. That was an outperforming sector. By the end of today, we'll be having TCS's numbers. So tech will be the swing factor, particularly in the last hour of trade. So yesterday, some profit taking, data not yet worrying. It continues to remain a bit of a buy on dips market till those lower levels get violated.
Thank you very much for that. Not just TCS, even Tata Elxsi will be reporting numbers along with GM Brewery. And the other thing to watch will be the weekly expiry for the BSE contracts. And today is the third day of subscription for LG India Electronics. And so far, 3.3 times already subscribed. So lots on the tap for this Thursday session. Let's get you some equity views then. Rajiv Batra of JP Morgan says he anticipates the earnings cycle to bottom out after 5 consecutive quarters of lackluster earnings and pave the way for a decent recovery going forward, driven by a low base from the previous year, policy tailwinds, a resurgence in economic momentum. He says the recovery should be aided by the ongoing rural revival, reduced taxes coming into effect from end April onwards, the ongoing monetary policy easing, declining inflation and above normal monsoon and softer commodity prices. Now, in terms of levels, he expects the Nifty 50 to trade between their base case of 26,500 and a bull case of 30,000. That's the target over the next 6 months. He adds the preferred sectors remain consumer discretionary, financials, materials, consumer staples, hospitals, real estate, defense and power. Okay, let's invite Jeffrey Dennis, independent emerging market commentator, joining us on the show now. Jeffrey, thank you very much for joining in. First, comment on this massive tech-led rally that we're seeing on Wall Street. Yesterday, it was AMD, which shot up double-digit up move. Are you getting a sense that the AI trade, is getting a bit overheated, frothy? Because there are concerns of circularity. Everyone seems to be signing a partnership. Now it's OpenAI with AMD. Before that, it was OpenAI with NVIDIA, NVIDIA and Intel, and then you've got OpenAI and Microsoft. It's just going round and round.
Yes, I think it's a very, very good point, actually. I think there is some suggestion that things are just indeed going round and round and round. And I think that we're in a situation now where there are concerns beginning to build up about a bubble in the AI stocks and tech stocks in general. You've started to see the market really flattening off a little bit over the last 3 or 4 days or so. You've had a lot of warnings from well-known people such as Jamie Dimon about what the market is doing. So I think we may be coming to an end of this very, very strong run in technology, at least for the time being. Now, I don't expect there to be a big sell-off because I think what's different between today and, for example, the tech crash in 2000 is that these companies have got real businesses and they're generating real revenues, and there is a lot of investment going on. But I think you're right. You've hit the nail on the head there. I think there's just too much going on now in the sector, and everyone's getting too bullish on every piece of new headline. And I think we're set for a pause before too long.
Set for a pause before too long, but there's no way to kind of sort of, what should one do? I mean, if you're in the US, you own these stocks, maybe you can lighten up a little bit, but any implications for us here?
I don't think so, because, and you've heard this from me before, I mean, what is important for emerging markets generally is the performance of the dollar. Now, the dollar is a lower dollar is what pushes investors towards riskier assets overseas, such as emerging. We've had a really, really good rally this year, of course. And I think the rally can go on a little bit further. Now, the dollar's rebounded a little bit over the last few days, and I don't think it's really had that much of an impact in pulling emerging markets down. So I think the thing that could happen in the US that would really pull emerging markets down is, number one, if you got a really hefty sell-off in equities in the US, which I don't think you're going to see. I think you're just going to get a pause, some rotation, which you've already started to see into some of the, should we say, less popular sectors over the last several months. And the second thing which would really, I think, bring emerging markets under pressure would be if the US fell into recession. And that, frankly, doesn't look very likely at the moment. Although, of course, one of the challenges the market's got, and I think this is a reason why people have become a little cautious, is we don't really have much data now because of the government shutdown. And I think it's a very bad time, I think, to have a situation where we're not getting the data. But those would be the things that I think would hurt.
Jeffrey, I should have qualified. My question actually was the opposite. Will a pause, because, I mean, the US tech AI, large cap AI and technology has been this magnet for anyone who can invest across borders.
Yeah.
All money is gone in there. So if that theme starts to slow down, people start to look elsewhere. So it's actually not negative, but maybe positive for flows. We've had negative flows, FII flows for a long time.
I think that's right, and I think the key, forgive me, I think that's right, and I think the key here, as I say, is going to be the dollar. And I think if the US were to pause or pull back a little bit, as long as you don't get tremendously negative performance by the US, you would see money moving back towards, moving yet more towards the emerging markets. Now, if you look at India, which we've talked about, of course, many times in the past, I think India's got a lot going for it in terms of scope for lower interest rates. You've got probably on the back of the Israel-Gaza deal, although it's only stage one deal and we don't know if it's going to hold. That's probably going to be negative for oil prices. The economy's doing reasonably well, and of course it's been a big underperformer. And so I think a pause in the US and a slight pullback in tech, as long as that's accompanied by a real key signal to move overseas, which would, I think, be a weaker dollar, and India could well be a major beneficiary of that.
All right. Hi, Jeffrey. Good morning and good to see you in. A quick word on the gold prices. It's been moving from strength to strength. Uncertainty in various parts of the globe, as well as a weaker dollar. Well, that's boded well for gold prices. Do you think that as well is ripe for a pause? Because if we look at the gold ETF data, it's still not at those highs that we saw in tonnage terms that we saw, say, 3 years ago. So your view?
I'm skeptical about gold going much higher right now. And the reason for that is because if there is some real truth in this suggestion that we are now getting a stage one agreement between Gaza, therefore Hamas, and Israel, with prisoners being exchanged, that is going to be a development which leads to a little bit of a retreat from safe havens. And you're not seeing it yet in the dollar today. You are seeing a little bit in gold, which is pulling back, maybe a bit of profit taking, not obviously a big move. And of course, we have to see what happens in terms of the equity market. Now, I'm personally a little skeptical about this stage one deal. There's so many other things that have got to be sorted out before we can say this quote unquote war is over. But one thing that would cause some significant, I think significance too strong, some notable profit taking in gold would be in the event that you started to see one of the big conflicts around the world, in this case Gaza, Hamas against Israel, begin to settle down into some sort of peaceful conclusion. We're not there yet. We've made a step towards that. But I personally do not see gold just powering on and on up to 5,000. I think it's well due a pause as well. And I think this situation in the Middle East could be a trigger for that.
All right. Jeffrey, we'll leave it there. Good conversation as always. Thank you very much for joining us. Appreciate it here on CNBC-TV18.
You know, it's the 44th record for gold this year. 44th. I mean, it's just getting a little too precious, this precious metal.
Everything, who said everything that glitters is not gold?
Yeah.
Well, that sounds foolish now, doesn't it? By the way, March is when we hit $3,000. So, we go from that, doubling record, which is 5 years, but $1,000 from March to now. Wow. So it's just, and the pace has picked up quite considerably. Let's just quickly run you through interactions which are lined up here over the next 2.5 hours or so. Well, we have 8:35, the management of Satvik Green Energy joining us to talk about the second quarter earnings. We have at 9 o'clock, Sandeep Agarwal of Sovilo Investment Managers talk about the IT space. TCS kicks off with numbers today. 9:20, Manish Gurmani of Bandhan AMC will be a market master of the day. 9:35, the management of Joyce Alucas and Malabar Group join in to talk about the gold rush in the market. And of course, what is it doing to jewelry sales, volumes, right? Who's buying gold jewelry or gold for that matter at these rates? Central banks are, but what else? Following that, we'll be speaking with the management of Rubicon Research, who's near 1,400 crore IPO, opens the subscription today. Towards the end of the program, Harshvardhan of Bain & Company and Anil Gupta of ICRA on the recent RBI steps to improve ease of banking. So that's the lineup.
Well, time to slip into a quick break. We've got a lot of stock-specific action to track for you on the other side. We'll just give you a sneak peek into our top 10 segment. IT Motors, Escorts, Lupin, InfoEdge, Prestige Estates, IRB Infra, GR Infra, as well as RBL Bank. They'll all be reacting to positive news flow, while on the flip side, Concor and Senco Gold will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. It's all green on Asia this morning. The Taiwanese markets are up over 1%. Pull up the Nikkei. That's racing away towards a 1.5% up move this week. The Japanese markets have clocked in close to about a 6% gain. While Hang Seng has retreated a bit, but the Shanghai market, which has opened up after a 1-week break, I think that's opened up with some strength. So there is some optimism in the global market. Shanghai will also come up for you on your screen. The GIFT Nifty is suggesting a positive opening. Let's see whether today is a day of strength or we just consolidate like yesterday. Let's talk about individual stocks then. This is CNBC-TV18's list of top stocks for the day. Our entire research team is joining in. Good morning, guys. Sudarshan, let me start with you. What's the latest on the auto front?
Good morning, Rima. So I have two stocks today. First one is Eicher Motor for its subsidiary, a commercial vehicle subsidiary. That's a JV between Volvo and Eicher, and it's known as Volvo Eicher Commercial Vehicle. That will be investing rupees 544 crore for manufacturing and production of Volvo's 12-speed manual automated transmission. And that facility will be set up in Ujjain, Madhya Pradesh. What does this do? This Volvo's 12-speed automated transmission, it reduces fatigue of driver and also improves the productivity. So it can be taken positively. Second stock is in focus Escorts Kubota. Recently, Haryana Chief Minister and the government officials had made a visit to Kubota's facility in Japan, in which the company, which is a partnership with Escorts and Kubota, has agreed to make an additional investment of rupees 2,000 crore in the existing manufacturing and R&D facility that's in Haryana. So this also can be taken positively.
All right. So thanks very much for that. Keep an eye out on those two. Well, Lupin is putting in a large amount of money to set up manufacturing plant in the US. Ekta is here with details. Ekta, morning.
Well, yes, Lupin is not taking any chances when it comes to its presence in the US. They've announced plans to build a manufacturing facility in Florida. They will be investing $250 million over 5 years. The facility will have capacity to produce over 25 key respiratory drugs, including albuterol inhalers for asthma patients. The project is expected to create more than 200 long-term skilled jobs in Florida by 2030. The investment is going to be on around 5 acres of land, and Lupin is going to be receiving tax incentives from the state of Florida. If you read their press release, they have spoken a lot about giving back to the US in terms of manufacturing and in terms of investment, and this is in line with that. I expect Lupin to be in the green, considering this kind of investment will also safeguard them from any kind of headwinds possibly when it comes to tariffs.
Thank you very much for that. Keep your eye on Info Edge. The company has released their Q2 standalone bookings. It's sort of a pre-quarterly update on the overall billings. Now, the total billings have gone up by 12.1%. This is a pickup compared to what they had done in the prior quarter, which was about 11.2%. The key everyone's tracking is Naukri. That is the cash cow. That's the driver of their revenue and profitability. And recruitment. Billings have gone up by 10.8%. Again, an improvement compared to Q1's 9% mark. The recruitment numbers are important in light of all the job losses that we've seen. TCS, remember, we'll ask them about the 12,000 people that they've had to let go on account of, because they couldn't deploy them, anywhere else in the company. So recruitment numbers are important, 10.8%. The key is a bit of an improvement compared to Q1.
Okay, all right. Thanks a lot for that, Reba. Well, let's hop across to Sonal. She's here to tell us about Prestige Estates. Morning, Sonal.
Good morning, Nigel. Well, it was a good quarterly update that came back from Prestige Estates. In fact, it's better from the peers because there's a high double-digit growth in sales, 50% on a YOY basis to come in at 6,017 crore rupees. Volumes grew 47%. So it's a strong growth which came in from sustained sales, which is basically from existing inventory only. Realizations were up 8%. Their collections grew by 17% as well. And in first half, launches are at 18.1 million square feet. The gross development value that they've added is at 17,592 crore rupees. They're positive to maintain that momentum. So going with green on Prestige today.
Thank you very much for that. Manglam is now joining in to give us the latest on Concor and Senco Gold.
Well, the second quarter updates continue, and for Container Corp, it's been slightly softer than what the company had been guiding earlier. So the EXIM volumes came in at around 8.7% in terms of growth. Domestic volumes grew 16.7%, and as a result of which total volumes grew by 10.5%. What is it that the company had targeted earlier? For the full year, they've targeted 10% growth in EXIM and 20% growth in domestic volumes. So the second quarter performance is slightly shy. And even the first half, if you look at it, the overall volumes are just shy of 11% versus the full year guidance for the company at 13%, putting the onus on the second half. So see some bit of red on Container Corp. Senco, now after a heady 18-19% growth that we saw in Titan on that base yesterday, 6.5% growth coming in on Senco may disappoint the street. The company said that it's impacted by one highest ever gold prices, a high base in the same time last year, heavy rains and flooding in parts of Kolkata and West Bengal. So all these factors have actually impacted the second quarter, though they do believe that this year they would do 18 to 20% revenue growth, which is pretty much in line with the first half where they've grown 17.8%. So expect some bit of red on Senco today.
Okay, all right, Mangalam, thanks very much for that. More stocks with news flow. Vivek is here with that list. Vivek, morning.
Well, good morning. IRB Infra is in focus. Both IRB Infra as well as the InvIT will be in focus. Now, IRB Infra has said that they will invest a little over 750 crore rupees in the publicly listed and traded InvIT, and this is going to be done via the preferential issue route. So the units will be acquired at a price of close to 62.95 rupees a unit, and the main reason for this particular fundraise is for acquiring 3 project SPVs from the private InvIT. So the public InvIT will acquire 3 project SPVs from the private InvIT. Separately, the InvIT, the publicly traded InvIT, has also gone ahead and launched a QIP to raise close to 3,250 crore. Along with it, keep an eye out for GR Infra as well. The company has received a letter of acceptance from the State Highways Authority of Jharkhand. This is for the Giriraj bypass project. Contract price of 290 crore, and the completion period is for close to 24 months. And lastly, keep an eye out for RBL Bank. It was the large mover yesterday. Society General yesterday picked up close to a little over 33 lakh shares at a price of 284 rupees a share. So again, fund action continues as far as RBL Bank is concerned.
Thank you very much for that. Let's do a quick recap then of the top stocks. Stocks with positive news flow are Eicher Motors, Escorts Kubota, Lupin, Info Edge, Prestige Estates, IRB Infrastructure, GR Infra, RBL Bank. And the stocks with negative news flow are Concor and Senco Gold, where the Q2 updates are a bit underwhelming. But let's move on now and put the spotlight on some more stocks the brokerages are talking about this morning. Sudarshan is back with us.
So Citi has written on Eterna, it maintains buy call and target is increased to rupees 395 per share. It says growth momentum in Blinkit remains stellar and focus on user acquisition is visible in acceleration in app traffic, and market leadership has solidified further in last few quarters. It expects FY26 and 27 quick commerce GOV growth at 123% and 57% YOY, and also expects adjusted EBITDA margin to break even in Q3 of FY26 and expand further to 1.9% of GOV in FY27 and 3% in FY28. For food delivery, it expects stable trends. Next one is IRB Infra. CLS has come out with a note. It maintains outperform call and target here is rupees 72. It says H1 toll collection growth has improved to 9% versus 8% in Q1, and this was done despite early arrival of monsoon that we have seen, and toll growth rate has doubled in FY26 at 100% owned and public InvIT, and also toll revenue from its flagship Mumbai-Pune E-Way was up 4% in H1 of FY26 versus 2% that company had recorded in H1 FY25. Also, IRB Infit's board has approved debt refinancing, and that should support its dividends as per CLSA.
Right, thank you very much for that. We'll take a quick commercial break here. Up next, we'll connect with Parag Thakkar of Fort Capital for some fundamental stock conversation. We'll also be speaking with the management of Satvik Green Energy, who talked to us about their first quarter earnings coming up.
Welcome back. Hope you're having a good morning. Well, as promised, we have Parag Thakkar, the Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you in, as always. Parag, I wanted to ask you about the tech space. Later this evening, we'll be getting results that will come in from TCS as well as Tata Elxsi. Now, getting into these results, we've seen some mild buying out there. So there is some optimism that maybe the worst is in the price. How do you approach this sector, and any couple of stocks that you do like?
So we have TCS in our portfolio, about 2 to 3%. We have Infosys, we have Coforge. We have selected names. We have 9 to 10% weight in the our overall portfolio in IT stocks. What I expect is that the valuations have become extremely compelling. So unless you believe that this sector is gone and there is a structural problem in the sector due to this AI-led deflationary revenue degrowth, if you believe that side of the story, then of course there is a problem. But I would say purely from valuation perspective at 20 times for such a quality business which generates 50,000 crore cash flow, I think there should be nothing to lose. And stock has been beaten down completely out of shape. There was some recovery in last 1 or 2 days, but that's okay. So I would say that even a small positive surprise, that like flat revenue, some margin improvement, or some positive commentary on deal wins can trigger a 4 to 5% move also immediately.
You should watch for Infosys, because there are reports that the Anthropic CEO, who's currently in India ahead of their planned opening of the office in early 2026, is going to be meeting Infosys. So he will meet Mr. Nandan Nilekani and Salil Parekh. So, we keep talking about global partnerships, but Anthropic CEO, according to reports, is likely to meet Infosys. So that's the other tech stock you should keep on your radar. In any way, if there is, can strike a partnership to leverage India's tech talent, or anything comes out of this.
Well, indeed. So we'll keep an eye out on that as well. Well, Parag, you have like the larger private sector banks. I think the last time around we spoke about ICICI Bank as well. What about a company like a bank like RBL Bank? There is that chatter that it could be some kind of infusion. Valuation-wise, well, it's not as cheap as what it was at the start of this year, but there was big fund-based buying yesterday, and the stock continues to remain in the F&O band. At around 285 rupees, your view on the stock?
So basically, I will refrain from giving a fundamental call on this company because I don't have it in my portfolio. But I just saw the business update, and business update looked very good actually. From my analysis on the business update, I think this will be one of the banks apart from City Union Bank, which can report QOQ NIM expansion. So I would like to just give you my fundamental analytical view. Of course, many things are floating around in the market, and we have seen that there's a huge global interest in Indian financial companies, right? For example, Sumitomo Banking of Japan bought stake in Yes Bank. We saw that IHC bought a stake in Samman Capital. So this can be another episode like that also, in my view.
But what would you go for in the banking pack? You prefer the larger banks?
Yeah. So basically, see, I'll tell you, my view is very simple. I'm very bullish on second half onwards for the economy because of whatever steps government and RBI has taken. And banking is a leverage proxy to play the economy. So I am extremely positive, overweight stance on financials, led by HDFC Bank, ICICI Bank, SBI, and so on and so forth, and City Union Bank, as I keep saying. So I'm saying that HDFC Bank, for example, just to give you a glimpse, now trades at just 2 times book value on FY27 earnings. PE multiple is just 15. So PEG is 1. Plus, after this 22nd September, the festive-led demand surge and the GST cut-led demand surge, they are the biggest beneficiaries, actually. They lend to, auto, Maruti, for example. For Maruti car buyers, HDFC Bank is the biggest lender. So they will benefit. I'm 100% sure in second half the credit growth will improve. Now they don't have constraint of CD ratio also. So the growth will accelerate. Margins will bottom out in Q2. From Q3, due to CRR cut and due to deposit repricing, gradually margins will improve and it will inch back to the normal margin levels by Q1 of next year. So I would say that 15% EPS growth is possible, and 15 is the PE. Price to book is 1.9. Price to book is 2x, and ROA is 1.9. Plus, it's the best leverage, most prudent leverage proxy to play economy. So ICICI Bank also same thing. They always surprise the market on every metrics, and they will keep doing that. In my view, in terms of margins, also this quarter should be bottom again for them.
Yeah.
And both are very strong deposit franchises with very low cost funds.
Yeah, no, absolutely. Parag, I had, so that's financials and IT, two big areas. And you said GST cut, etc. There's also perhaps, who knows, right? This US-India thing may also get resolved, H2.
Hoping. It's a big hope.
Yeah. Then you add many more segments to this thesis, things doing better, things doing well. I just had a question, Parag, on, so we spoke about some of the, if I can put it that way, older segments, but a lot of the interest is in new industries where there is a fast scale-up happening, right, which is data centers and AI and technology and all of that stuff, right? And it's real. I mean, it's not, it's not, it sometimes feels very floozy, but the point is, it is real, maybe ahead of its time or whatever. Sure. But it's playing out. And there are few names in the listed space as well. Have you done the work? Have you looked at the ecosystem? And does anything make sense here?
So basically, I am playing it. See, I want to play the first wave of any big theme through time-tested businesses. Because even if suppose that theme does not materialize, the current cash flows are justifying the current market caps. That is how I think, and that is why Reliance and L&T are my bets on this kind of themes. Both of them are putting data centers. Reliance is betting big on AI. L&T is betting big on green hydrogen, data center, semiconductor. And plus their current market caps are, for example, L&T trades at just 24 PE on FY27. And order book, I am 100% sure that they will meet their order inflow guidance. This quarter also execution should be good because of Middle East. Reliance also, for example, refining is doing okay. Retail, again, GST-led demand surge will help Reliance Retail also. In Jio, they are adding subscribers like nobody's business. Like last month, they added 18 lakh subscribers. ARPU is likely to inch up. So I'm saying that I'm playing this theme through time-tested businesses like Reliance and L&T.
Okay. Parag, request you to stay on. We want to invite the first corporate on our show, and that's Satvik Green Energy. This is one of the recent listings. It listed on the 26th of September. The issue price was 465. The stock now is at 500 rupees. It is a manufacturer of solar PV modules. Came out with the Q1 numbers. Manik Garg, MD of the company, will be joining in. And what we'd like to talk to him about is, one, Q1 has been a very strong quarter, but is it sustainable? Secondly, the company is also planning to foray into inverters, so the rationale behind it. And third, the supply glut worries in the solar module industry. Manik, thank you very much for joining in. Let's start first with the Q1 numbers. Very strong, but it's also on a low base. Now, in Q1, you've done about 900 crore of top line, EBITDA margins of 20%. What would FY26 look like for the company? Any guidance you can share with numbers?
Hi, good morning. First of all, thank you for inviting me to the show. And it's been a good quarter for us. I think we've delivered some decent numbers, and I can't give you any future guidance, but this just shows that we've been growing year on year and quarter on quarter. And we're trying to improve our margin profile. Also, we're focusing a lot on that. That is as a result of the three things that we constantly focus on. First is capacity utilization. Second is our diversified customer base. And third is a strong order book.
Okay, all right. Yeah, go ahead.
And so all the three things combined, I think we are able to, perform and deliver the results.
Manik, now, you've come out with this set of numbers, you're listed as well. So an aspirational number is, par for the course, and it's in line with regulations. Can you keep up this momentum? You've done around 900 crores in the first quarter. If I annualize that number, you'll be in the vicinity of close to around 3,700 to around 4,000 crores. With margins in high teens, is that doable? So ballpark 3,700 crores with 19% margins, that could be an aspiration for this year?
So in terms of run rate, if you see that, yes, obviously we'll be able to maintain this run rate.
Okay.
is going to be at this at least with the current capacity utilization. And in terms of margins, obviously there have been certain orders that were executed this quarter that were high margin. Margin guidance I won't be able to give, but definitely margins are something that could soften over the quarters.
So a realistic margin guidance could be in the vicinity of around 16-17%. Would that be fair?
Again, I won't be able to pinpoint a number, but yeah, for now you can see that that's what we've been doing last year, and we feel that that is something that we can maintain.
Manik, just a quickly, morning Prashant here. So will you actively diversify? Because, on modules, etc., there is, as you know, the big concern is this is the best of times, absolutely the best, the peak, right? But then supply will come in and demand will also keep up maybe, but there's a lot of supply coming. And large industrial groups are now getting in. The last one we heard was Mr. Sanjeev Goenka talking to us about more, they're also setting it up and they're kicking it off and they're expanding, etc., both in panels and modules. So just wanted to understand, will you, do you agree with that this is in that sense peak business-wise in this segment, and will you actively diversify?
So there are two things. I think first of all, we continue to believe that the sector is going to grow. There is a lot of supply, that is a lot of demand that is there in the sector in terms of the capacities that have been laid out, the targets that have been laid out by the government in terms of the around 55 gigawatt is supposed to get implemented this year. And what the new manufacturing that is coming up is all of the latest technology. The earlier manufacturing, what we see today, the majority of the supplies of the old technology. So I think that is what is happening in the market in terms of supply addition. I don't see a particularly a threat of extended supply because of enough demand. And secondly, of course, over a period of 2 to 3 years, if we see, definitely that the demand will grow, but it will not grow at the same pace it's growing today. So that is why diversification is a very key for us in terms of maintaining our growth levers. And we are actively starting to work on that ahead of time. So that's why in the last quarter of last financial year we added solar pumps as one of the divisions, and now we are adding inverters as one of the divisions.
So what would pumps and inverters contribute going forward in terms of revenues? I mean, what's the ideal mix going to look like?
Right. So majority of it will still be modules backed by backward integration into cells. But solar pumps and cell and inverters would be in the range of 5%.
By?
Yeah, 5%.
No, 5% this year or 5%?
5% you can say for FY27.
FY27. Okay, just a quick word. What is the current pricing of solar cells and modules, and how would it compare with, say, 6 months ago or 1 year?
Right. In terms of modules, I think the prices sort of bottomed out. So cells, if we see Chinese cells, they are getting imported after duties at around 5 to 5.5 cents. And the module prices, again, range around 16.5 cents. And they sort of bottomed out. And from here on, I think the prices are going to sustain if nothing major happens.
Okay. All right, Manik, we'll leave it there and look forward to our future conversations as well. Good luck as you execute and diversify. Thank you for joining us here.
Thank you so much.
Thank you. We'll take a quick commercial break. We're back with Sudarshan and Mitesh with technical trading ideas on the other side. Hormuz will also be joining in with focus on the big movers from yesterday. Stay tuned. Welcome back. There's 8 minutes to go for the pre-open session. Hormuz is here with the big movers from yesterday. And he's going to dissect that with volume, delivery stats, and just making sense of some of the big movers. Hormuz, over to you.
Morning, Prashant. And some interesting names on the list today. Bluestone Jewelry is one of them. There's a recent listing, of course, and jewelry names yesterday were buzzing around after Titan's update. There's a fourth straight day of gains yesterday. It's gained in 6 out of the last 7 sessions as well. So it's been moving before yesterday's trade itself. So the last 7 sessions, the stock has moved almost 25%. And yesterday's trading session, we had more than 1.2 crore shares that were traded compared to a 20-day average of just under 10 lakh shares. And on the delivery front as well, out of the 1.2 crore shares traded, just around 9 lakh shares were marked for delivery compared to a 20-day average of around 2 lakh shares. And it's done well since its listing in August, up around 40% from its IPO price. Yatharth Hospitals, we spoke about it a couple of days back as well. Delivery-based buying continues in this stock. The stock ending at a record high. The volumes were the highest since the start of the year. Close to 40 lakh shares were traded compared to a 20-day average of around 5 lakh. And here, the 6 lakh shares were marked for delivery compared to a 20-day average of just around 2.5 lakh. And the stock is up almost 2.5 times now from its IPO price, which is 300 rupees. Now, AVG Logistics is one name that sprung up among the broader market names yesterday. It snapped a 2-day losing streak. The volumes were the highest in around 7 months yesterday. Now, yesterday's volumes were the sum total of the last 35 sessions put together on AVG Logistics. Close to 5.5 lakh shares were traded yesterday. The 20-day average is only 13,000 shares, and more than a lakh who were marked for delivery out of those 5 lakh. And the 20-day average here too is just over 8,000 shares. And ITI being the last name, we spoke about it on closing yesterday. The 6th straight day of gains. Now 7 crore shares were traded on ITI in yesterday's trading session. The 20-day average is only 7 lakh. And but out of those 7 crore shares, only 43 lakh shares were marked for delivery in comparison to a 20-day average of 2 lakh shares. Of course, very little free float, 90% with the government, 8% with the special fund. So ITI among the top movers on very strong volumes as well.
Thank you very much for that. By the way, the interest in LG Electronics is very high. So yesterday, Tata Capital closed. It was a very large issue, the largest of 2025, 15,500 crore. And the total subscription for Tata Cap was 1.95. LG Electronics, 2 days are over of subscription, and they're raising about 11,600 crore, and we've already seen 3.3%, 3.3 times oversubscription. Parag, come in on LG Electronics. Are you advising your people who listen to you advise? Are you telling them to participate in LG Electronics? You're on mute.
Yeah. So LG Electronics and Tata Capital both are sensible, rationally priced and decent companies. So definitely for anybody who refers to my advice, I would say you can subscribe to it.
Rima, if you remember, LG came to the market last year. They tried to come to the market, right? Yeah. They asked for 1,30,000 crores in market cap. This time, the market cap ask is about 77,000 crores. So they've dropped the valuation. They dropped it. And I guess what happened is that around the same time last year, when they wanted to come to the market, there was Hyundai. Now, Hyundai, we all know what happened right after listing. It did not do very well. Yeah. So here was another Korean company coming to the market around the same time. So, but of course, Hyundai since then has done very well. The other factor, of course, is you look at LG versus say a company like Havells. Havells is a lakh odd crore in market cap. This is 77,000 crores. So there is that bit perhaps also playing out. And LG is a well-known brand. It's Korean, but it's also Indian, right? We all know LG doesn't need very little marketing in that sense and across product categories, etc. So we'll see. As Rima said, there is a fair bit of interest, maybe for good reason. We'll take a quick break. We are back. And we'll have Sandeep Agarwal of Sovelo Investment Managers to talk about the IT sector as well. Stay tuned. Okay, welcome back. I think the pre-open is kicking off now, and we'll sort of get to the rates in just a bit. But let's get technical trades out of the way. Sudarshan Sukhani is with us, and so is Mitesh Thakkar. Gentlemen, good morning. Great to have both of you here. Appreciate it. Mitesh, you go first. How are things set up? And, you know, a little bit of pullback yesterday, but does that kind of sort of damage things? And, you know, the other thing, of course, is that we kind of sort of turned around from that 25,120. The high was 25,220 or so. But roughly that 61.8% retracement is around from where we turned around. So upper end of the range in that sense, knocking on it?
Well, I think the 61.8% retracement was around 25,120. We got a high of 25,220, but a closing below 25,120. Yeah, I think the markets are will turn weak only if we see weak intraday averages will take up. And there's a good cluster of them around this 25,000 to 24,970 zone. So if it doesn't break and we have managed to stay above this level for the next few days, good chance that we should make an attempt towards 25, 220, 250 zone again. But in case we start breaking below that, I would be slightly worried and may even, this may even open up some kind of a negative movement.
Okay. Sudarshan, good morning. How are you thinking about markets now?
Yeah, good morning. Well, it's been an uptrend for me, and that uptrend continues. Now, markets will fall. They will have consolidation periods of processes of, that's a process in the market that always happens. So yesterday's decline, or even day before yesterday's mid-afternoon decline, is just part of that uptrend process. Now, we have to also put some risk management in place. So my view is that below 24,900, long positions should be closed. Above that, look for dips to buy. If you already have positions, hold on to them.
Okay, so 24,900 is that cutoff on the downside, below which you kind of sort of square off positions. Sudarshan, your stocks?
Well, it's on the long side, and yesterday, for 2 days now, we have been seeing a blistering rally in IT. So that comes in my list. Persistent Systems is a buy, the stop under 51.90. HCL Tech is a buy with a stop under 14.30. Exide Industries is a buying opportunity with a stop under 3.90. And CDSL is that demat company, is a buy with a stop under 1,510.
Mitesh, what about you?
Yeah. I have a mix of buys and sells. On the buying side is Infi with a stop at 14.79 for a target of 15.25. Axis Bank has come to support areas, so around 11.75, 5-6 points lower. Buy with a stop at 11.59 for targets of 12.10. And on the selling side is Bosch with a stop at about 38.725 for targets of around 37.600. And Cummins India might be getting into a slight negative zone, so sell here with a stop just about 39.50 for targets of 38.40.
Thank you, gentlemen. We'll connect through the course of the day, but it's the beginning of another earnings season, and the kickoff begins with TCS. Numbers come out post-market hours about 4:15. And the stock, while it's been an underperformer like the industry, year-to-date down 20%, this week TCS has seen an up move of 4.5%, while the Nifty IT index is up 3.8% this week, the last 3 days. Now, the question is the pace of the earnings downgrades perhaps come to an end? Now, in the case of TCS, for the last 2 quarters, the company reported a decline in their constant currency revenue growth because that large BSNL revenue was tapering off. But this quarter, the expectation is that revenues will be flat. So it's still going to be a muted quarter. It's not that there is growth, but at least it's not a decline. So constant currency revenue growth, according to our poll, should be up about 0.2%. Secondly, on the margin front, the rupee depreciation of about 2.5% seen this quarter is acting as a big tailwind. It's a positive. And plus, for TCS, in terms of a wage hike, typically they give it 1st of April, effective 1st April. But this time they had deferred it due to uncertain environment. So now their wage hike is effective 1st September. So the wage hike impact on margins will be split across 2 quarters. And in the current quarter, there will be only a 1-month impact. Plus, you've got that INR depreciation. So margins could inch up. What will the street watch in terms of, the big things? One is this, remember they let go of 12,000 people? That's quite rare when it comes to the Tata Group and TCS in particular. It's never happened. So we'll quiz the management on them. They'll be joining us tomorrow. Other than that, the H-1B visa hike, Does that increase the on-site cost for the company? What are they planning to do? De-risk it in some way? Then generative AI from pilots, are they becoming big projects? Are they able to monetize it? And is there AI-related pricing deflation? That is the big fear, because technology continues to get cheaper and cheaper. So these are some things that the street will watch. And of course, the big picture is discretionary spending coming back? BFSI has been doing well. Does the momentum continue there? Does it spread to the other sectors? But I think the key takeaway is that stock has been a big underperformer. Year to date, down close to about 20-25%. This week, you're seeing some price action, which seems to suggest some stability, pricing moving up. Growth is missing so far in Q2, but hopefully it doesn't decline. Sandeep Agarwal, the fund manager at Sovilo Investment Managers, is now joining in. Sandeep, first, give us your opening thoughts. What should we expect from TCS?
Hi, good morning, and thanks for having me on the show. So, we are monitoring the sector, and since I run PMS, I don't make estimates now, but I can tell you that the way we are seeing the estimates from the analyst community and the way we are seeing commentaries of different management, my view is that the number which you are projecting, flattish quarter on quarter and a decline of 3% year-over-year revenue growth is what the numbers will be broadly there. And yes, margins may go up a little bit because of rupee depreciation and also wage hikes being postponed. But remember, margin only till EBIT level reflects that benefit of rupee. But on the other income, there could be a negative impact, because generally these companies hedge very, means almost 100% hedge they take for the near 6 months revenue, net receivables. So I think, you may not see benefit of rupee at the PAT level, but definitely you will see benefit of rupee depreciation at the EBIT level. So we are also on the same page that, earnings will be muted, growth will be muted. Obviously, the sector has massively underperformed. So people may want to look fresh at this sector and buy some of those names and keep them as defensive or quasi cash. That is a separate call. But I believe the right way to look at the sector is the PEG ratio, and PEG ratios are still insanely high for large part of the sector.
Sandeep, Rima and I'll get some time with the TCS management later today. What should we ask them?
You should ask them what will the growth be double digit in next 5 years, any of the year. I don't think it is going to happen.
Okay. Anything on the entire things around AI has been a big talking point. I mean, generally there is understanding and that maybe where India plays in this entire AI thing is not the hardware, etc., but it's essentially application on the application layer, and that's where IT services come up as well.
So, I have always told this many times in last 1 year, 5-6 times at least, that, we are trying to find something from the IT services firm. They are doing their business quite well, and, the maturity of this industry is very high now. So expecting more than mid-single digit to high single digit growth on a consistent basis is little too much. It will not happen. Same has not happened with Accenture in last 5 years also. They have been growing, including inorganic, in mid-single digits. So we should not expect. It is a mature industry. The application also, you have to remember that there is a 30 to 40% decline in efforts because of AI. So I don't think any services company, whether it is Accenture or any Indian company or any European company, they can grow at the same pace at which they were growing during COVID times or before that. I have a very clear view, and we should try to find big tech in our Indian universe. I am very confident we will see 8, 10, 15 big techs coming from India, but not in the same space. They would be in consumer tech. That is our strong call.
Tata Elxsi also reports. Now, ER&D was one space where we were seeing growth. Now, growth is moderated, and then came KPIT when they met, I think, certain brokerages. They're talking about negative revenue growth in Q2. And analysts are saying, well, it's going to be a washout year. I mean, on ER&D, as you said, for maybe IT services, we don't see a double-digit revenue growth for the next 5 years, in any of the years. Forget, as an average. For ER&D, what's the PEG ratio looking like? And do we still have a recency bias when it comes to ER&D? Because they've done so well over the last 5 years, you kind of just expect that it's going to go on.
So, ER&D will grow at 2.5 times of the IT services growth. But the problem is IT services growth itself will be like 3-4%. So even if ER&D grows at 8-9%, Indian IT companies do phenomenally well in the ER&D space, then also we can't expect more than 14-15% growth. And the multiple at which they are trading are close to 40-50 times. So basically, we are talking about 3-4 PEG ratio for a 12-15% growth, with all the risk of some challenges happening in the US, some risk here and there. So I don't think, they are even fairly priced. ER&D will definitely grow much faster than IT services, but so are the multiples also much more expensive. So I don't know whether we can make money in the mid-sized companies and large-sized company. It looks very difficult.
Any thoughts on the global tech plays? You look at that very, very closely. What is your view? There is one camp which believes that we are entering frothy, the frothy space, and maybe tech stocks globally will need to take a pause.
No, so, I have seen in last 20, 25 years, whenever this barter system of buying stake and all these things starts, then, that is close to peak. And I am also in the camp which believes that, there is too much of noise on AI. AI is definitely disruptive and doing a lot of good work is happening. Efficiencies are coming, but the amount of money which people are committing, that money will not be required. So basically a bubble is there in terms of what you are investing. Although, we believe that, some of the anomalies, like if a company is trading at $4.5 trillion market cap, I think it is grossly wrong, because finally it will become a commodity at some point of time, and the challenger who is there, he will do phenomenally well. So I believe that, the main player may come down substantially and the challenger may go up substantially. And that is our call for last 4-5 months. And we are seeing substantial outperformance there as well.
Okay, Sandeep, we leave the conversation here for now. Thank you very much for joining in. Back to the markets, back to levels. Sudarshan is with us for his 9:10 call. Sudarshan.
Well, it's Excite Industries. Buy Excite with a stop under 390.
Excite. Mitesh?
Well, you go with a long on Infosys for targets of around 1525, 1530.
Okay, Excite and Infosys, two long calls as we get into trade. Sudarshan is back with us and he's going to tell us why Prestige Estates should be on your radar.
So in the pre-opening sessions, the stock is sharply higher. It's up almost 4% after the company has released quarterly updates, and those updates were very strong. And now brokerages also have come out with a note, and most of the brokerages are positive on the stock. So first one is Citi. It maintains buy call and target is 1910 per share. It says total sales value in Q1 were up 50% YY and was much better than expectations. And also company has achieved 67% of its FY26 pre-sales guidance in H1 of FY26. MS maintains overweight call and target is 1900 per share. It says company has reported Q2 pre-sales of rupees 6,000 crore, which is 26% higher than expectations. Also, launch pipeline provides very strong visibility. Nomura maintains buy call and target here is also 1900 per share. It says Q2 update beat is driven by one more plotted development that company had announced. Also, reported numbers is strong sustenance sales from existing inventory that company is having. So overall, it's looking positive for Prestige.
Okay, all right. So thank you very much for that. We'll sort of track this one as it opens up. But here's a quick recap of all the other stocks as well that we've covered since the morning. Stocks in focus: Eicher, Escorts, Kubota, Lupin. On your screen, Lupin is up about 1.4%. Business updates: Info Edge, Prestige, which Sud just pointed out. Prestige is up almost 4%. And stocks with news flow, there is IRB Infrastructure, GR Infra, RBL Bank, which are up as well. So GR is up about 2.5% at this point in time. Concor, that is Container Corporation, and Senco Gold are the other two names on the back of business updates, which we will track. So market opening coming up in just a bit, and we'll have, we'll look at some of these in terms of how they are starting with today's session. Remember, yesterday, IT services, I mean, actually, the number 2, 3, 4, 5, and maybe number 6 stocks on the Nifty were all IT services stocks. So TCS, Infy, Tech Mahindra, Wipro. And this morning as well, the start is slightly positive, and we'll see whether TCS is able to enthuse this pack a little bit more by evening when numbers come out. Look at Satvik Green Energy, 10% in at the end of the pre-open session. It was a big mover yesterday as well. And of course, we had the management with us post the numbers. So that's a 50 rupee gain coming in there. Just a few seconds and we'll look at the headline indices, and we'll look at, specific stocks, etc. as well. 25,074 on the Nifty. Nifty Bank is absolutely flat. The Sensex is up 0.1%. Small cap index is up about 0.2% or so as well. So that's the picture as things stand right now. So Nifty Bank is now slightly in the red, 1/3%, 1/4% the mid and small cap indices. Nifty heat map will give you a sense of where we are starting. how many up and down in the Nifty, and then we'll dive straight into individual names. So straight off the bat, it's more up than down. Some should be 30 plus up and the rest lower. Shriram Finance and HDFC Bank on one end. On the upside, there's Dr. Reddy's, Eternal, and Sun Pharma, which is starting in the green. Rima.
Well, Pharma is right on top. Sectorally, the Nifty Pharma index is open with a gain of about 1%. And it's not just Lupin, which is planned, investments in India. Outside of that, you've got a Dr. Reddy's, Sun Pharma, Cipla, all surging. The top gainer today is a Dr. Reddy's, and that's up close to about 1.6%. So Pharma is doing very well. IT continues with its gains from the last 3 days. Now the IT index is up more than 4% from Monday to Thursday as we speak. And again, you are seeing some strength coming through in many of these frontline IT names. HCL Tech seeing buying. For HCL Tech, Infosys, Tech Mahindra, Wipro, the numbers all come next week. Today, it's TCS and Tata Elxsi, and TCS has opened the day with a gain of nearly 0.5%. Eternal is the other gainer on your large cap screen. Citi has raised the target price to 395. They've got a buy call on Eternal. They say the growth momentum in Blinkit remains stellar. And they're saying focus on user acquisition is visible in terms of acceleration in app traffic. And Blinkit's market leadership is further solidified in the recent quarters. For food delivery, they expect things to be stable. So Eternal on investors' buying radar. So Pharma is right on top. IT continues with its upward momentum. Eternal is seeing some strength. And throw in a couple of metal names. So Tata Steel and I think JSW Steel. These are stocks with gains of more than 0.5%. Things are quiet, at least for the Nifty Bank. So it's opened in the red now. The Nifty Banking Index is down nearly 100 odd points. HDFC Bank is dragging its feet. So that's putting pressure. Also on the way down is Power Grid, Titan, Tata Motors. Titan was a big mover yesterday. So just pausing after the stellar gain. NTPC, Bajaj Auto, actually quite a bit of auto, and banks too, a little bit in the red.
Well, that's right. I think the stock of the morning is Satwik Green Energy. The management just joined us a few minutes ago, and they were talking about keeping up the momentum, which will effectively mean that 900 crores is what they delivered in the first quarter, with them ramping up capacity. A number of around 3,800 to around 4,000 crores with margins of around 15 to 16% looks gettable, which means it'll be a sharp improvement on a year-on-year basis. So yesterday the stock was up. Today the stock has seen some follow through with another 10% gain. Clearly the stock of the morning. Operational update, you like Prestige Estates, 6.5%. Street reading it very, very positively. And HFCL as well. That stock, in fact, is doing very well in this morning on rather large volumes. So big move is what we're seeing on that name as well. What's coming for some profit taking? Micloid Russell, the stock is up more than 20%, I think, in the last 10 sessions. That one's down a little bit, and it's falling on decent volumes as well. So that's coming for some profit taking. Jacob, which saw a big move yesterday, that as well is coming for some profit taking, as is the case with ITI. That's another name that's coming for some profit taking. Anantaraj ended lower because of the QIP, which was priced at a discount, as we normally see. Now, in fact, that stock is bouncing back a little bit, up 1.5%. But the markets, as flat as can be, the Nifty Bank is down 100 points.
Okay, all right. I think we are just kicking off the session. Absolutely flat, right? I mean, even keel. 3-point change on the Nifty. 25,045 is where we are at this point in time. By the way, I don't know if you can pull up some of these silver ETFs, right? Silver Bees is the #1 volume traded ticker coming up on my screen on the NSE. It's up 2.5%. So 155 on Silver Bees. And many of these are jumping up on quite nicely, 3-4%. And there are a bunch which are listed out there, which are doing very, very well. Not these. I mean, you've got to look at the financial instruments. All right, Prestige is up 6%. I think we mentioned all of these. Oro, Lupin, they're all up. Vari is up about 4% as well. There is, it's not a bad-looking screen at all. At least as far as the broader market is concerned. 1,300 up and about 1,040 stocks which are lower at this point in time. The reversals are basically just off what big moves from yesterday. Imco Electronics, 1% lower, was a massive mover yesterday. Salzer, huge volumes, around 5%, was a big mover yesterday. Bluestone was on Hormuz's list earlier today. Big move yesterday, reversing a little bit. And of course, RBL, which went up 5%, is down about 1.5% as well. So that's it. Otherwise, it's not a bad-looking screen. Manish Gundwani is with us, head of equity at Bandhan AMC. Manish, great to have you with us here. Appreciate your time. You know, we had one. It's like a round trip. Came up to these levels earlier, then came back down. We are back again, knocking at 25,100, 25,200 yesterday. So the question is there enough in the tank for us to move ahead? And this is a time, Manish, where global equities, global markets, etc., are making new all-time highs. Even a geography like Europe, unloved, underowned, breaking out. Other Asian markets, US, of course. What's your sense, Manish?
I think we are going through a fairly healthy correction, just like October 21 to March 23. I think India seems to be a different phase versus emerging markets. We first outperformed, and this year we kind of giving away that outperformance to a certain extent. But I think the structural underpinning of this bull market remains intact, which is what is now being called the debasement trade globally, that most of the developed countries have very high government debt, because of which they are running negative real rates in the case of something like Japan. And I think the broad expectation is US, Europe will kind of follow. We are seeing fiscal deficits remain very high, even when the economies are doing well. So in US, you are seeing a fiscal deficit, which normally shouldn't happen in a normal economy. The debt to GDP of most developed countries is more than 100% to GDP, which is typically a red flag. So I think when you see gold, when you see silver, when you see Bitcoin, I think risk assets have good momentum, because eventually people are reading into the situation that kind of money printing, if you're cynical, that's the phrase, that money printing will eventually happen in US, Europe, and continue to happen in Japan.
So how long, Manish, hi, morning, Rima here, how long will this period of consolidation continue for a market? It's been over a year. Does it extend, say, for 6 more months till a tariff comes and then we have a tactical bounce? Because there are some comparisons, I mean, not comparisons, it's not the right word, but, some have also referred to India's lost decade. And at that time, the returns, the CAGR returns were very, very modest, low single digits. I mean, is there a possibility that this consolidation just extends for 2, 3, 4 years?
I doubt it, because, as I said, the structural underpinning of this bull market is very loose monetary policy by most of the developed countries where most of the capital markets and economic growth resides. So I do think that, if you see the last 3-5 year returns of large cap, but more in the mid and small cap space, most of the funds have done, 20, 30% CAGR. We can't be that greedy that we expect every year those kind of returns will continue. So to me, this is just that kind of consolidation phase. How long it will last, I think market time is obviously very difficult, but I do think difficult to expect very big returns over next 1 or 2 quarters, not because of anything fundamental. It's just that the supply of paper is so high that it is very difficult to absorb that supply and still create big return. That is my gut feel. But from a 3-5 year perspective, I am very confident that we will have, I think the large cap may do something close to nominal GDP, but I do think a good stock picking fund should be able to deliver materially above that, because I do think liquidity will be healthy, and when liquidity is healthy, the broader market tends to outperform the large cap index. So I am not of this secular stagnation kind of view for India. I just think that we made excess returns from 2023 and 24 calendar years, and we're kind of having to live with a bit of low return for 1 to 1.5 years, and then we will have the structural uptrend continuing.
All right. Hi, Manish. Good to see you. When, I recall in one of our conversations, you were talking about there's a decent risk reward on metals. And China as well, you were calling out probably that, they're based out and things could recover. Both those two have worked. The Chinese markets have actually outperformed the Indian markets in the last 1 year or so. And metals have held their ground, even amidst the market volatility. What's your view from here on? Do you think there is still value with regard to metals? China seems to be going for that anti-involution, which in turn will make them reduce production. And India's got their safeguard duties to protect the domestic industry. Bodes well or bulk in the price?
No, I'm quite positive on metals, although you have to be a bit nimble around this sector because things change very fast. But 2-3 things, right? I mean, first is, as I said, the structural underpinning of this market is liquidity creation by monetary policy. And if dollar weakens, for example, it typically helps all commodities. So if you divide metals into non-ferrous and ferrous, I think ferrous is more a protection trade versus the anti-involution trade, as you said. That's a different trade. I like more the non-ferrous part because if you see aluminum, most of a big cost is electricity. And we all know globally electricity is in short supply given the AI capex that is happening. So even though I don't think global growth is going to be great, I don't think China is ever going to grow back at the way it used to. So I'm not so bullish on global growth, which is typically one reason to buy commodities. But I think the monetary printing of money, along with the fact that some of the cost push in these commodities is going to be healthy. And finally, look, I mean, you can only buy gold till a certain level. I think that liquidity will go to commodities and equities finally.
Yeah. Point taken. By the way, the market's picked up, right? 55 points, 60 points, 25,100 is back on the table after yesterday's sell-off. Manish, I was just looking at, we were talking about, you said debasement trade, right? And it's absolutely right. It's just, we all I think post GFC, gold was supposed to do this and that, and there were so many views and they were all right. It's just that maybe they were just ahead of the calls were, and you can never time these things, right?
Yeah.
But it was always clear for 15 years, but I guess no one believed it because, and when prices move, then you start to believe it, as it is with so many things. But what's the view now, Manish? I mean, I know you're an equity man, but if I were to ask you to comment, I'm specifically on gold and silver prices from here.
No, I think you should have it in the portfolio. My view is that in this debasement trade, there are various risk assets, right? You have gold, silver, you have Bitcoin, you have emerging market equities, you have Indian equities. I think you should just own a basket of everything because nothing is cheap. Everything has done well in the last 3-4 years broadly. But the simple point is that we've not seen government debt to GDP at a global level at this level. Like more than 100% is the norm now. And you see a place like Japan, the new prime minister is still talking of tax cuts and fiscal aggression. It's quite ridiculous to my mind. How much money can you print? But that is the way things are going. And in a weird way, it is risky not to be risky in that sense for asset allocation. So I do think you should have some proportion of gold, silver. Now, obviously, how much of equity, how much of gold, how much of silver is everyone's risk profile fit. But I think you should have, although it's done well, but it is when you see the fundamentals of the kind of money printing that needs to happen to service this government debt, we should have some hedge against that.
At an AMC level, you all have been anchor investors in many of these recent IPOs. I think LG Electronics also, I saw your name. Before that, Urban Company, that was a big one. and even in some of the smaller ones like a Pace Digitech or an Anand Rathi. So participating in, across the board, what is your view on what we're seeing in the IPO market?
So we don't have a black or white view saying IPOs are bad or IPOs are good. I think we evaluate each IPO on its own merit. And obviously, we also have different fund managers who have different thought process. We don't believe in having one thought process across the house. So we look at each IPO on its own merit, and we just, based on fund manager view, if we like it fundamentally, we don't really worry about whether it's IPO or not. We just see it as another stock to consider. So yeah, we're pretty open to new ideas in that sense.
No, absolutely. New ideas in that sense. One other thing which is done very well. Actually, money has gone into two things. We were talking about precious commodities. The other one, it is into US stocks, and in US stocks has gone into all these new themes, newer themes. AI and data centers, and now of course things like quantum, etc., nuclear. Very little by way of plays here, right, Manish? You've looked. Have you found any?
Yeah, I think there are a couple of plays on data sovereignty and hyperscaler exposure, not very big. But yes, I think we should put in effort to see how that wave is going to impact India. Honestly, I do worry about AI, the kind of job impact it will have. No one knows what's going to happen for sure, but there are some who believe that the job losses will be very acute before new jobs get created. See, typically any new technology, when it comes, people get scared about job losses, but eventually the net job creation is positive because it creates different types of jobs. Now with AI, given the scale of this technology, there are fears that the job losses will first be so acute that it will impact countries like India. I do worry about that. It's a tail risk to my mind. I still believe generally technology is good for job creation, but you have to keep your mind open, right? I mean, we don't know how it will play out. But yes, on the positive side, if you want to play this AI capex, the data center capex, I think, again, it won't be available in the large cap space. Most of it is available in the small cap space. But yeah, there are a few plays out there.
Just for, if you can point us in the right direction, Manish.
I will not be able
not as a this thing to buy, but I mean something you've looked at, and of course make it clear that people should consult their financial advisors, do their own research, etc., before they do anything. But in that sense,
so, Prashant, I feel that when an economy goes from 500 billion to let's say 4 trillion, you can afford not to be in high tech. But if we aspire to go from 4 trillion to 10 trillion, we need to own some tech ourselves. So we will need a bit of protection or let's say sovereignty around some of these technologies. You must be following that, for example, one of the enterprise software suites the government is pushing very hard. At the same, with the same logic, I do think that when we are hosting data with these global hyperscalers like AWS, Google Cloud, etc., there is a bit of risk you're taking, right? I mean, because ultimately, even if the data center is in India, but it's a US corporate, that data is in one sense available to the US government if they want it. Now, that kind of, for 95% of data, that won't matter. But for 5% of data, like defense or academics and all, I think that will obviously be an issue. And then the only way out then is to create some domestic champions in hyperscalers. And I think, see, nothing is sure, but that is a hypothesis we have. So I think it's good to have some exposure to those kind of plays.
Manish, one word answer since we're out of time. And this is for those who want to, invest in a thematic or a sectoral, a fund, for instance. Which is the sector you're most bullish on and which sector will you avoid completely?
So I like this theme called these innovation funds, which have come up recently because, to put it in a nutshell, these are the NASDAQ equivalents of the US markets. And we see that over 30, 40 years, the NASDAQ has obviously outperformed S&P 500. Because as the economy develops, the knowledge-based sectors become larger and larger part of the ecosystem. So I do think innovation is a good theme to look at.
Yeah, absolutely. That covers a fair bit, right? I hope that fund will touch upon and do some of what we're talking about, maybe a better way to get exposure. Thank you very much for joining us, Manish. Appreciate your time here on CNBC. All right, we'll talk about Senco Gold. Mangalam is standing by. I think there was that second quarter update. Mangalam, over to you.
Stock is lower in today's trading session, lower by about 2.5%, because the street is clearly disappointed after seeing what Titan has done, after seeing what Kalyan has done. Street was thinking that maybe on a lower base and because of its higher exposure to West Bengal, where the festive season started earlier, they would do a lot better. But turns out, no, it's 6.5% growth that the company has reported, and that the company attributes to higher gold prices, a very high base, and unseasonal or, high rains along with flood-like conditions in parts of Kolkata and West Bengal to the weakness in their overall performance. And that's something that the street is disappointed by. Though for them as well, because of higher gold prices, diamonds have grown at around 12% in terms of value. But remember, that accounts for a lot smaller share in their overall portfolio as compared to, say, someone like a Kalyan or Titan. Importantly, they've added about 5 stores, and they are sanguine about the next couple of quarters, where they believe that they can go ahead and do about 18 to 20% growth, which is not a big material uptick from the first half of this year, where the company has grown about 17.8%. So to that extent, management commentary on outperformance beyond what it's already reported would be crucial, especially at a time when the larger peers are doing a lot better.
Thank you very much for that. Let's go across now to Ria for Lupin.
Well, yes, Lupin is around 3% higher after they've announced plans to build a manufacturing facility in Florida in the US. Now, the company has said that this project reflects the company's long-standing commitment to US patients and the healthcare system as well. And the new site is going to expand their US-based pharmaceutical company to produce critical respiratory medicines. Now, Lupin is going to invest around $250 million as a part of this investment over the next 5 years. And this investment will be on 5 acres of land. And further, they've also said that the facility will have the capacity to produce over 25 key respiratory drugs, including albuterol inhalers for asthma patients. Now, this initiative, the company has said, aims to strengthen domestic manufacturing, diversify their supply chains, as well as enhance medicine security. And the project is also expected to create more than 200 long-term skill jobs in the region by 2030. And lastly, they've also said that Lupin is going to receive tax incentives from the state of Florida for this. And on the back of this, the stock is higher by around 3%.
Okay, all right. Lupin, 3.5% higher. Ria, thank you very much for that. Well, we're talking about, precious metals, gold, silver with equity people. So let's talk about precious metals with precious metals people. And our next discussion is exactly that. Varghese Alukas is Managing Director at Joyce Alukas. And we have Dilip Narayanan, Head Treasury and Banking at Malabar Group of Companies. Gentlemen, great to have both of you here. Appreciate your time, gentlemen. Prashant this side. Mr. Alukas, if we can start with you, with this absolutely stunning move in gold prices internationally and here, naturally, could you give us a sense now, because the quarter has ended, all right, and that's the big 3 talking points which are coming up on your screen right now. But the thrust basically is this, Mr. Alukas.
Yeah,
gold jewelry. Are people buying gold jewelry at these very high prices? And if you can give us a sense of what the second quarter number, that is September ended quarter, looks like.
Yeah, good morning. So we are feeling the higher price of the gold price from last 6 months. Even today, the gold price has been a record selling price around 11,380 rupees per gram for 22 karat jewelry. And last 2 weeks, we see that there is, due to the festival season and the Diwali sales which is going to come up, and then the Dasara and Gandhi Jayanti holidays, there have been uplift in buying from the customers who have been coming to the jewelry, and the sentiment is high that if the gold prices keep on going up, people are now coming back to jewelry to buy the jewelry. And last quarter, we have been recorded at 20% higher in the sales. So coming month is the Dhanteras and Diwali season, which Indian customers always buy jewelry, and it's a sentiment that every Indian household buy jewelry, not only as a style statement, even in as the investment they buy. So we are seeing a good sentiment to buy more jewelry in coming Diwali days.
Mr. Alukas, sorry, you're saying July to September has seen 20% growth in sales?
Yeah, in the sales.
Right. That is
higher gold prices.
Right. That is value-wise, right? Value-wise.
Value-wise. And in volume-wise, both are, most of them are having a dip in 20% in same way.
Dip of 20?
Yeah.
So volumes are down 20%, and the value is up 20%.
Yeah.
That's a nice, neat headline you've given us, Mr.
Because the volume has gone down.
Yeah, obviously, because I mean,
it's the revenue and the higher prices.
Yes, Mr. Narayanan, come in here. Is that your experience as well?
Well, first of all, thank you for calling me for this interesting discussion. Mr. Varghese is kind of right on what he's mentioning, but I can see, I was mentioning about this demand a couple of weeks before, at least 3-4 weeks before in one of our panel discussions, that the pent-up demand, which the customers had not been buying for some time, has started now. There is panic buying also happening. There is festive season buying happening. There is also a sentimental fear which has gone into the customer. That buying is also happening. So fundamentals are all kept aside, and it's all now sentimental. And then that is this kind of buying pressure we've not been seeing for some time now. And globally, it's not only in India. Globally, there is huge demand. The sovereign countries, the central banks are purchasing. Each and every country, reserves are going up in gold. So yeah, this is the right time to be to invest in gold. And as I always mention, the trust on gold is increasing day by day.
Mr. Narayanan, just sorry, you said you used the word panic buying.
The reason why I mentioned that word is because there is market the market saying that the price would still go up more, and then you would see around 5,000 levels touching, which is technically technical analysis also has their own reasons to say that. Personally, if you ask me, it's completely my personal my personal opinion on the yellow metal is that it is on a bull run, and I won't be surprised that if it again jumps another $200-300 from here while we speak, and we're going to definitely see a good run. There is business. Apart from that, very interesting part is that investment bars are also been now in good demand, which is not normally. It takes the backseat in India as compared to any other country. But now you can see the investment bars also performing well.
My next question is actually what kind of value growth will we see over the next 2 to 3 years? Mr. Varghese, as you said, right, so far value growth of 20% is sustaining because of the surge in the price of gold. Now laying out a scenario, say in the next 2 years, gold prices don't go up. It's hard to imagine gold prices going up 40% every year. If they stay at these elevated levels and volumes continue to remain muted, it's hard to imagine people, spending so much with gold prices at, 1,24,000 for 10 grams of gold. What could be the kind of value growth? Can you sustain then value growth at 20%, say 2 to 3 years? What are you internally working with? Mr. Varghese?
Yeah. So, as we said, the gold price has been in record levels, as Mr. Narayan said. From the 4,000 levels, it may again go up to 5,000 levels, is what the market say. So, in that case, the value of gold price will be seen in the revenue where there can be again 5 to 10% increase in this case of gold price going up. But we see the volumes are a little bit going down, but now most of the jewelry have been made in a lighter way and in a different way of price handling. So we still feel that the sales can be brought up with the lighter weight jewelry to make up the level of the revenue we have. But the gold price, again, if it is increased, we again can say 5 to 10% can be increased, but we don't know where the prices, because every 1 or 2 months, it may still go up to 5,000 levels. So maybe 5 to 10% again can be increased in 2-3 years.
All right, it makes the inventory hedging, question very, very relevant then. Mr. Alukas, how are you all managing that? What proportion of your sales are hedged?
So we have been buying in a fixed way, like as we are a private company. So we buy on spot, and we see last 4-5 years where the gold price was in 2000 levels, which has come up to 4,000, 4,035. So all the inventory prices have been going up for last 3-4 years. So we are really seeing the profit percentage and a higher valuation in our books.
Dilip, same question to you. Do you think, at a company level, the industry level, may need to, let's assume gold prices don't go up to 5,000, right? If they just stay as it is, what would be the volume growth that you anticipate going forward once this festive season comes to an end? It's already down 20%, but going forward, what would the what would the sales look like, assuming gold prices stay where they are, and therefore the value growth for the industry for the next 2 years?
I think it would remain the same at around 10 to 15%. And the reason why I'm telling this again is that I would repeat my same statement that this demand is not seen for many years. This kind of demand, this doesn't look like a festive season demand. It is also people gathering gold as a safe haven. So and this if price keeps going up, surging up, the demand will keep coming up again and again, and you might end up with a very good sale for this entire financial year.
Mr. Narayan, when you say this does not look like festive sales, you're talking about feedback from customers, retail, normal people.
The normal people are buying. So again, I'm telling you that apart from normal people, there are investors who are got into the market. So that is a sign of real demand which is coming into gold, or I would say that added trust which is coming into gold, which was anyways there.
Yeah, let me ask you this, as Mr. Alukas also told us, volume is down 20%, right? So,
yeah.
Mr. Narayan, what percentage of your this move that we've seen? Gold prices were $3,000 in March this year; they're now $4,000, right? What percentage of this move is investment led in India? I'm saying not globally, but what you're seeing at your end. You said demand for bars, etc., is also rising.
It's too early to calculate a percentage of the growth which is
roughly
there in investment bar as of now, but definitely from what it was earlier, there is a jump of almost 5 to 10% at this point of time. But then you have to wait and see how the numbers increase as the days pass by, because now Dhanteras is is the upcoming festive, and then the Diwali, and then there are a lot other festivals also. There is a year-end Christmas coming up, so you might have to wait for another 1 month or two to see how this investment bar demand, whether it's going to sustain or not. But for the kind of purchase which is happening, it looks like that this is going to sustain.
And for Malabar as well, volumes are down 20% approximately in the ballpark in Q2?
I would not want to comment on that, because I would check on the numbers before I would comment.
Okay. Mr. Varghese, would you have a number? What percentage, according to you, if you have to estimate, would come for investment purposes? Any number?
We're not still taking the numbers as of now.
Sure. All right. And do we know the rate at which the unorganized market has grown? If organized has grown 20% value-wise, unorganized would be at?
Yes, organized retail are been coming up in the Indian industry. Most of the jewelers are coming to the now organized way.
Okay. All right, gentlemen, appreciate you joining in. Thanks a lot for giving us your take. And it spells good times, I think, for all gold buyers. So wishing you all a good festive season as well. For the timing, we slip into a short break. On the other side of the break, we'll have the management of Rubicon Research, whose IPO opens today. We'll have Mr. Parag Sancheti, who will be joining in. Welcome back, Phil. The markets have flattened out a little bit. We had danced way closer to around the 25,100 odd mark, but now from the top, we've seen some kind of profit taking. The good news, though, is that the breadth of the market is still in favor of the number of stocks that are advancing. So that's good news. But let's focus on the new IPO. Pharmaceuticals company Rubicon Research's 1,377 crore rupee IPO opens today. It comprises of a mix of fresh issue of equity shares that's worth around 500 crores and an offer for sale of around 878 crore rupees. We're now joined by Mr. Parag Sancheti, the Executive Director and CEO at Rubicon Research. Hi, Mr. Sancheti. Good morning. Thanks a lot for joining in and welcome to the stock markets. Well, let's get a couple of details out of the way first. If I look at your issue, there's around 500 crores of fresh issue. And that will be used to repay a debt, I think, in the vicinity of around 300 crores or thereabouts. So just confirm that number. What will this money be used for? And in terms of debt repayment, could you quantify the interest savings?
Yeah, so thanks for having me on the show. And obviously, indeed, exciting times for the company as we go public. Yeah, the 500 crores which we are raising is primary, would be going primarily towards debt repayment and then partially towards inorganic growth opportunities. We currently, if you look at the debt is around 400 crores plus in the books. So, you could, considering estimate, we don't want to guide exactly to the number, but I think we are repaying around 300 crores of debt. So that would be the kind of interest rate savings which will be following through to the bottom line.
So you become debt-free post this?
We'll have debt for the working capital, but otherwise majority of the debt will be.
Back of an envelope calculation would say 310 crores, approximately 10% saving. So, that should be in the vicinity of around 32 crores or thereabouts. That would be a fair estimate, right, of interest saving?
Yeah.
All right. And the inorganic growth that you're talking about, that will be, in the vicinity of around 150 to 190 crores, the amount you'll want to spend?
Yes.
And typically in your business, what kind of sales, if I look at the sales upon market cap, what should be the rough estimate? If you're looking at an acquisition size, say, of around 150 crores, what should the revenue potential of that company be? A very rough estimate for your industry.
Yeah, so I wouldn't do it because if you see the history of Rubicon, I think we've never done acquisition just for the size or the revenue of the company. So we've done 5 acquisitions in the last 5 years, and all of them we have kind of done it for the capabilities. So I wouldn't say the sales is a good proxy or how we are going to look at doing inorganic stuff. We'll follow the same discipline we've been following to get capabilities and then bolt on that. And that has kind of disproportionately paid for us in the last 4 or 5 years.
Got that. So that explains how you're planning to utilize all the funds that you're raising via the IPO, the fresh issue for the acquisitions and paring down the debt. Parag, morning, this is Rima here. Just give us a quick overview about the company. How are you different from the other players? And also, almost 97% of your revenues, are exported to the US. Are you going to be impacted by this 100% tariff on branded and patented pharmaceuticals, imports on that starting 1st of October?
Okay. So I'll just give you some brief of the company and then I'll dive into the question on the tariffs and how we look at the US business. So I think we're a very fast-growing specialty pharmaceutical company with a portfolio of products that includes both specialty and drug device combinations. We have 3 manufacturing sites in India. We have 2 R&D sites, one here in India and one in Canada. If you look at, I think, just the key business highlights for us has been, I think we've been the fastest growing Indian pharmaceutical company as compared to 6 Indian and 4 globally listed peers by Frost & Sullivan. R&D is a big focus, and R&D focus coupled with the amount of money we spend more than average of the industry on R&D, I think has led to a very, very robust pipeline of products coming in. If you look at, as on 30th June, we had 16 specialty products which have no competition or max 1 competition. We have 4 drug device combination products which are approved in the US. So I think this, if you just look at these highlights, talk about the R&D, product selection, and our execution rigor, which we have built the company with. So if you look at, as compared to any of our other competitors, you look at all our metrics like commercialization rate, 86%, our ROE around 29%, ROC around 26%.
Yeah, Parag, we have those numbers are there. Morning, Prashant here. What is when you say specialty? What are specialty products? How do you define them?
So we define it in a very, very economic term when I think people have struggled to put it as dosage form. So we say if we have one or less competitor for at least 1 year from the time we launch, we call that a specialty because that gives us pricing power and sustainability of the pricing power.
Are you, is the way you operate, is that like a CDMO, a CRDMO?
No. We are a product development company with our own front-end marketing in the US. We sell both generics and branded products.
So it's not as if big companies come to you and say, well, we want you to make this or...
No.
Okay.
We are end-to-end product development, manufacturing and selling company.
And all of this, all of the manufacturing happens in India?
Some majority happens in India, but we do also have CMO sites in Europe and the US.
Are you planning to expand your footprint to the US? And just to complete that point about any impact from the Trump tariffs.
So I think the generics I would not touch base because that's, I think, quite a settled matter.
Oh, for you?
For us. And if we come to, I think the branded, we have 3 branded products in the United States. One which gets manufactured in the US, 2 we manufacture here and send it. Obviously, we have already built-in plans which are there mitigated to ensure that there's not going to be no impact on the tariffs on those products too.
Okay, all right, Parag, help us out with a couple of other factors. If I look at your margins, they have improved from early teens, that's around 10-11%, to close to around 20%, in the last few years. I know that you will not give us a fixed guidance, but the margins that you're doing, is it sustainable? Point number 1. And point number 2 is on pricing. The industry on the whole has seen pricing erosion to the tune of roughly 6 to around 8%. However, you have gone ahead and you have managed to take price hikes as well. So please explain this to us, margins and pricing.
Yeah, so I'll first explain the price hike part of it. I think it's not price hike. I think what the Frost & Sullivan report says is how is our portfolio comparing across the industry versus the other portfolio, other listed or unlisted companies who are operating in the US. In that case, the way our strategy on sales has been, I think for the same portfolio of products, what prices we had in 2022 in 2025, we have seen an 8%, as per Frost & Sullivan, we have seen an 8% appreciation, whereas the industry has seen around a 5% depreciation on the pricing. So I think that talks about the way we have selected the products and how we execute market share or sales strategy in the United States. Now coming, I think, margins part of it, I think the margins definitely will sustain at the levels which are there, which if you look at our history in the 23-24, obviously we've spent disproportionately on R&D to ensure that we have a very, very robust product pipeline, which allows us to kind of build a very, very solid business in the United States and other parts of the world. So I think that owing to very high R&D spend, I think we've been able to, we've kind of by design had margins which were lesser. But I think the margins which you're seeing right now is something which will definitely sustain and will improve. We have more levers to improve that beyond that also.
All right. Prashant, I briefly asked you about specialty. How do you define it? What is the specialty contribution as a percentage of your mix? If you could help us out with that.
The matrix we give track for that is, I think, as of 30th June, 33% of our gross profit came from specialty, which constituted 16 products currently.
And as a percentage of sales?
No, we don't give that, but I think you can see the margin profile for the company and kind of back calculate on that.
Okay, all right, Parag, you've given us a sense in terms of the business. We'll want to understand more. It looks like an interesting business. Wish you well with the IPO, and we look forward to chatting up with you on the listing as well. Thanks a lot for joining in.
Thanks a lot. Thanks for having me on the show.
All right, and as we were having that discussion with Parag, the markets actually have moved to the low point of the day. So that entire bounce that we saw, that's got sold into. And now the Nifty trading mildly in the red. Slip into a short break. A good time for a technical check. Shilpa Raut or Prabhudas Radad will be joining in.
Welcome back. For the markets, it's flattish. The Nifty is at 25,050, but we've come off in the last 1 hour. Shilpa Raut, Senior Analyst Derivative at Prabhudas Leeladhar, is now joining in. Shilpa, your thoughts on the first hour?
Good morning, Nigel, Prashant and Reema, and thank you for having me on the show. Talking about the indices sector, we know that there's a resistance at around 25,150 to 25,200 on immediate basis, and support also lies at 25,000 mark. So any declines towards 25,000 should be levels to buy. Keep a stop loss of 24,950 and stay long. Talking about Bank Nifty, any declines towards 55,700 to 500 zone should be a buying opportunity, and one can again expect 56,300 levels for Bank Nifty.
Okay, all right. Hi, Shilpa. Always good to have you on the show. What about individual stocks? What's on your radar?
Nigel, I have two buys. The first one would be a buy in Max Health. Pharma sector is doing good, and Max Health has a good support at around 1130 zones. So that should be a stop loss, and look for targets of 1180 to 1200 levels. The other one would be a buy in BSE. Again, the capital market stocks are doing good. M6, BSE, they're all looking good. But BSE has a good support at 2220 zones. So that should be the stop loss, and look for targets of 2300 zones and above for intraday basis.
Oh. Thank you very much for that. Let's talk about stock sectors. Vivek is now joining in. Vivek, on Pharma.
That's right. Well, that's right. You know, the Nifty Pharma Index is one of the top gainers today, and all of the generic Indian pharma companies are the ones that are doing quite well. Most of the stocks are up anywhere between 2 to 5%. Names like Zydus, Lupin, Aurobindo, Dr. Reddy, all of these names. So what has actually transpired overnight is that, remember, Indian pharma, especially the generic names, were suffering from an overhang, given the fact that there were various reports coming in from the USA saying that generic pharmaceuticals may be under the umbrella of Section 232 of tariff imposition. However, what WSJ, which is the Wall Street, has reported overnight is that they are saying that Donald Trump may spare imported generic pharma products from tariffs. In fact, they have quoted the White House spokesperson Kush Patel, and he has said that the administration is not actively discussing imposition of Section 232 tariffs against generic pharmaceuticals. Now, WSJ has gone ahead and further said that the decision not to impose tariffs on generics represents a major scale back of Commerce Department's investigations into pharmaceuticals. They also say that, and they've quoted an earlier Federal Register notice saying that the investigation would target both generic as well as non-generic drug products. Given the fact that this particular overhang, at least for the time being, appears to have lifted, all of the pharma stocks today are doing quite well in the session.
Okay, thanks very much, Vivek, for that. So pharma, perhaps flavor of the day today, 3.5%, 4%, Aurobindo there as well. Well, on to a CNBC-TV18 exclusive. Exactly a year after Noel Tata took charge as Tata Trust's chairman, a fresh power battle has erupted involving key trustees. With government intervention underway, hopes are rising for a resolution in this high-stakes corporate clash. My colleague Shireen Bhan filed this report.
There is a fresh battle brewing at the House of Tatas. Now, the rift has now reached the corridors of power in New Delhi. CNBC-TV18 has accessed both sides of the story. Last night, Noel Tata, the chairman of Tata Trust, N. Chandrasekaran, the chairman of Tata Sons, met with Home Minister Amit Shah and Finance Minister Nirmala Sitharaman in New Delhi. Tata Trust trustees Venu Srinivasan and Darius Khambata were also part of that meeting. Interestingly, Khambata is being accused of being part of the quartet of trustees allegedly trying to undermine Noel Tata. Now, this latest power struggle comes nearly a decade after that bitter public battle between the late Ratan Tata and the late Cyrus Mistry. Now, sources close to Noel Tata claim that there is a coup attempt by 4 trustees. Here are the trustees: Darius Khambata, Jayat Jahangir, Pramit Javeri and Meli Mistry. Now, sources close to Noel Tata allege that these trustees tried to emasculate the leadership of Noel Tata and wanted to function, quote-unquote, as a super board. But sources close to the Mistry quartet deny these allegations. They claim that the coup narrative is false and there is no attempt to usurp powers. The Mistry camp claims a false narrative is being painted to make them look, quote-unquote, like villains. According to sources, there are 3 key flashpoints that have triggered the current escalation of tensions. First is the fund infusion into Tata International. Now, Noel Tata is the chairman of Tata International, and an equity infusion was proposed to help tide over the losses in the company. The company is also saddled with a debt of around 2,000 crore rupees. Eventually, the infusion of 1,000 crore rupees by Tata Sons was cleared, but sources say that the matter, quote-unquote, remains unresolved. Now, another flashpoint is Noel Tata's idea to create a position of a deputy MD at Tata Sons. Sources close to the Mistry quarter say that the proposal also created differences of opinion between the Noel Tata Group and the Mistry quartet. And the third point of contention has to do with Mehli Mistry's appointment to the board of Tata Sons. Now, Mistry, a long-time associate of Ratan Tata, his appointment was opposed by Noel Tata, and sources say this also led to a further worsening of the relationships within the trustees. Now, sources tell us that all four trustees who are today being accused of acting against Noel Tata had in fact voted in favour of Noel Tata's appointment as chairman just last year. Remember, Noel Tata took charge exactly a year ago on the 10th of October after the demise of Ratan Tata. It must also be noted that the upcoming board meeting on the 10th of October is not going to consider any of these issues at hand. That meeting, we learn, is about the philanthropic activities of the trust, which is really at the heart of what the Tata Trusts do. So 1,000 crore rupees worth of philanthropic activities on the agenda on the October 10th board meeting, nothing to do with this current battle. Now, with the government getting involved, there are hopes of a de-escalation, and both sides will try, that's the hope, and arrive at some sort of a rapprochement to bring the public feud to an end. But we will have to wait to see.
Okay, there's some visuals, of course, also coming in. Prime Minister Modi meeting UK Prime Minister Keir Starmer in Mumbai. I think those visuals are coming in from, should be the Raj Bhavan in Mumbai earlier today. Both leaders, of course, meeting for the third time, actually, since Starmer became the Prime Minister in July of 2024. The first two meetings, of course, were held in the United Kingdom. So we'll see what this kind of sort of leads to. Prime Minister Starmer is on a 2-day trip to India. I think they will, of course, also be, after this, at the Global Fintech Fest, where Prime Minister Modi is expected to make a speech at about 1 o'clock this afternoon as well. So there is, of course, talks also taking place as far as the India-UK CEO Forum goes, and then maybe, discussions at the Global Fintech Fest, which is underway. Today is the last day, third day of that event, which is happening in BKC. So important partnership. And as I said, a third meeting since Prime Minister Starmer took over. Of course, those are visuals. More later. Well, just to sort of continue with that story as far as the Tata Group is concerned, 8 years ago in an interview to CNBC-TV18, the late Ratan Tata spoke about the role played by Tata Trusts in the functioning of the Tata Group. He was speaking with Suhail Seth on why the trust structure was created in the first place. We're going to play that out for you.
Mr. J.R.D. Tata often used to refer to Tatas as being the trustees of the people. The Tata family could have become tremendously wealthy by having distributorships, partnerships, etc. in the businesses. But most of the businesses, whether it was steel, whether it was power, or institutions, were set up as institutions for the country. So Jamshedji Tata could just as well have dedicated Tata Steel to the nation or dedicated Tata Power to the nation. They belong to the shareholders and to the people. Personal ownership and personal wealth happened when it happened, but was never the criteria for these companies to be established. So it was natural that he did leave his ownership to his two sons, and then his two sons, who had no children, left them in charitable trusts as beneficiaries of the companies that they held. So it was a refreshing change that gave way to ownership in an industry not being for the beneficial interest of A or B or C, but for the better good of humanity.
Okay, let's just take a quick commercial break here. We're going to be joined on the other side by Harshvardhan, Senior Advisor at Bain & Company, and Anil Gupta, Senior Vice President and Co-Group Head, Financial Sector Ratings. At ICRA, we talk about, the RBI measures to unshackle the banking system. Stay tuned. Welcome back. Let's talk about the banking space now. Two circulars from the Reserve Bank of India. On one, of course, on the expected credit loss provisioning norms effective FY28. The second one, of course, risk weight modification across asset classes. Let's take this forward with two experts in the field. Harshvardhan, a senior advisor at Bain & Company. Anil Gupta, senior vice president and co-group head, financial sector ratings at ICRA. Gentlemen, great to have both of you here. Harsh, good to have you back with us. We spoke that Friday, of course, on the day of the RBI, the MPC, that afternoon. So let's just take it one by one. On the ECL provisioning norms, the circular which has come through, it's gradual implementation, right? So negligible impact on capital ratios?
Yeah, for now. And I think even when the first discussion paper came on ECL a few years ago, RBI had clearly indicated that there will be a smooth glide path remember, this is not an incremental change. This is a paradigm shift. This is a very, very fundamental change, and I think the RBI is doing the right way, because if you do it in a jerky manner, then there would be a capital shock. So what effectively RBI is doing in the way it has approached it is to smoothen the impact on capital and on earning to be spread over a few years, so that the movement for the banks is going to be smoother. So that's how I see it.
Some upfront earnings impact? Harsh?
It will vary across banks, Prashant, and it depends really on what the current status of banks in terms of their standard asset provisioning. So there may be some impact on some banks, but there will be some banks on which there will be negligible impact. So this would vary somewhat across the banking sector, but I would say overall on impact on the banking sector, the way these norms have been described and the way the transition has been described would be somewhat muted.
Got that. Anil, your first thoughts on the ECL circular?
So our thoughts are basically no negative surprises. What we were more concerned was basically the floor or the regulatory floor, which will possibly come on stage 1, stage 2, and stage 3 assets. Will the regulatory floor be maybe a higher number, which could entail higher transition provisions? So largely the floors are not maybe something like prohibitive. They are maybe comfortable level, while they will still have an impact on the reported capital ratios, but the floor is okay. For example, like say the stage 1 floor has been kept at maybe 0.25 to 0.4% for most of the retail loans and maybe secured loans. So that is something which is a positive or no negative surprise, because banks generally have this 0.4% on the standard assets. Even for the stage 2, I think 5% or maybe 1.5% on home loans is fine, not a high number. Otherwise, it would have kicked in a higher ECL requirement.
So I mean, and ratings is a key criteria for all of this. No sort of extreme risks for corporates in the medium term.
So for the corporates, I think the proposed changes in the risk weight, which will be applicable, right, for the various rating categories, that will only be beneficial. So maybe in terms of provisioning because of ECL, no negative thing again. But from the risk weight perspective, that changes are beneficial because let's say even a AA rated loan will have a 20% risk weight as against 30% earlier, or a BBB rated loan will have a 75% risk weight as against 100% earlier. So it's beneficial for corporates.
On stage 3 to stage 2, and then after 60 days moving to stage 1, what's the current behavior like? Any sense on how many borrowers kind of fall back into NPAs again?
So the rollback rates will depend on the asset classes. Generally, we don't find too many corporate loans as of now in the stage 2 bucket. So maybe SMA 1 and SMA 2, which will be classified as stage 2 now. If you look at most of the banks, typically the stage 2 for corporate loans will be in the range of 0.2, 0.3%. Largely today, that stage 2 is more constituted by the retail loans, where the ECL provision will kick in. That could be a number anywhere between 2 to 5% across maybe banks of their loan book.
Got it. Anil, how are credit costs going to move according to you? Will there be some impact? Private versus PSU?
So credit cost in terms of maybe, see, what we can look at is we are there is FY26 and FY27. Banks can choose to make some kind of a provision, floating provision, contingent provision in a run up to the implementation on 1st April 2027.
Okay.
So one, you can either create those provisions and not have a one-time impact on your capital ratio on 1st April 2027. Or you can build up your capital and take a one-time knock on 1st April 2027. So one-time knock means maybe on a without any forbearance. So we do think that some banks will maybe create a provision in a run-up to 1st April 27, which could have some impact on the credit cost. But again, largely they have strong P&L which can take care of that floating provisions, contingent provisions. But maybe on 1st April, it will be a balance sheet entry most likely, where whatever is the ECL transition provision, that will be basically removed from your net worth or your core equity capital, rather than have an impact on a P&L, one-time impact on the P&L.
Okay. Harsh, on risk weights, right? What? So there's residential mortgages, as Anil mentioned, triple B rated corporates, commercial real estate. What stands out to you?
Yeah, so two areas. One is residential mortgages, but also MSMEs, where the definition has been widened. MSME that will be treated under retail category to group revenue of 500 crore. So those are the major ones. The triple B going to 75 is interesting because a large percentage of our Indian banking sector portfolio is in triple B. And I think that would actually have an impact on bringing down cost of credit to a large, sizable amount of companies if banks decide to pass that on, the lower capital requirement. But can I make a couple of comments on the previous point on the floor?
Sure. Go ahead, Harsh.
The floor is the important. See, look, the biggest change is going to happen in stage 2 because that's where the provisioning floor is 5%. And that is what varies across banks. You know, how much do you have in stage 2, sorry. My own view, Prashant, is that the stage 1 floor especially are a bit lower than what I would have expected. Essentially, RBI has kept it at where the current standard asset provisioning is, which means, although I don't think, given the general spread of portfolio of Indian banks, 0.4, 0.25 floor is adequate. So what might happen over a period of time as the system stabilizes, the floor on stage 1 might increase. That's my expectation as more data sort of starts coming in. I think this is also part of the RBI kind of providing a glide path, not creating a jerky movement into the expected credit loss based provisioning. And therefore, what will happen between now and then? I think the reduction in the risk weight is also part of that guide path because, as Anil was saying, that banks could actually do one or two things: raise additional capital or create additional provisioning buffer between now and 27 when it kicks in. So that at the bank level also the impact becomes a bit muted. So I think that's the way I see it.
No, very, very interesting points. Anil, you want to comment on the risk weight bit? What kind of stood out to you?
Yeah, I think favorable changes in the risk weight. Overall, basically one negative impact on capital because of ECL and maybe a positive impact on the capital because of risk weight, lower risk weights. Overall, it should be negative on the capital, though the impact will be muted because of these risk weight changes. But maybe few things on the risk weight changes which we found to be maybe interesting was maybe a 75% risk weight on a triple B rated loan, which has been brought down. But generally, we map long-term ratings and short-term ratings. So on a short-term scale, triple B rating category will typically map to A3, on which the risk weight has been kept at 100%, not 75. So if a same corporate is rated triple B on a long term and A3 on short term, so different risk weights will be applicable, 75 and 100. So maybe that's some clarity may be required in the final, maybe whenever regulations come. And one interesting thing which has come this time on the risk weight is the regulator has linked the risk weights based on the default rates of the various rating agencies. So if a rating agency has higher default rates, then the next category of the risk weight applies, or higher risk weight applies, just because the rating agency has a higher default rate. So this is, I think, a really interesting move. We have to see how this pans out, because again, here, this default rates, we will need a clarity that whether short-term default rates will apply or a long-term default rates will apply, because we publish 1-year default rates for 2 years, which is short-term, and 10 years, which is long-term. So which default rates will apply for calculating the risk weights? That is something which will wait for clarity in the final regulations.
In a way, rating agencies themselves being rated.
In fact, Chan, if I may quickly add, there is a increased scrutiny of rating agencies. There is a standardization of default. There is disclosure requirements on PDs, which was earlier not there for bank loans, it was there for bonds. So I think RBI has also addressed the governance issues around ECL, both at the level of the bank, but at the level of rating agencies as well.
Oh, very, very interesting. And I think these are points where we needed a little more time. We're coming to it at the end of our conversation. I have to sort of say thank you, but we'll sort of continue talking about this on other platforms. Thanks very much, Harsh and Anil, for joining us with that quick take on these two areas, the ECL and the risk weight circulars from the Reserve Bank of India. Well, it's a wrap on this edition of Bazar. Chartbusters up next. Stay with us.
Shares of Prestige Estates gain over 4% as the September quarter sales surge 50% to over 6,000 crore rupees, while collections rise 55%.
And Sathway Green Energy hits 10% upper circuit after reporting a solid set of numbers in the first quarter. The company's revenue rises nearly 4 times, while profit as well sees a multifold jump. The management says that they aspire to go at the current run rate, which means that they'll end the year at around 4,000 crores of revenues with margins in the vicinity of 15 to 16%.
Right, the pharmaceutical pack is gaining today, and in that there is an added advantage for Lupin, where it's announced a $250 million investment over the next 5 years to set up a manufacturing facility in Florida, the United States. They will have a capacity to produce over 25 respiratory drugs.
Senco Gold slips in trade as the record rally in gold and heavy rains in West Bengal take a toll on the company's September quarter. The management says it's confident of 18 to 20% revenue growth in FY26. Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam, and I think the indices should come to the top of the screen. They're trading in the green. They've been seesawing between the red as well as the green terrain for the time being, closer to around 25,100. I think, Mangalam, we have a job cut out on that front. Last couple of sessions, 25,200. That's where we're seeing some resistance. On the downside, though, the 24,900, I think that's the first support zone.
That's, extremely crucial. 24,900 at the lower level, 25,200 at the upper level. The important part is that today the broader markets are feeling a lot better than what they were yesterday. So we have the broader markets. The Midcap index comes up for you, up around 0.5%. We have an even Steven sort of move coming in on the advanced decline ratio. So those two lines come up for you. They're pretty much, intact, in line with each other. The crisscross lines are now crissing and crossing, perhaps kissing each other between the red and the green. But the pharmaceutical pack, that really stands out as a gainer today. We have the Strides Pharma stock, which is up 7%. We're seeing, among the top frontline names as well, it's, Dr. Reddy's, which is doing well. Divi's has been doing well for third day in a row. So all these counters doing extremely well and fairly well bid in today's session. But this is the week of the IPOs. We've had multiple listings, a lot of offers as well. And now, today, another one opens. We have the IPO of Canara Robeco opening in. Rajneesh Narula, who's the MD and CEO, joins us on the show right now in the studio. Thanks a lot, Mr. Narula, for joining us in the studio. Always a pleasure. And, it's a time when what is doing well in the market shows versus what the offers are. We've had all the new age companies. We've had some of the old brands as well looking to unlock value. And now we have, the cult of the equity markets in India, the SIP investments and all of that come in. In that regard, Canara Robeco, the first obvious question is, while the markets are rising and the cult of equity investing in the country rises, for wealth managers like yourselves, what are the market share drivers and what are the revenue drivers from here on, over and above the fees and expense ratio that you charge?
Well, thank you very much. Thank you for having me in the studio this morning. Very happy to be here. Great question indeed. For us to do well, quite frankly, the markets, the India story has to play out. And clearly, we're structurally very well positioned today, as you're aware. Despite some global headwinds we see, I think the kind of reforms that you've seen in the country are fantastic. The GST reform in particular, as well as RBI has also put out a set of reforms. All that's very good for the market. We believe in the India story. As long as the economy does well, I know the markets will do well and we will do well. For us to gain more market share, it means more penetration, getting more distribution feet out as well, and having stronger relationships with partners. But the most important factor is performance. For us, fund performance matters. As long as we perform well in relation to benchmarks and competition, we will do well.
All right. Hi, Mr. Narula, and thanks a lot for coming down to the studio. If you could give us a few details then, how do you see the revenue mix changing going ahead? And what kind of growth momentum should you be looking at? We're not asking you about the near term because obviously you're in that silent period and regulations don't permit you. But in the next 3 to 5 years, what are the strategic goals that you have for the company?
Well, we have been, for the last 5 years, one of the fastest growing asset managers in the country. That clearly remains a priority for us to keep moving ahead of the market. Clearly, in terms of revenue as well, we have a great equity mix. As you can see, 91% of our AUM is equity. So that gives us leverage. And of course, the bigger the size, the bigger the operating leverage in our business. As you know, we are a capital light entity, and hence capital for us basically goes towards creating talent as well as using it for infrastructure and technology.
All right. You said that you have to increase your penetration, you have to increase your distribution, and you have to obviously keep focusing on performance, etc. On all those parameters, if you could give us some sense, on the performance basis, where are you vis-a-vis everyone else in the industry? Are you in the top decile, the top quartile, or the top quintile, so to say? And at the same time, what is your distribution penetration strategy going to be, and how will that impact your margins?
Okay. For us, quite frankly, B30, for example, is an important measure. We have a 24% of our AUM coming from B30 as compared to the industry. The industry gets about 18% from B30. So clearly, we have an advantage there. Our penetration strategy revolves around Canara Bank as well. They have over close to 10,000 branches, so it helps us in terms of distribution footprint, and that also will give us better access to margins and yields.
Okay, all right. So Canara Bank as a percentage of your total mix, how much do they account for in terms of distribution?
Currently, it's about 8%.
Around 8%. All right. I'm just looking at your revenue breakup. There are basically two streams. One is the management fees and the advisory fees. Obviously, the advisory fees on a very low base has been growing. What's the typical revenue mix you're looking at?
Well, we'll continue to focus on the main business, which is the mutual fund operations, which is domestic. So a large proportion of our revenue will come from there. Okay. But we continue to grow the advisory piece as well.
Right. Now when we speak about the rise in the equity, there's also rise in competition, and big players have entered this market. I mean, you have BlackRock coming in, partnering with Jio. You know the distribution muscle, you know the strength, while everyone else will look to protect their turf as well and increase their penetration. In light of that, what would your strategy be? And would at that point, you have to pay a little more for talent, pay a little more for distribution, and could that impact your earnings?
Well, the fact that there are more players entering the industry means the industry has got a long runway here. So there's a lot of opportunity and growth in the industry that everyone sees. So clearly, that's a very good sign. The newer players, to my mind, they can get an initial head start depending on their brand. But post that, to build AUM, you need track record. In our industry, unlike others, you need to have a track record before you actually get money in. So for us, we already have built. We have our, all our schemes that are finished 10 years and above are actually performing higher than benchmarks. They beat the benchmarks as well on the equity side. So clearly, we have a head start there.
In terms of an AUM number, you'd like to put out a goal the next 3 years or so? An aspiration. It's not a guidance.
So it's forward-looking. I think we would be very happy with the same trajectory that we have today.
You've grown around 25-30% approximately in terms of AUM, so you'll look to maintain that.
Yes, absolutely.
That means doubling every 3 years. So in the 3 years later when we speak, it'll be closer to 2 lakh crores, a little more than that, I guess.
Well, God willing. Thank you.
God willing. All right. This is an important question that everyone would be having on their mind. Every time there is a large global partnership, how long does that partnership last, or what happens of that partnership is crucial as well. So what are the terms with Robeco like? At what point do they come up for renewal, renegotiation, or anything of that sort? Because we've seen multiple, there have been instances, BlackRock, for instance, as well. Earlier was DSP and now it's Geofin. So all these partnerships, how sustainable is this right now, and how fortified is your terms with Robeco?
Well, we're very fortunate, actually. We're fortunate that we have global partners that are extremely stable, long-term oriented, and we believe that focus will continue. We expect them to be long-term oriented as well.
And from a business standpoint, how do you think one should value these companies? Largely because when we started out, it was 1.5% to 2% of AUM should be the market cap. That was the rule of the thumb. Now that increased to 3%, 4%. You're offered anywhere between 4 to 5% of your current AUM projections as well. So what do you think is fundamentally, you guys obviously look at companies, you guys value companies. So from an AUM business standpoint, what do you think is a good ratio?
Well, it's an interesting question as well. You're right. Previously, the evaluation was based on AUM. That has changed. So as you're aware, we go through a book building process, which the BRLMs carry out. They discover price through the anchor book as well. So clearly, it's a market discovered price. And it's more focused towards PAT now. So it's a multiple of PAT in our business that's important.
27, 28 times trailing?
Yeah, as of now, yes.
As of now.
Okay, all right, Mr. Narula, we thank you for coming down to the studio and explaining your business model to us. Wish you all the best with regard to the IPO. And on listing, you're going to be back on our show giving us some more concrete details. But all the best.
And we'll squeeze you a lot more for the numbers that time around. So
thank you.
Stay tuned for that.
Thank you. Appreciate it. Thank you. Bye-bye.
All right. Have a good day ahead. For the time being, guys, what we'll do is we'll slip into a short break, come back, continue to focus on markets and stocks that are moving around.
PG Electroplast up 6% right now, and the other one which is doing well is Vodafone Idea. As the UK Prime Minister is currently in India, everyone's speculating on whether there would be some sort of relief or not coming by for Vodafone. That stock up around 2.5% has been bidding, or has been bid well in the last few trading sessions itself. But the stock of the moment, definitely PG Electroplast, up around 6.5%. We take a short break. In fact, no, before we do that, let's shift focus to the Global Fintech Fest. KV Kamath, the chairman of Jio Financial Services, spoke exclusively to CNBC-TV18 from the sidelines of the GFF. Ritu was in conversation with him, began by asking him about the recent regulatory changes announced by the RBI.
I look at it on a very broad frame, as it were. If I look at a few years back, what a bank could do and where we were at this point in time, for a variety of reasons, banks which were primarily in corporate lending, working capital and corporate loans, and also infrastructure credit. So one side of the book, more than 50% was these type of assets. The other side was retail assets. That has flipped, and particularly post-COVID, that has flipped in a very hard way, where you now have a majority of the assets retail, and then you have corporate. To me, what it meant was that banks were missing out on opportunities in an economy which is growing around, let me round out the number, at 7%. So in a 7% economy, the key driver is going to be your corporate side of the economy. And the banks were somehow getting left out of that sector for a variety of reasons, some of which have been now tried. There are other reasons which are more structural. For example, there's greater access to capital markets now, which till 5-7 years back, the pension industry, the long-term savings industry, the insurance industry, the MF industry was still growing. But now it's growing at a pace. So good corporates, large corporates can access that market directly. And so the banks, in a way where you could see in their capital adequacy was very flush, as it were. So I think this opens up equal opportunity in a way for banks. And to me, it is excellent news.
But, in terms of signaling from RBI, do you think this is a very different regulator than what we had a few years ago? And, is the signal that this is a more growth-friendly regulation, or as some in the industry have expressed concerns, some of the dilution of prudential, guardrails as well?
No, I don't agree with that second proposition up front. In my 55 years in business, I have not seen the RBI, not taking its eye off the ball. They're never ever. They are always very focused. So that is not an issue. In terms of various regulators, regulatory heads doing various things over a period of time. Again, when I look at things over time, and particularly from '96, when I was in a, I'd say, position where I could take a better look, regulation has always followed what is possible given the environment. So we must remember, sometimes we don't put it into context. We hit $500 billion as a GDP only in 2004. So the regulations that were appropriate for that period of time were in place during that point of time. That is, as we headed from $250 billion to $500 billion. And I think it took us 20 or 25 years. Regulations were appropriate. And we might have had views on that, but they were appropriate. And then growth started, growth momentum started. And we could see easing happening. So I would think that at each point in time, every 5 years, let us say, in RBI, I have seen an evolution in terms of how they look at what they need to do in the context of the overall economy, in a policy construct and a supervisory construct. So I think what they have done is appropriate, considering where we are
at the moment.
This moment.
Sir, M&E financing, how significant is it allowing banks to finance acquisitions? Because, what has really changed from RBI earlier not wanting to allow banks to do it to now, changing its stance on the matter?
We actually have to go back to answer this question many decades.
Yeah.
And, some of us, I think, are too young to have understood why this was not done. So there was a period of time when we thought acquisition by one company of another company typically is a hostile route. And that the bank should not be an instrument in doing that. So this was long back. So I think that has now been set right in current context, where everything is the market and everything goes through the marketplace. And in any case, if acquisition financing has to be done, there are other people providing private credit to do this, or you go through the capital market route and do this. So I would think, looking at the risks at that point in time, the way business was being done at that point in time, that was something that was not allowed. And now, in a completely different context, I believe the Reserve Bank has done the right thing to open it up, because it's an excellent avenue of business for banks.
Yeah, how much credit do you think all of these measures put together could really unlock? And more importantly, while this is an enabler for banks to lend more, is there real demand on the ground from corporates, given the deleveraging cycle we've seen and the global uncertainties?
There are two different things here.
Yeah.
Deleveraging, I think, is now a mindset issue with the Indian corporate.
Yeah.
They will not leverage themselves, by and large, the larger companies. I think at the MSME end, that will happen in due course. But we are talking of the mid to large corporates.
Yeah.
So it's not a question of deleveraging. This was for business purpose and acquisition.
Yeah.
And in most cases, these acquisitions are in a friendly mode.
Not hostile takeover.
So now you need to, it's not hostile, but you need to understand whether there are risks. What are the securities? What is the underlying value of those securities? All those, that analytical skill is required, and I'm sure banks will come up to speed on that. Now, your question was, is there demand? I'll say this, I'll not put a number to it, but every single, I would say, global entity that I talk to, of whatever type, if they are in the financial services business, so I'm not naming it, it's a bank, non-bank, investment bank, I'm saying every single entity in the financial services business globally, we're looking at India as a great place to come and set up a private credit business.
Okay.
Bringing in external funding and then providing this credit, which Indian banks were not allowed to do for the marketplace. So the curiosity that was there, the interest that was there, and the opportunity that they saw, to me means that it was a very large number that is being talked about.
All right, well, time to slip into a quick break. Come back, continue to focus on markets and stock-specific action. Stay tuned.
पड़े।
Welcome back. Well, the market's trading in the green. The Nifty is closer to around the 25,100 mark. Briefly, we went into the red, but it's recouped, most of those losses. And as you can see, even the Nifty Bank, that's the top of Mangalam, well, that one, in fact, has moved into the green. And the breadth of the market firmly in favor of the number of stocks advancing, then declining. So, Mangalam, we have done a bit. I think over to the team of
Over to the team of Trading Hour. Thank you so much for watching Chartbusters. Let's hold this market up until the team of Trading Hour comes on.
Hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Reema Tendulkar. Swift recovery in the markets is what we are witnessing. The Nifty is up 75 points. It is actually closer to the day's high as well. The high today was 25,128. We are at 25,124. Bank Nifty is also the one which is leading to the recovery that we are seeing. And the advanced decline ratio, that is the one to look at because we did see more declining stocks when we started the trade. But now it's somewhat somewhere on even grounds. Again, those lines are converging. So that index continues to be on our radar because for the last couple of trading sessions, there have been more declining stocks versus advancing stocks. Metal index doing well. There's Pharma, which is seeing higher gains as well. We'll discuss about that in greater detail. But all in all, it has been a decent day so far, post the recovery that we saw from the lows.
Indeed, and now quite a few sectors are doing well. IT has been strong since morning. Pharma has been doing well since morning. Autos, which opened in the red, are now almost flatlining. So you are seeing some green on the screen when it comes to, say, a company like an Eicher Motors. So that's up and about in trade. So quite a few, stocks are moving around, and the Nifty, as we speak, is now well above 25,100. So it's looking good. Let's get to the stocks then. Hormus is now putting the spotlight on the top movers in the market at 11 o'clock. Hormus.
Well, there are lots of movers in the broader markets, specific stocks. The lines are converging, but the Jindal Group stocks have gone only one way, and that is higher since the morning. You take a look at these stocks: Jindal Photo, Jindal Poly Investments, and Jindal Worldwide. All of them trading with gains, firstly trading with double-digit gains, and then trading with gains of anywhere between 12% to as high as 20%. Now, take a look at the volume as well. These are not stocks that are very frequently or commonly traded. Take a look at Jindal Photo. You see it's only 74,000 shares, but take a look at the 20-day average. It's only 1,200 shares. Jindal Poly, the 20-day average of 18,000 shares. We've already had 9.5 lakh shares traded in the first 2 hours of the trading session. Jindal Poly Investments as well, 1,500 shares, shares with the 20-day average. We had 3.5 lakh shares already. And Jindal Worldwide, over 60 lakh shares that have been traded compared to a 20-day average of 2.5 lakh shares. So strong gains on very strong volumes for all of these Jindal Group companies. PG Electroplast is featuring in the list of gainers today. The stock has cooled off slightly from the highs, but still holding on to gains of 5%. Stock is up in 5 out of the last 6 sessions. It's the intraday high is the biggest single day gain in the last 2 months, was up almost 8% at one point. We've had 84 lakh shares that have already been traded in the first 2 hours. The 20-day average is just 6 lakh shares for PG Electroplast, although the extent of the fall has been such that despite some recovery, the stock is still below all key moving averages, and the first important level on the upside is still far away, the 50 DMA, which is at 582, and the 100 DMA is even further away at 677, and the stock is down almost 50% already so far this year. And the last one on the list today is Garud Construction and Engineering, and this stock is reacting to an order win that it received last evening. The biggest single day gain that the stock has had since November of last year. Volumes are already at the highest level in 2 months. Over 1 crore shares have already been traded on this stock today. The 20-day average is just 4.5 lakh shares for Garud Constructions, and the stock has broken above and is sustaining above its 50-day moving average, which is at 194. So news flow driven name here is Garud Construction.
Okay, take that point. Thank you so much for joining us with all those names, some interesting movers in the broader markets. Let's talk about Prestige Estates now. That stock is buzzing in trade on the back of a good and strong quarter two update. The stock has come up from the highs, but it doesn't take away the fact that the sales saw strong growth, up 50% on a YOY basis in the quarter gone by. Volumes were up 47%, realizations grew by 8%, we had collections up 17%, and the first half of the year, the company saw launches of around 18.1 million square feet with a gross development value of 17,592 crore rupees. In their office segment, they say the occupancy remained healthy at 93.42%. They are looking at exit rentals at 820 crore rupees. Even for the retail segment, which is the mall segment, gross turnover was up 9% on a YOY basis at 624 crore rupees. Here, the exit rentals are estimated at 272 crore rupees. If we talk about the residential sales so far in the real estate universe and talk about how it compares with other companies, the likes of Keystone, Lodha and Sobha. The others, Keystone and Lodha, have seen high single-digit growth. Sobha has seen a decline. This is the sales value that I'm talking about. And this is the time when Prestige Estates has seen a 50% growth. It has seen a highest ever sales as well in the last fiscal in the real estate universe. So it continues to build on to that. We'll see what happens during the end of fiscal year. But yes, the comparison shows how Prestige Estates has been seeing strong growth versus the peers now.
And I think I saw one brokerage note that said that the company in the first half has achieved 70% of its full year target.
Yes.
I think they gave a band, but they've achieved 70% if you look at the midpoint of it.
Yes. That's been the case with Prestige mostly the last few fiscals as well. And most of the sales have come in also from existing inventory. So that says a lot about how they're not dependent on new launches.
Got that. Well explained. Thank you very much for that. We will slip into a very short break on that note. We'll come back with more. Stay tuned. Welcome back. You can see some important flashes on your screen that we've learned about PB Fintech likely to roll back some of the commission cuts. So renegotiations are on. This is a CNBC-TV18 exclusive. And Yash Shoins with what he's learned from his sources. Yash.
Well, it was just last week at the start of this week when letters had been sent from insurance companies to all distributors, including PB Fintech, intimating a cut in commission of as much as 18%. In the last few days, a few more incremental but very important developments have happened in that matter. What we've been given to understand from our sources is that teams from, of course, PB Fintech, the largest web aggregator and distributor, have reached out to various insurance companies, talking to them towards renegotiation of a rollback or a cut in the kind of commission cuts which had been allotted to Policy Bazar particularly. The message from Policy Bazar to insurers is that if commissions are cut or or reduced, then it could lead to a transfer of business towards companies which pay higher commissions or which do not cut commissions as far as sale of insurance policies are concerned. On the other side, we've been given to understand that insurance companies internally are also thinking about either entirely rolling back the commission cut to Policy Bazar or reducing it partially, reducing the cut partially is what we've been given to understand. These insurance companies, teams from insurance companies are also meeting teams from PB Fintech to renegotiate the commission cuts. And what we've been given to understand is that any rollback, entire or partial, in terms of commission cuts to Policy Bazar may be led by non-bank insurance, because the dependence on web aggregators by non-bank insurance is naturally much higher as compared to banking insurance. But at this point of time, important update in the sense that commission cuts which are allotted to distributors and particularly PB Fintech being renegotiated with PB Fintech, and some development expected with respect to either reduction in those cuts or a complete rollback from case by case as far as insurance companies are concerned.
Okay, all right. Thank you so much, Yash, for joining us with all those details. So that's an important story that we are tracking. Let's move on. We've been talking about the rise in gold prices. ICRA in its latest report says that organized gold loans are expected to reach the 15 trillion mark. This is by March 2026 itself. AM Karthik, who's the Senior Vice President and Co-Group Head Financial Sector Ratings, ICRA, is joining us now to take a few questions and understand what the outlook would be going forward as well. Thank you so much for joining us, Mr. Karthik. And everyone is just talking about the rise that we're seeing in gold prices. What is your take? Gold has already rallied 40% this year, and we've already seen rise in gold loans as well on the back of that. Is it fair to assume that this momentum will continue? What kind of growth are you looking at in this fiscal and the next one as well?
Good morning. Gold prices have been on the rise, and that's been the key reason for the gold loan growth, especially in the last 2 financial years. Our previous estimate, when we came out in September of 2024, we expected the organized gold loan market to reach the 15 trillion mark sometime in FY27. We see that happening in this financial year itself, a year ahead of what we had previously anticipated. A key reason is the gold prices hike. We expect the growth rates to remain very strong. We would see that we ended the last financial year about 12 lakh crore, close to about 12 lakh crore kind of an AUM, the organized gold loan market. When we say the organized gold loan market, it's essentially contributed by banks and the NBFCs. Banks account for the major share. And both these participants in this segment are likely to see a very strong growth. And overall, they will hit a 15 trillion mark this year and an 18 trillion mark next financial year. So that's our outlook on the sector gold loan space. Yeah.
Hi, morning. What if gold prices correct from here on? Or they stop, just throwing out that scenario and laying it out in front of you, Karthik. Then is there a risk that, some asset quality concerns come to the fore because of the kind of rush that we've seen towards gold loans?
Historically, gold prices have corrected in the past. We have seen instances in 2008-9 where the correction was close to about 25%. We saw close to a 20% correction in 12-13 and close to about 15% correction very recently, that was in 22-23. So gold price correction is something that is a risk. But most of these entities do work with a very, very comfortable LTV, which is a loan to value. And this is typically about 65-66%. And it's not changed significantly over the last many years, notwithstanding the gold price increase. Even if there is a correction, the recovery would be good enough. We would not. I mean, maybe the headline numbers could go up, but the ultimate credit losses for these players in the gold loan space will not be very high.
Got it. Karthik, is the average loan ticket size increasing? If there are any numbers to that, because maybe the volumes are higher, or it's what is it driven by? If we talk about the tonnage, the growth is just 1.7%, right? Is it also seen in the ticket size becoming bigger?
Absolutely. So we have not seen a tonnage growth. We have assessed, the NBFC space for this, and we have looked at the top 4-5 players. And it's a very concentrated business at this point in time. Close to about 80% of the NBFC AUM is contributed by 4 large players. And an assessment of these players indicates that, the tonnage growth has been quite low, which means that the price or the average ticket size have literally doubled between 2021 to 2025. And apart from ticket size, we also see that the number of loans that the borrowers take have also gone up. So currently there are about 1.5 loan per borrower, and per borrower, outstanding is close to about 1.5 lakh, which was close to about 70,000 maybe 4-5 years ago.
But what does that tell you about underlying consumer loans? So you're saying that one borrower has taken 1.5 times loans, gold loans against that same holding, right? Because the tonnage has also come down. So, in a way, it appears that borrowers on the same gold that they own are taking larger loans. I mean, what does that indicate, going ahead?
They are eligible for a larger loan because
they're eligible for a larger loan given the value of the gold now.
Correct. So the number of borrowers have also not gone up significantly. It's been a mid-single-digit kind of a growth in the number of borrowers. So what you're saying is right. It's essentially the borrowers are taking more loans against the gold that they hold, the same holding. This again is stemming from the fact that other sources of funding for this target borrower segment, the unsecured loans, the microfinance loan, all these have been on a slowdown phase for at least the last 12-18 months. So that's also fueling the movement towards gold loans, which is easier to access and get, because you're just pledging the gold and the assessment is to that extent very low, which entities do at this point in time. It's significantly backed by the underlying collateral which the borrower brings to the table.
Take that point, Karthik. Thank you so much for joining us with your insights. So that's what the expert insights are when it comes to gold loans and disbursals as well there. In fact, earlier today, we spoke with 2 experts from the jewelry space. Let's listen into what they had to say on demand and volume trends as well.
We are feeling the higher price of the gold price from last 6 months. Even today, the gold price has been a record selling price around 11,380 rupees per gram for 22 karat jewelry. Last quarter, we have been recorded at 20% higher in the sales. So coming month is the Dhanteras and Diwali season, which Indian customers always buy jewelry, and it's a sentiment that every Indian household buy jewelry, not only as a style statement, even as the investment they buy. So we are seeing a good sentiment to buy more jewelry in coming Diwali days.
The pent-up demand, which the customers had not been buying for some time, has started now. There is panic buying also happening. There is festive season buying happening. There is also a sentimental fear which has gone into the customer. That buying is also happening. So fundamentals are all kept aside, and it's all now sentimental. And then that is this kind of buying pressure we've not been seeing for some time now. Investment bars are also been now in good demand, which is not normally, it takes the backseat in India as compared to any other country. But now you can see the investment bars also performing well.
Well, that is interesting, where the management was saying that this time the demand for gold, Sonal, was not only driven by festive season, consumer demand, buying for the weddings, etc. It's also as investment.
Yeah.
So they couldn't articulate a number that what percentage constitute, but he did say that, when we spoke to the people and tried to get the end use, a lot of it is also driven by institutions and people from an investment point of view. So they too clearly are getting into the gold rush. Get into a break. On the other side, market technicals lined up with Nagaraj Shetty of HDFC Securities. Stay tuned.
Well, markets picked up some pace, so it's a good time to get all the trends from the F&O space. Mangalam is joining us now with all the updates. Mangalam.
Well, indeed, the Nifty has picked some pace from its morning lows. In fact, it's now closer to the higher end of today's trading range. 25,150 is what we're looking at the Nifty. And the biggest reason for that is two of its biggest components. We have the Nifty Bank and the Nifty IT index, both of them outperforming today. So we had, the Nifty Bank, which took a breather yesterday, even though the IT index was doing well. Now both those engines are firing, and the Nifty on the back of that up nearly a century. The outperformer from an index standpoint is the Midcap index today. That was an underperformer yesterday, so 0.2% higher for that one as well. Though the advanced decline ratio tells you that it's still, split right down in the middle. But importantly, a lot of these stocks are buzzing. We have Strides Pharma, which has picked some pace. We have, PG Electroplast, which has been zooming right from today's trading session so far. We have Hindustan Copper as well. So pharmaceutical stocks, a lot of these metal names, all of them are fairly well bid. So that's given put writers some hope. They've gone ahead and written the 25,100 put and the 25,200 put, both of them extremely active. 25,100 put has a premium of 50 rupees. 25,200 put has a premium of 100 rupees. So between 25,000 and 25,050, there is one strong support that the street is expecting, which is also closer to today's low. What am I looking at? Today's low, 25.24 on the Nifty, which coincides perfectly with the 20-day moving average on the Nifty, which is at 25,033. The highs of the Nifty have to be crossed. Over the last two trading sessions, we've seen supplies around that 25,200 mark. Yesterday's high was 25,192. The day prior to that, 25,221. So once we cross past those levels, can we say that there could be further short covering is what we'll see on the frontline index. A lot of longs added on Prestige Estates. Good update coming in out there. The stock up 3.5%. And some shorts are caught on the wrong side in names like Inox Wind as well as Nalco, so which is seeing some short covering as these stocks are moving higher.
Thank you. Get into a break on that note. On the other side, market fundamentals. Amisha Vora from PL Capital joins in next. Welcome back. The Nifty is now at 25,150. Midcaps are doing well. In fact, even better, nearly 400 points in the Midcap index. Bluestone Jewelers, it had a very strong run over the last couple of days. Volumes were on the higher side. It opened in the red, but now is back in the green. You can see strength in Hindustan Zinc, Vedanta, so lots of metals on the buyers list. Add Nalco to that. Nalco is up nearly about 3.5%. Swiggy is seeing some buying. Inox Wind. In the pharmaceutical names, Aurobindo Pharma catches your attention, 4.5% up, good volumes as well. So the screen is alive when you look at the mid-cap index, and large caps too, moving along quite nicely. Amisha Vora from PL Capital is now joining in to talk about markets. Amisha, lots of quarterly updates have come through from the banking side, consumer, real estate. I mean, what's your expectations going into the Q2 earnings season? Should one, be fully invested? If yes, in what? As we anticipate the numbers to trickle in?
I think, Q2 is at such a beautiful juncture where the numbers for Q2 maybe not as good because we are factoring GST confusion rather than GST positive impact. We are capturing monsoon rather than post-monsoon good impact. But at the same time, I feel that the Q2 numbers will provide a good base and the commentary will be the one which markets will watch out for as to how the ensuing quarters are looking post the GST cut. So I think Q2 numbers should be seen from that reference.
Yes, management commentary, because a lot of changes happened in Q2 itself. Amisha, in that case, you're talking about management commentary. Of course, a lot of market moves would depend on that. But what are some other risks that markets would be factoring in, or what are some of the triggers that markets are watching out for apart from earnings?
I would say that from risk perspective, a lot has really happened both globally, on geopolitical, on tariff, and particularly on tariff beyond everybody's imagination. Domestically also, if you ask me, a little bit of monsoon here and there really disturbs. So a lot has happened in terms of risk. From here on, because I always believe that tariff cannot be permanent, but GST cut is permanent. And that will trigger a demand recovery. And that is what I think will be looked at. The best part would be that while that is happening, that GST-led consumption demand, just before that, both markets and credit growth has been very steady or stagnant. If you see, our credit growth has been, I think, lowest in last 12 months, in last 10 years. So that means there is no bubble, there is no inflationary impact getting captured. And from that base, when we start, the recovery will be really lasting, is what I feel.
I like the line, Amisha, that tariffs are temporary, but GST cuts are permanent. And that perhaps should dictate the way one looks at constructing their portfolio. In fact, we chatted with Siddharth, I think exactly a month back, and he was saying that at PL Capital, that you all have turned a little more aggressive or bullish on the equity markets. You all had a defensive strategy. Now it's moderately aggressive, and you all have been deploying a lot of cash. So tell us, incremental cash in the last 1 month, where have you allocated it to?
So we took very large positions in metals.
Okay.
And we believe that across the segment, whether it is steel large cap, mid cap, and beyond that, copper, zinc, wherever one gets, and aluminum, a combination of exposure in metals will be very beneficial. And up till now, it has been holding really well, that call. But we think that this call is going to last much longer. The second position that we think could be really good way to capture the recovery will be banks and NBFC, specifically as we see the credit growth consumption picking up, so will the credit growth also. And that's where particularly NBFCs, which are in consumer-driven NBFCs, could do really well. And the third spot, coming down to consumption itself, there will be many places where the consumption impact will be felt in terms of companies. Some of the companies which we like really good, a lot were 18 to 5% GST, places like Britannia. We think that last 3 years' growth and next 3 years' growth will be starkly different. So there are pockets where we think that there could be a lot of action.
Are you seeing more comfort come by in large caps versus mid caps and small caps, Amisha?
No, because market had been so stagnant for a while. And if you see even banking, NBFCs, 6 to 8 months have been pretty stagnant position. So that's why the first focus we think is large cap. But yes, there are select pockets of mid caps that we really like. We continue to like our defense position, even though it has moved up, stocks like hell. We like our energy and transmission position, Voltam. So there are a hospital space we've been very bullish on, and we continue to maintain that stance. We selectively change sometimes the names, but the space we continue to like. So yes, mid caps also are continuing.
Amisha, tell us a little bit more about this aggressive bet on metals, because it's not just a tactical allocation. You're saying it's a little structural. So what are the top 2-3 reasons why you like metals?
We will have to take a little domestic view. That domestically, now the protection is there for 3 years. B, the domestic growth is really good in metal consumption. But see the more, and that, it's a very, economies of scale immediately falls. Whatever is the price growth comes down to EBITDA, comes down to PAT. So the impact is typically very stark. But the third most important reason we feel is that globally also, in last 5 to 8 years, if you see the capacity expansion has been extremely scanty and low. So post-war, as the building construction starts, America also wants to rebuild their manufacturing in whichever way they succeed, but they want to rebuild things. I'm sure Russia, Ukraine, I'm sure Israel, Gaza. So everywhere reconstruction, plus in China in particular, also we feel that the capacity expansion had been very limited. So we feel that there could be a sustained phase where consumption will grow. And because the supply has not been so strong in last 5 years, the prices also will.
All right, Amisha, always a pleasure speaking with you. Thank you so much for joining us today with your thoughts, the sectors you're bullish on, and overall market call as well. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets on the other side. And we'll also talk about the big story of the day, that is the pharma sector. Stay tuned for that. Welcome back. Well, pharma stocks, they've been gaining in trade today, and this is our big story of the day. Reports indicate tariff relief for generics. Ekta is joining us with more details and what these reports are suggesting. Ekta.
Well, yes, I'm going to start with basically what the news is. There is news which is circulating that the Trump administration is not planning to impose tariffs on generic drugs from foreign companies. The administration is also not actively discussing imposing Section 232 of tariffs against generic pharmaceuticals. Now, just to give you a little bit of background, the US has been concerned about the dependence on foreign manufacturing for pharmaceutical APIs. Generics, remember, supply 90% of drug volumes in the US. India comprises of 40 to 50% of generic prescriptions by volume. Nearly 2 out of 5 generics are made by Indian companies in the US. They comprise of 40 to 50% of US FDA drug approvals per year. They have 650 US FDA approved facilities, which is the largest outside of the US. And India also supplies 25 to 30% of APIs to the US. Some Chinese APIs supply up to 80 to 90% of certain critical components when it comes to the drug supply. Now, the administration has been worried about this kind of dependency, and the administration has been weighing duties on pharma drugs and APIs under Section 232. Section 232 is used to investigate whether imports of products threaten to impair national security. If so, one can impose tariffs or other restrictions to protect national security. So as of now, what we learn is that it is not being actively discussed, that's Section 232, and they're not planning to impose tariffs on generic drugs from foreign countries as of now. So this is basically a relief which is coming for pharmaceutical companies in India.
And what is the key reason that explains why the administration is looking at sparing the Indian generics?
That's because the entire space is so dependent on Indian generics. So Indian generics, what we manufacture in terms of a manufacturing cost is 1/8 or 1/5 versus what takes place in the US or Europe. Generic drugs are 80 to 90% cheaper than what patented drugs are in the US. And margins for highly competitive drugs are between 10 to 20%, and for more competitive drugs at anywhere up to 50%. Now, tariffs, if you impose tariffs on these kind of drugs, it can raise costs, and making generics would then become expensive, and for some companies it will become unviable. If those companies stop manufacturing and say that, making this particular drug is unviable for me, it can lead to drug shortages in the US. And hence, that is something that the administration would want to completely avoid, because that leads to a rise in terms of costs and obviously shortages of drugs. Secondly, building supply chains and building that kind of infrastructure in the US takes time, and it will also increase costs. So it's not something which is a near-term plan which can be executed immediately. It's a longer-term plan which they have to execute.
So what is the Trump administration focusing on now after all these changes that have come back?
Yes, absolutely. So what the Trump administration now is focusing on is that they're looking at branded drugs. Remember, in September of 2025, the Trump administration slapped 100% tariff on branded pharma drug imports unless the company is building a plant in the US. Companies, however, are understanding the mandate that has been given by the Trump administration. For example, Trump announced a deal with Pfizer. Pfizer will be lowering their drug costs with Medicaid in the Medicaid program to match, the most favored nation prices. Eli Lilly is investing around $27 billion over a period of time. J&J is investing $55 billion over 4 years. Novartis, $23 billion. Roche, around $50 billion. All this over a span of 4 to 5 years. Indian companies are also sort of towing the line now. So Ipca Labs, remember, announced a partnership with Biosimilar Sciences in Puerto Rico. Lupin announced a $250 million investment in a manufacturing facility in Florida today. Aurobindo has acquired Lannett for $250 million, adding a CGMP facility in the US. So they all understand that they need to have a manufacturing presence in the US, but the US administration also understands that they cannot impose tariffs on generics, and hence this is coming as a relief and an overhang really which has been lifted.
You can see that the Nifty Pharma Index are 1%, and individual stocks we've been showing that, the Aurobindo Pharmas, etc. Thanks, Ekta, for explaining that so well. Get into a break, more on the market. Stay tuned.
Welcome back. We have come off from the highs of the day. The Nifty is below 25,150 mark. It's a 100-point uptick, but yes, some of these consumer names, they are leading to some pressure from the top. So we have Asian Paints, ITC, Tata Consumer, all at the day's low. The Midcap index is doing well, outperforming the benchmark, but with a gain of 405 points as we speak. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
long shot. Market at day's high. Metals, healthcare clocked some gains, but auto and consumer durables dragged today. Been a decent day so far.
White House spokesperson Kush Desai confirms that the US is not considering imposition of any tariffs on generics. The clarification comes as a relief for Indian pharma, driving stocks higher.
Tata Consultancy Services is set to announce a muted show in the second quarter on weak revenue growth and a wage hike impact on profits, but the focus will be on the commentary on demand, H-1B revision and employee separation along with AI.
Even as realty players like Lodha, Keystone and Shobha post a slowing down in business growth, Prestige springs a surprise with a 50% growth in sales, riding on a 47% growth in volumes. The stock climbs.
Even as the nation remembers Ratan Tata on his first death anniversary, the recent differences among Tata Trust members casts a shadow.
Hello and welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Patra and with me is Manglam Malu. Well, it's turning out to be a session where we are seeing some amount of momentum come back into the markets. We have the Nifty, which is trading above 25,000 as we speak. So remember, we did test those levels on an intraday basis in yesterday's trading session. We have the Midcap index, which is up around 0.7% at this point in time, with an advanced decline ratio, however, which could be wanting a little more. In fact, third day in a row where the advanced decline ratio has been on the declining side, but otherwise the market is looking good. Pharma stocks are gaining, leading from the front, but metals doing well as well.
Metals and pharma, that's the pact which is doing well, and despite the mid-cap index, or rather the advanced decline ratio being found wanting, Ekta smiling because the pharmaceutical stocks are spiking right now. But be that as it may, what's interesting is that whether we see some sort of supply coming by once again at the 25,200 mark. We've seen that 2 days in a row for now. The good part is the lower end of the range has been protected, and towards the higher end of the range, we are finding the Nifty consolidating right now. 25,150 is where we are at. Important lines at the bottom of your screen, a CNBC-TV18 exclusive. I suppose Yash will join us to explain a little more on that as well, where SEBI sources are saying that many in the financial markets earn their income through derivatives trading, and this is why SEBI's derivative consultation paper is taking its time due to consultative and inclusive approach. It'll be very interesting to see where this goes from here on, because, on the consultative and inclusive side, we do have the brokers, we do have participants who benefit from this itself. And then the SEBI also will be looking at protecting the interests of retail. So this will be an interesting space to watch out for as we get some clarity on this. And as rightly pointed out, it is taking its time because of the nature of its approach. But we do have, Prime Minister Modi addressing, a bunch of delegation level talks between Prime Minister Narendra Modi and the UK PM Starmer. So they're addressing the press. Let's cut across.
Okay, well, there's only footage at this point in time, so we'll get 2 more details. And in fact, we will keep getting you more and more details in terms of the outcome of that delegation level talks. As of now, let's get to our movers and shakers segment, where we are going to be tracking a whole host of buzzing stocks in trade. And we do have Sonal joining in. We did talk about Prestige just briefly some time ago, and she's here to give us more details on Prestige and why she's looking at it. Sonal.
Oh yes, strong numbers coming in terms of quarter 2 update for Prestige Estates. It was a 50% growth that we saw in terms of pre-sales. If you look at the volumes, they were up 47%, realizations up 8%, collections have grown well as well at around 17%. In the first half itself, the company has done launches of 18.1 million square feet with a gross development value of 17,592 crore rupees. The office segment did well as well. Portfolio occupancy remained at 93.42%. FY26 rentals came in at are projected at 820 crore rupees. And retail segment, the gross turnover came in at 624 crore rupees, which is a growth of 9% on a YY basis. And FY26 exit rentals are estimated at 272 crore rupees. Now, a lot of these sales came in from existing inventory. They are sustained sales. So it talks a lot about how they're not dependent on new launches for growth to come by as well. And if we talk about why Prestige is reacting a certain way on the higher levels, that's because it has performed the best. It has in fact outperformed its peers as well. So if we talk about Prestige, it has seen a pre-sales growth of 50%, which compares with 9% growth that Keystone has seen, 7% growth that Lodha has seen, and Soba actually has seen a decline. This is the sales value that I'm talking about, not volumes. They have seen a decline of 8%. So definitely it's a big beat that is coming in from Prestige so far in terms of performance versus its peers.
All right, outperforming, and as a result of which the street recognizing that. But let's talk about Satwik Green. That's the other one which is doing extremely well. A recent listing, Vivek good numbers coming in.
That's right. So Tata Green, we are looking at Q1. Remember, this is a recent listing, and in line with what most of the solar module manufacturer peers have done, it's been an exceptionally strong quarter for the company. So when you're looking at the numbers on a year-on-year basis, Q1 revenues higher by almost 4 times, so 3.7 times higher at 915 crores. The EBITDA has jumped up over 5 times on a year-on-year basis at 177 crore rupees. EBITDA margins at 19.8%, and profitability higher by almost 6 times, coming in close to the 119 crore mark. On a sequential basis, though, revenues have moderated and are largely flat on a sequential basis. Now, very interestingly, immediately post the IPO, the company has informed the exchanges that they are launching a Uday series on-grid solar inverter, which will be in the range with a capacity of 1.1 kilowatt to 50 kilowatts. So this is an interesting foray into the inverter segment. And remember, even Wari as well as Premier have gone into this particular space. Now, talking about the order book, at the end of Q1, remember, the order book is at a little over 4 gigawatt, and the company says that the phase 1 of the 4 gigawatt Odisha facility, for which the company had gone ahead and initiated the IPO, will be commissioned by the end or by the 4th quarter of FY26.
Okay, all right, Vivek, thanks very much for that. In fact, earlier today, we did speak to the management on the results. Listen in to what they had to say.
It's been a good quarter for us. I think we've delivered some decent numbers, and I can't give you any future guidance, but this just shows that we've been growing year on year and quarter on quarter, and we're trying to improve our margin profile. Also, we're focusing a lot on that. That is as a result of the 3 things that we constantly focus on. First is capacity utilization. Second is our diversified customer base, and third is a strong order book. So all the 3 things combined, I think we are able to perform and deliver the results.
Okay, all right. Well, Mangalam, you're watching Senco Gold, so tell us more about that.
So yesterday we were talking about Titan all day, right? The stock was doing extremely well because the company reported 18-19% growth in their domestic consumer jewelry business. The important part is that Titan on that base reported these numbers, and everyone else on the street were fairly excited as well. Then comes Senco's second quarter update, where the revenues grew just 6.5%. So that seems like a disappointment, definitely on a low base, and for a company that has a lot of its operation in the eastern part of the country, which usually sees the festive season, the onset of the festive season, much earlier than the remainder of the country. And the street was expecting some outperformance to happen. That didn't happen. In fact, they've said that the quarter was impacted by the highest ever gold prices. There was a high base same time last quarter. Obviously, the customs duty-led push came by. Heavy rains and flooding in parts of Kolkata and West Bengal also impacted their overall sales. While they're confident of performance in the second quarter and the next couple of quarters, and by doing so, doing about 18 to 20% revenue growth in all of FY26, the street is still circumspect, because the first half of this year, they've done about 18%, and usually the second half does a lot better than the first half. So why is it that the company is just holding that 18 to 20% sort of revenue growth guidance at a time when gold prices are increasing? So which is what has left the street a little wanting. But they've opened 5 stores, and they have their store opening plan of over 20 stores this year. Let's see how that comes about. The street, because others have done well on a relative basis, the underperformance from Senco is reflecting in the stock price as well. We'll take a short break on that note, and on a quick programming note, if you're looking for the big bets and market themes for this festive season, CNBC-TV18 gives you direct access to Helios Capital Samir Arora. He shares his winning market themes, actionable investment strategies. You can ask your questions live on 16th of October, 2 p.m. Become a member of CNBC-TV18 Access. Log on to the CNBC-TV18 app or go on to cnbctv18.com/access/plans.
Welcome back. You're still tuned into a halftime report on CNBC-TV18. We have Vivek now to take us through all of the stocks that are moving around in trade at this hour. Vivek, over to you.
Well, thank you so much for that. Well, we can't look beyond the sector that you track very closely, and that's the pharma pack. Positive news flow regarding the likely exemption of generics from the entire tariffs under Section 232, something that has ensured most of the pharma stocks today have seen a very sharp bounce. Most of the generic names doing very well in the session. Aurobindo, Lupin, Reddy's, even names like Zydus, PPL Pharma, all of these names doing very well in the session. The other set of stocks that are doing quite well and in fact seeing a very sharp bounce is the entire metal pack. A couple of days you did see some profit booking come about, but today they resumed their up move. Look at Hindustan Copper, Hind Zinc, most of these stocks doing very well in the session. The other stock on the radar is Sona BLW. Remember,
we have to stop you there. I'm so sorry. Cut across to the Prime Minister Modi and the UK Prime Minister speaking as well.
फ्रेंड प्राइम मिनिस्टर स्टारमर के नेतृत्व में भारत और यूके के रिश्तों में इज इट ओके?
It's fine. It keeps falling out, but apart from that, it's fine. It's okay.
फ्रेंड्स, प्राइम मिनिस्टर स्टारमर के नेतृत्व में भारत और यूके के रिश्तों में उल्लेखनीय प्रगति हुई है। इस साल जुलाई में मेरी यूके यात्रा के दौरान हमने ऐतिहासिक कॉम्प्रिहेंसिव इकोनॉमिक एंड ट्रेड एग्रीमेंट सीटा पर सहमति बनाई। इस समझौते से दोनों देशों के इंपोर्ट कॉस्ट में कमी आएगी, युवाओं के लिए रोजगार के नए अवसर बनेंगे, व्यापार बढ़ेगा और इसका लाभ हमारे उद्योग तथा उपभोक्ता दोनों को ही मिलेगा। एग्रीमेंट के कुछ ही महीनों में आपका यह भारत दौरा और आपके साथ आया अब तक का सबसे बड़ा बिजनेस डेलीगेशन भारत यूके साझेदारी में आई नई ऊर्जा और व्यापक दृष्टि का प्रतीक है। फ्रेंड्स, कल भारत यूके के बीच बिजनेस लीडर की सबसे बड़ी समिट हुई। आज हम इंडिया यूके सीईओ फोरम और ग्लोबल फिनटेक फेस्टिवल को भी संबोधित करेंगे। इन सभी से भारत यूके सहयोग को और मजबूत बनाने के अनेक सुझाव और नई संभावनाएं सामने आएगी। फ्रेंड्स, भारत और यूके नेचुरल पार्टनर्स हैं। हमारे संबंधों की नींव में डेमोक्रेसी, फ्रीडम और रूल ऑफ लॉ जैसे मूल्यों में साझा विश्वास है। मौजूदा वैश्विक अस्थिरता के दौर में भारत और यूके के बीच ये बढ़ती हुई साझेदारी ग्लोबल स्टेबिलिटी और आर्थिक प्रगति का एक महत्वपूर्ण आधार बनी रही है। आज की बैठक में हमने इंडो पैसिफिक, वेस्ट एशिया में शांति और स्थिरता और यूक्रेन में चल रहे संघर्ष पर भी विचार साझा किए। यूक्रेन कॉन्फ्लिक्ट और गाजा के मुद्दे पर भारत डायलॉग और डिप्लोमेसी से शांति की बहाली के सभी प्रयासों का समर्थन करता है। हम इंडो पैसिफिक क्षेत्र में मैरीटाइम सिक्योरिटी कोऑपरेशन बढ़ाने के लिए पूर्ण रूप से प्रतिबद्ध है। फ्रेंड, भारत और यूके के बीच टेक्नोलॉजी पार्टनरशिप में अपार संभावनाएं हैं। हम यूके की इंडस्ट्रियल एक्सपर्टाइज, R&D को भारत के टैलेंट और स्केल के साथ जोड़ने पर काम कर रहे हैं। पिछले वर्ष हमने इंडिया यूके टेक्नोलॉजी सिक्योरिटी इनिशिएटिव लॉन्च किया। इसके तहत हमने क्रिटिकल एंड इमर्जिंग टेक्नोलॉजीज में ज्वाइंट रिसर्च और इनोवेशन के लिए एक मजबूत मंच तैयार किया। दोनों देशों की युवा पीढ़ी को इनोवेशन इस ब्रिज से जोड़ने के लिए हमने कनेक्टिविटी और इनोवेशन सेंटर, ज्वाइंट एआई रिसर्च सेंटर जैसे कई कदम उठाए हैं। हमने क्रिटिकल मिनरल्स पर सहयोग के लिए एक इंडस्ट्री गिल्ड और सप्लाई चेन ऑब्जर्वेटरी की स्थापना का निर्णय लिया है। इसका सैटेलाइट कैंपस आईएसएम धनबाद में होगा। सस्टेनेबल डेवलपमेंट गोल्स के प्रति हमारी साझी प्रतिबद्धता है। हम इस दिशा में इंडिया यूके ऑफशोर विंड टास्क फोर्स के गठन का स्वागत करते हैं। हमने क्लाइमेट टेक्नोलॉजी स्टार्टअप फंड की स्थापना की है। इससे दोनों देशों के क्लाइमेट टेक्नोलॉजी और एआई में काम कर रहे इनोवेटर्स और एंटरप्रेन्योर्स को समर्थन मिलेगा। फ्रेंड्स, रक्षा और सुरक्षा से लेकर एजुकेशन और इनोवेशन तक भारत और यूके के रिश्तों में नए आयाम घड़े जा रहे हैं। आज प्रधानमंत्री स्टारमर के साथ शिक्षा क्षेत्र का अब तक का सबसे बड़ा और प्रभावशाली प्रतिनिधिमंडल आया है। यह बहुत खुशी की बात है कि अब यूके की 9 यूनिवर्सिटीज भारत में कैंपस खोलने जा रही हैं। साउथहैम्पटन यूनिवर्सिटी के गुरुग्राम कैंपस का हाल ही में उद्घाटन हुआ है और छात्रों का पहला समूह प्रवेश भी ले चुका है। साथ ही गिफ्ट सिटी में यूके की 3 अन्य यूनिवर्सिटी के कैंपस निर्माण का कार्य प्रगति पर है। हमारे बीच रक्षा सहयोग भी बढ़ा है। हम डिफेंस को प्रोडक्शन की ओर बढ़ रहे हैं। दोनों देशों की डिफेंस इंडस्ट्रीज को जोड़ रहे हैं। रक्षा सहयोग को एक कदम आगे बढ़ाते हुए हमने मिलिट्री ट्रेनिंग में सहयोग पर समझौता किया है। इसके तहत भारतीय वायुसेना के फ्लाइंग इंस्ट्रक्टर्स यूके की रॉयल एयरफोर्स में ट्रेनर्स के रूप में कार्य करेंगे। ये विशेष संयोग है कि जहां एक और देश की आर्थिक राजधानी मुंबई में ये बैठक हो रही है, वहीं दूसरी ओर हमारे नौसैनिक जहाज कॉकन 2025 जॉइंट एक्सरसाइज कर रहे हैं। फ्रेंड्स, यूके में बसे 1.8 मिलियन भारतीय हमारी साझेदारी की जीवंत कड़ी है। ब्रिटिश समाज और अर्थव्यवस्था में अपने मूल्यवान योगदान से उन्होंने दोनों देशों के बीच मित्रता, सहयोग और विकास के पुल को मजबूत किया है। फ्रेंड्स, भारत का डायनेमिज्म और यूके की एक्सपर्टाइज मिलकर एक यूनिक सिनर्जी बनाती है। हमारी साझेदारी ट्रस्टवर्दी है, टैलेंट और टेक्नोलॉजी ड्रिवन है। और आज जब मैं और प्रधानमंत्री स्टारमर मंच पर एक साथ खड़े हैं, तो यह हमारा स्पष्ट कमिटमेंट है कि हम एक साथ मिलकर दोनों देशों के लोगों के लिए एक उज्जवल भविष्य का निर्माण करेंगे। मैं एक बार फिर इस भारत यात्रा के लिए प्रधानमंत्री स्टारमर का, उनके डेलीगेशन का हार्दिक धन्यवाद देता हूं। बहुत बहुत धन्यवाद।
Thank you, sir. May I now request Right Honourable Sir Keir Starmer, Prime Minister of the United Kingdom, to give his remarks to the media.
Namaskar, Dosto. Prime Minister Modi, it was an honour for me to host you in the United Kingdom in July at Chequers, and I am so delighted to be making this return visit just a few short months later. And can I just extend my thanks to the very warm welcome that you and the whole country have extended to me as Prime Minister, to the whole delegation, and through us to the whole of the United Kingdom. It is very much appreciated, very much noticed. And it is an important statement as we stand here about our shared commitment to this special relationship, because we are building something here. We're creating a new, modern partnership focused on the future and on winning the opportunities that it offers, and we're doing it together. And that's why we struck the UK-India Comprehensive Economic and Trade Agreement in July, a breakthrough moment, years in the making, slashing tariffs, increasing access to each other's markets, to drive growth and create jobs for our people, and making life better in both of our nations. And beyond the words on the page of the agreement is the spirit and the confidence that that has given to our two great countries to work even more closely together, something which we've seen evidence during the course of this visit here over the last 2 days. It is significant that we're meeting here in Mumbai as India's economic and financial capital because India's growth story is remarkable. I want to congratulate the Prime Minister on his leadership, aiming to be the world's third largest economy by 2028. And your vision of Viksit Bharat is to completely developed country by 2047. And everything I've seen since I've been here is absolute proof to me that you're on track to succeed in that. So we want to be partners on that journey. And my visit this week is about doubling down on the potential of our trade deal for the benefit of all of us. And that's why I brought a record 126 British businesses with me to India this week. We had to get a bigger plane to travel over here than the one we planned, but that delegation is some of our biggest, most iconic businesses and smaller and medium-sized businesses, but also leaders from education, some of whom are with us here, and sport and the arts. As I say, our largest trade delegation for a decade, and so my first as Prime Minister. So of course the destination for that had to be here, had to be India. Later today, the Prime Minister and I will convene a renewed CEO forum, and that was much discussed yesterday as a direct channel for business. There was a real buzz in the room yesterday that this forum is going to have real life breathed into it to embody the agreement that we've already reached, to ensure that the deal does deliver the opportunities that we want to see. And we are committed to that. And when we leave India later on tonight, I expect that we will have secured major new investments, creating thousands of high-skilled jobs in the sectors of the future for both of our nations. The UK and India stand side by side as global leaders in tech and innovation, and so we've also taken the opportunity to deepen our cooperation through our technology security initiative, with new commitments on AI, advanced communication, defence technologies, and much, much more. We're announcing a deal to make Bollywood films in the United Kingdom after a fantastic visit to the studio yesterday, and we're deepening our cooperation in education, as we've evidenced here on the film and with the people that we have in the room. It is the younger generation in India who will lead the charge to deliver on that 2047 target. The demand for the best quality higher education is very high. So I'm really pleased that we're announcing today that more British universities will be setting up campuses right here in India, making Britain India's leading international provider of higher education and delivering on our vision 2035 that we set out in July. These incredible economic bonds are the jewel in the crown of this relationship. But of course, our cooperation goes much wider too. And so we've had the opportunity to discuss issues of vital importance to global stability and security, including the situation in the Middle East. I strongly welcome the news that a deal has been reached on the first stage of the peace plan in Gaza. This is a moment of profound relief that we felt around the world, but particularly for the hostages, their families, and for the civilian population of Gaza, who have all endured unimaginable suffering over the last 2 years. I'm grateful for the tireless diplomatic efforts of Egypt, Qatar, Turkey, the United States, and many others in securing this crucial first step. This agreement must now be implemented in full, without delay, and be accompanied by the immediate lifting of all restrictions on life-saving humanitarian aid to Gaza. The UK will support these crucial immediate steps and the next stages of the talks to ensure the full implementation of the peace plan. The Prime Minister and I also discussed the need for a just and lasting peace in Ukraine, the need for stability and security in the Indo-Pacific, and the need to cooperate in critical areas like climate and energy, including breaking away from dependence on fossil fuels. India is a global player. We sit together in the Commonwealth, the G20, and we want to see India taking its rightful place on the UN Security Council too. So we're committed to strengthening our strategic partnership. And in fact, as already been mentioned, our carrier strike group is here in India right now, exercising with the Indian Navy, showing the strength of that relationship on defence and security, which we've discussed this morning. We want to take even further. And look, the whole thing, this particular partnership, goes much deeper. Because in the end, it is about people. The human connections between India and the UK are unique, forming what Prime Minister Modi has called the living bridge between our two countries. A bridge between people, a bridge between hearts, and in that spirit, Prime Minister, I want to express my deepest sympathies to all the victims of the Air India crash earlier this year. A terrible day and a tragedy for both of our nations. And it showed, frankly, that we are family. And I am proud this week that we're taking this incredible partnership between our two nations and making it stronger than ever for working people on both sides of that bridge. Finally, I'd like to take this opportunity as we enter the festive period to wish the people of India joy and happiness and a very happy Diwali. Diwali ki shubh kam inai. Thank you.
Thank you, sir. That concludes the press statements. Thank you for your presence, ladies and gentlemen. Please be seated.
Welcome back. The Nifty holding up with about 100 points in terms of gains. We've got good comments coming in from both the Prime Ministers of India and the UK. And the market holds up with gains, with the Midcap index up around 0.75%. But that's about the secondary market. Where the action is heating up is India's primary market. Lots of IPOs happening this year. You know, nearly 78 main board IPOs and over $14 billion raised so far. Strong domestic investor demand, fast-track approvals and diverse sectors, all of them driving the broom. So let's try and put all of this into perspective and bring in Nimesh for this special number crunching from the latest report that is come in. India, the new IPO factory. Take it away, Nimesh.
Well, absolutely, Mangalam. You know, it's actually the IPOs and IPOs. I mean, the secondary market has been so flat, right? The Nifty has been flat for the year, but it's the IPOs which are thriving. 78 IPOs have already been done in the main board so far. Last 2 months saw almost 33 listings and 13 are lined up in the month of October as well. So it's a busy season for investment bankers and for a lot of corporates as well. So that's the kind of record we've seen in the month of 2025 so far. In terms of big things to lined up in this month itself, we've got LG, a big IPO lined up for the month of October, and so is. So October itself will see nearly $5 billion of fundraising on the back of LG as well as other couple of large IPOs as well. So far in 2025, we've seen fundraising of close to $14 billion. So that's a big amount, though it's not a record year yet. Last year we saw a big record of $21 billion. So we still have 3 months to go. We'll see how it goes. But it's a big amount in terms of $14 billion already raised so far. This puts India among the top 4 countries in terms of fundraising so far. Look at the data. US markets have seen a record $53 billion of IPOs in 2025 so far. Second is Hong Kong at $23 billion, China at $16 billion, and India is at $14 billion. And we still have 3 months to go, so maybe it's another record year for India as well. So clearly that's visible in terms of fundraising so far in India is concerned. In terms of sectors, while the perception seems to be that it's the new age companies which are raising money, that's not the case. It's actually the traditional businesses which are raising money in IPOs. The biggest sector is industrials. A lot of EPC players, the green energy companies, are the ones who are raising money in this market. The second big sector which has seen IPOs is discretionary, and a lot of sectors, including the jewelry companies, the digital companies, the consumer tech, are the ones who've seen raising money by the IPO market. So that's the big sector. Again, as I said, the traditional sectors, 28 IPOs, which is almost 18%, are the companies which have raised money are in from the consumer tech, green energy, and the traditional businesses. So against the perception that traditional businesses continue to raise money via the IPO. This is interesting. What kind of gains we've seen on the listing day since Jan 2024? This is all the Bernstein data. The most striking data is the 26%, which has given zero returns or negative returns. So clearly 1/4 of the IPOs have not made money for the investors since 2024. The other big outperformer is that 40%, more than 40% return in 18 companies. So barring 18 companies or 18% of the IPOs, not many have made money. In fact, as I said, almost 25% or 1/4 of the IPOs have actually not made money on the listing day. So, well, there's a lot of frenzy. Need to see how it goes. But looking at the lineup, it looks like 25 is going to be another record year with almost $14 billion done, and there could be almost $20 billion by the end of 2025.
Okay, all right. Thanks very much, Nimesh, for that. So that's the update coming in on the entire IPO space. Well, there's some details coming in. Vivek has managed to access the Form 483, which was issued to Hetero in one of their API facilities, which was in fact inspected by the US FDA in the month of September. And it is expected to be, 6 observations which were issued to the particular plant. And the nature of the observations, according to people who have seen the observations and studied it, have indicated that it is quite serious. It could have ramifications in terms of what could happen to Hetero's plant going forward. So it could possibly see a positive fallout maybe for a couple of these other API companies, because if in case something negative happens to Hetero, then the business would go to them. We'll get Vivek to talk more about it as well. But that's the update which is coming in on Hetero. Remember, it's not a listed company. It's biggest observation, which I think the street is possibly looking at is the unregistered testing laboratory, which was located outside the official factory. So it was not registered with the US FDA, and that has raised concerns. We'll do one thing, we'll take a break, but we luckily have Vishal Manchanda joining in. He's a pharma analyst. We're going to talk about this and lots more on the other side. Stay tuned. Welcome back. Well, you're still tuned into Halftime Report on CNBC TV18. It's turning out to be a stable day for the market. So let's get talking about one big sector which is in focus. That's the pharmaceutical space, because it is a relief for generic pharmaceutical companies, as the Trump administration has indicated that they are not looking at generics in terms of tariffs at this point in time. While it was known, there is an overhang which has been removed now. To talk more about this, we have Vishal Manchanda, who's joining in to discuss more about this particular topic. Vishal, hi, welcome to the show. Well, you know, before we start talking about the relief that generic pharmaceutical companies are possibly seeing at this point, just wanted your thoughts in terms of what's flashing on the screen with regards to Hetero. You know, one of their units did get inspected. It seems to have been an extremely tough inspection with difficult observations. One of them is an undeclared lab. So it's probably heading, you know, into maybe an escalation with the US FDA. How would you read that?
So good afternoon, Nikta. So I think Hetero is a very large player in the space. Over the last, say, 5-7 years, they have become one of the very large players in the generic space, exporting to the US. While I haven't seen the Form 483 observations, but apparently it seems the observations are serious, and kind of the rumors have been there that there has been a very serious inspection at Hetero facilities. So I think if at all if there is an impact on Hetero, it's a large player that will get impacted. So possibly competition can benefit from the impact that Hetero might see. And I think among the competition, the most important player that can benefit is Aurobindo, because they might have an overlap almost on every drug that Hetero would be exporting to the US.
Okay, so you would probably see a positive impact on Aurobindo. But in the past instances, how much has the positive impact been if in case, you know, other companies have faced serious issues, say, such as an import alert? What's been a gain for other pharmaceutical companies? Has it been a windfall gain?
So my sense is most of the products that Hetero sells in the US are commodity products, and barring 1 or 2 large products where they are making disproportionately high profits. So I'm not sure whether those drugs are involved where they are doing disproportionately high profits. But majority of the products are commodity. So we'll have multiple suppliers for those products. So it's unlikely not going to be a windfall gain, but only sort of maybe the prices can move up a bit, or maybe the prices won't correct. That's how it is. So not a windfall gain is how I would see, except if the large products are not involved.
Right. Now that, you know, this has been made official, or we understand that this is out of the purview, do you think there was ever a real fear that something like this would come by? Because generics, extremely important, right, for the US markets, and everyone talks about, you know, controlling prices, etc. out there. And Pharma always was supposed to be given a slightly softer hand.
So, Mangalam, you're talking about the tariff relief that has come to generics?
Yeah.
Yes, I think the probability was low in terms of tariffs being imposed on generic pharmaceuticals. And I think it's panning out on the same lines. Generic pharmaceuticals have been exempted. So I think it makes sense for everyone. It makes sense for the US consumers, and it even also makes sense for Indian players. So had tariffs been imposed, I think a large part of the burden would have been Indian players would have to pass on to the US consumers.
So you are comfortable with this coming in? You were expecting this? This has happened, business as usual. For them, who benefits the most, or who would have had the biggest impact had it come by, had there been tariffs?
So I think among the largest player which has got the most exposure to US generics is again Aurobindo Pharma. They have the largest sales coming from the US generics. I think followed by Dr. Reddy's, Zydus, Lupin. They are the other large players who are exposed to the US generics.
Okay. Just quickly reverting back to the earlier story, Vishal, you know, it's Do you think that we're probably going through a little bit of a rough patch when it comes to the entire pharmaceutical space again? We've got bad news which has come in with regards to the cough syrups, tragic news actually, and now we're dealing with maybe tougher inspections and observations which might escalate when it comes to the US FDA. Is that rough patch which we see intermittently emerging again according to you? Do you think that, however, maybe pharmaceuticals on a larger scale are in a better place?
Yeah, so I think in these inspections, like we always have seen this coming on and off. Like we see a smooth run for a few months or maybe a few quarters, and then we see again inspections kind of spoiling the mood around the sector. And probably I think we are in midst of that. So I can't really say how long this rough patch will last, but inspections are there to stay, and we'll see companies on and off getting into the trap.
Okay, all right, Vishal, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us all of your perspective on the pharmaceutical space. Well, we need to take a short break, but we'll be back with lots more stocks, lots more updates on the market. Stay tuned.
Welcome back. While the Nifty is holding up with a 100-point gain, not much change over the last hour and a half or so. There are a lot of stocks which are spiking right now. It's the IT pack which is picking pace. So Infosys, HCL Tech, Tech Mahindra, all of them higher ahead of TCS's results today. Obviously, the street doesn't expect much from the second quarter. A lot is expected in terms of clarity that will come from the management commentary on the sector by and large. So that's something we will monitor. And also over the last few minutes or so, there's been a big surge that has come by in MCX. MCX has been doing well all through today's trading session so far, but it's just the last 15 minutes or so where the spike has been a lot more profound, up around 5.5%, some attributing it to the record volumes that we're seeing on gold and silver on the commodities exchanges. What we'll do is we'll take our leave on this edition of Halftime Report on that note, with the promise that Business Lunch takes all the market action ahead. Thank you for watching.
The markets continue to trade slightly off the highs of the day. Most sectors trade with gains led by metals and healthcare. The auto and consumer durables lag slightly. The White House spokesperson Kush Desai confirms that the US is not considering imposition of any tariffs on generics. The clarification comes as a relief for Indian pharma, driving stocks higher. TCS is set to announce a muted quarter on weak revenue growth and a wage hike impact on its profitability, but the focus is on the company's comments on demand, the H-1B revision, AI, and the employee separation. Even as realty players like Lodha, Keystone and Sobha post a slowing down in business growth, Prestige Estates springs a surprise with a 50% growth in sales, riding on a 47% growth in volumes. The stock climbs. And even as the nation remembers Ratan Tata on his first death anniversary, the recent differences among the Tata Trust's members casts a shadow. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Patakia. It's been a fairly good day for the markets, but the common theme has been the fact that there continues to remain resistance at higher levels. Today's intraday high is 25,181 on the Nifty, and that is below yesterday's high, which was around 25,190 odd levels. So it's yet another lower high that the index has made on the charts, at least as of now. And today's intraday low as well, 25,024. So roundabout falling below yesterday's levels as well. So it's a lower high, lower low scenario that is playing out currently for the market. We're still a couple of hours away from the close, today being the weekly expiry of the BSE contract. So we keep an eye out on all of that. But the broader markets, they've been fairly okay. The stock specific activity though has been pretty active in the broader markets. The Midcap index is at the highest point of the day, 400 points higher there. The small cap index too now 0.3% higher, doing fairly well for itself. The recovery, the very little recovery that you saw from the Nifty was courtesy the IT names. And you pull up TCS reporting results later this evening, and the stock has been doing fairly okay for itself. And now the IT index is at the highest point of the day, 1% higher. TCS now 0.6% higher. There's a slight cool off that you have seen from the highs for TCS, but there has been a recovery from the lows nonetheless. The stock has been rebounding from the 52-week low that it had hit on the 1st of October. And the other Tata Group company reporting results today is Tata Elxsi. That too at last check was trading with gains of around about 2%, and we'll keep an eye out on Tata Elxsi as well. It's slightly off the highs of the day here as well, but 1% higher on Tata Elxsi numbers expected after market hours. And since we are at the Tata Group, the big exclusive we are tracking at lunch hour. Now, sources close to the conglomerate or the Tata Group have told CNBC-TV18 that all trustees are confident that deliberations of the last few days will lead to a harmonious working relationship. Let's bring in Parikshit for more details on this. Parikshit, tell us more.
Ahead of the Tata Sons board meeting on October 10 in Mumbai, sources close to the Tata Group are hoping the differences between the trustees will be ironed out. Sources familiar with the matter say that all trustees of Tata Group have had time to reflect over the events over the past few days. They told CNBC-TV18 that they are confident that deliberations of the last few days will lead to some sort of harmonious working among the trustees and Tata Sons board members. We also learned that contrary to some reports, there was no difference among trustees on the appointment of Noel Tata as chairman of Tata Trust. Noel Tata was in fact appointed as chairman of Tata Trust unanimously. All Tata trustees unanimously believe that Tata Sons should remain a private entity, even as the RBI had mandated a public listing of Tata Sons by the 30th of September this year. Sources say that the government was obviously concerned about differences among trustees and therefore held a meeting with members of both Tata Trusts and Tata Sons on Tuesday. Apart from differences over the appointment of independent directors, including Anita George, Tata Group trustees were divided over the resignation of Vijay Singh, the former Defence Secretary, as nominee director on the Tata Sons board. While the appointment of nominee directors above 75 years of age is reviewed annually, some believe there was no provocation or reason for Singh to leave the Tata Sons board, considering his immense contribution. But he was in a way made to do so. We have been told that the Tata Sons board meeting tomorrow will only look at routine matters, including disbursement of funds for charitable purposes, and none of these differences which we've been seeing play out in the media over the last few weeks and also before the government is likely to be taken up.
Indeed, Parikshit, thank you for that update there. More developments emerging for the Tata Group. Now, the other major issue here at hand is that there is a huge US FDA shadow over Hetero Labs. Now, the US FDA has issued 6 observations on this. Now, Vivek is joining in with more updates with regard to this. Vivek.
Well, good afternoon now. So what we are basically tracking is a company called Hetero Labs. Remember, this is an unlisted entity, but a very large pharma company. And the facility under question is Unit 9, a very large 800-acre facility in the state of Andhra Pradesh. Now, what we understand from our sources is that the US FDA recently conducted an inspection between September 19th to September 26th of 2025. And at the end of the inspection, issued a 14-page Form 483, which had 6 observations, quite a few of them quite serious in nature. Now, this particular facility that we're talking about is an API facility called Unit 9 and popularly known as the Nakkapalli facility of Hetero. Now, let's have a look at the observations and we'll highlight the serious ones. The first observation says that the quality control unit procedures were not fully followed, and they say that there was an unregistered testing laboratory that was located outside the official facility of the plant. The second observation mentions that finished APIs intended for the US market was released to an off-site API warehouse without documentation. A few of them are routine in nature, but have a look at observation 6. Observation 6 says that there was failure to reconcile quantities of identification labels, and also there was specification, out of specification results that came out of the unregistered facility. These observations appear to be quite serious in nature. Now, we spoke to a few industry experts as to what exactly this particular development and this particular Form 483 could mean for Hetero, and experts say that in case there is an escalation, it could mean that there could be temporary supply disruption in the key products that this particular facility exports to both the US as well as the Europe markets. Now, which are the other alternate suppliers? First on the list would be Laurus Labs, given the fact that Hetero is a very large player as far as the global ARV HIV market is concerned. So Laurus Labs, Aurobindo Pharma, there are significant product overlaps, and Divi's Labs are the 3 companies that could gain to or that could stand to benefit in case there is an escalation of this particular Form 483. We tried and we reached out to the management of Hetero Labs. We are yet to receive a response from them.
Interesting developments there. Vivek, thank you for bringing that to us. But the other major event that we are tracking today is the start of yet another earnings season. And TCS set to report numbers later today. Rima is here with what the street is expecting. Rima.
Well, muted expectations this time going into TCS, but the good news is that it's going to be better than what we've seen in the last 2 quarters, which was a decline in the revenue. So at least this quarter, the company, according to the CNBC-TV18 poll, is likely to grow by about 0.2% in constant currency terms. In dollar terms, it should be a growth of about 0.4%. Margins for the company are likely to expand by about 20 basis points to 24.7%. INR tailwind, that's a big positive because the rupee has depreciated by about 2.5% in the current quarter. Part of it will be offset by the wage effect, which kicks in from 1st September. So 1 month impact on the back of that. The investor focus, though, will be on beyond the numbers. Up until now, the company has said that at least for the international business, which is basically a revenues X of the BSNL deal, will be better this year compared to last year. But we know that, the trade deal has still not been struck, and that has caused a lot of, that lack of clarity on account of the trade deal has resulted in client spending being muted, discretionary demand not reviving. Does the company continue to hold on to that? So what do they have to say about demand? And secondly, the other big thing that happened with TCS this quarter was the fact that they had to let go of 12,000 people. And plus on the HR front, there was this increase in the H-1B visa cost, which comes in from the next financial year. So we'll quiz the management on, what the de-risking strategy is going to be, if there is any on-site impact of that. The stock, on a year-to-date basis is down close to about 20% because it's recovered over the last couple of days. Valuations are in line with its long-term averages at about 19-20 times forward multiple. The question is there enough in the numbers this time that can result in the stock continuing to do well as it has been over the last 3-4 days? Back to you.
The big question indeed. Rima, thank you for bringing us the expectations from TCS later this evening. Take a short break. More news and updates follow on the other side. Welcome back. Now, a short while ago, the Prime Ministers of India and the UK jointly addressed the media in Mumbai. Both leaders hailed the recently signed India-UK trade agreement and vowed to strengthen economic, defence and technological ties between the two countries. Parikshit is joining in to tell us more on the meeting between the two leaders. Parikshit.
Well, both the leaders met in a bilateral setting and also with delegations. There were delegation-level talks as well. It's an important two-day visit by the UK Prime Minister just months after the India-UK sealed a free trade agreement. Now, even as this trade deal has to be ratified by the UK Parliament sometime next year, we're hoping this milestone would be achieved at the earliest. But both sides are clearly not waiting for the UK Parliament to ratify this deal. The Prime Minister, Keir Starmer, was here with a 100-member strong business delegation. This included major film houses, production houses in the UK, and key business leaders, including British Airways, were present with him. So there is a broad consensus that this FTA is unparalleled. The business defense ties are going to increase manifold over the next few years. There is an ambition to significantly increase trade in goods, in services over the next 5 to 6 years, increase the mobility of professionals as well. One of the areas that Keir Starmer outlined was education. And the Prime Minister, Narendra Modi, welcomed the fact that 9 UK universities are going to open campuses in India. Both sides have also signed a pact on defense training and in the maritime domain as well. So India and UK will do a lot in business terms, but also in Quad, in the Indo-Pacific, and overall, there is going to be a closer strategic and defense partnership in the years to come as well.
Parikshit, thank you for that update, the big meeting between Prime Minister Modi and UK Prime Minister Keir Starmer. Take a short break, more news on the other side. Stay tuned. Welcome back. Now, the latest edition of the Forbes Rich List is out, with Reliance Industries' Mukesh Ambani retaining his crown as India's richest person, and it's only centi-billionaire with a net worth of $105 billion. At number 2 is infrastructure tycoon Gautam Adani and family with a fortune of $92 billion. Retaining the third spot on the list is Savitri Jindal of the OP Jindal Group, whose net worth fell by $3.5 billion to $40.2 billion. Telecom magnate Sunil Bharti Mittal was the biggest gainer with his net worth, which he shares with his family, increasing to $34.2 billion, seeing him climb 3 places to the 4th richest spot. Now, tech billionaire Shiv Nadar, last year's 4th richest, slipped to 5th place with a fortune of $33.2 billion. And ace investor and promoter of Avenue Supermarts, Radhakishan Damani, took 6th place with a fortune of $28.2 billion. Sun Pharma's Dilip Shangvi, the Bajaj family, Cyrus Poonawalla and Kumar Mangalam Birla make up the rest of the top 10 spots. And today, we pause to remember Ratan Tata, the visionary industrialist who transformed the Tata Group into a global powerhouse. Under his leadership, India's corporate landscape witnessed growth, innovation, and global expansion on an unprecedented scale. His legacy is not just in business success, but in setting new benchmarks for corporate governance, ethical leadership, and long-term value creation for investors and markets alike. Join us for a special coverage on CNBC-TV18 at 5:30 p.m. today as we look back at Ratan Tata's legacy and the impact he leaves behind on markets, businesses, and future generations. With that, we call time on this edition of Business Lunch. We leave you with the Nifty still above the mark of 25,100. From me and the team that put this show together, thank you so much for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Decent gains on the markets, but we are off the highs that we saw for the day. Nifty is just at the 25,150 mark. That continues to remain an important level to watch out for. Mid-caps are outperforming. A lot of movers in the broader markets. And yes, we are heading into the earnings season with TCS today, so a lot to catch up on as well.
A lot to catch up on, especially in terms of expectations when it comes to earnings. And look at that IT pack. They're doing very well in the session ahead of TCS's earnings. We have a lot lined up on the show, so let's start off with the top headlines. Market off day's high, but still Nifty trades with a 100-point gain, with the broader markets outperforming the benchmarks. Most sectors trade with gains led by metals and healthcare. Auto and consumer durables lagged slightly.
Prestige Estates surges 4% after the company springs a surprise with 50% growth in sales and a 47% growth in volumes. This after weak updates from other real estate players.
Aurobindo Pharma shares surged 4% after White House spokesperson Kush Desai confirms that the US is not considering imposition of any tariffs on generics. The clarification comes as a relief for the entire Indian pharma industry.
Southwick Green Energy shares hit a 10% upper circuit on the back of a strong set of Q1 numbers. The company's revenue rises nearly 4 times, while profit also sees a multi-fold jump. All right, those are the top headlines that we are tracking for you for the markets. As we pointed out, Nifty steady with a gain of 110 points. Right now, we're above the 25,150 mark. A whole host of stocks from the Pharma pack, from the IT pack, metals too doing really well. Mid-caps are outperforming today, and a lot of stocks now reacting to news updates and Q2 updates as well.
That's right, Sonal. In fact, a couple of exchanges stocks today. Look at MCX as well as BSE. Both of these stocks have rebounded quite smartly from the recent lows. But this is a special segment, Mid-Cap Movers. Sudarshan is standing by the wall to take us through the list of mid-caps that are moving around in the session.
So today, quite a few stocks are moving higher in the trade today. So I'll just take forward what exactly we're talking about. The exchange names like MCX, BSC, or say Angel One, or even Motilal Oswal. All these stocks are higher on the back of what just a few minutes ago we have reported that as per SEBI sources, they believe that so many people in the financial markets earn their money through basically derivatives. So whatever decision they'll take, they'll consider all these issues before they come out with the decision on the regulatory front. And you can see all these stocks are up somewhere in the range of 3 to 7%. Some of the stocks are reacting to the news. First is Hind Copper, up almost 5% because there has been some positive news related to Australian copper company Glencore that government is likely to support that. Second one is Prestige Estates. That's also up almost 3%. At one point, the stock was up almost 6% on the back of Q2 updates. They have put out a very strong update. And after that, all the brokerages also have maintained their positive stance on the stock. Next was Aurobindo. It's on the back of because now we understand from US officials that they are not considering any tariff on generic products. And that's the reason all the major pharma companies, Indian pharma companies, are high in today's trade. Aurobindo is also up more than 3%. GM Breweries has come out with a quarterly earnings, Q2 earnings, and on all the fronts, they have put out a strong set of earnings. Margin front also, there is an improvement of almost 600 basis points. That's the reason you are seeing a big move in the stock, up almost 16%. And last one in this list is Dreamfox, continues to move higher over the last few sessions since the time the company has announced that it's entering B2B segment. And since then, it's up somewhere in the range of 15 to 16%. But some of the stocks are under pressure today. First one on the list is PG Electroplast. It's down with healthy volumes and it's up. My bad. It's up. At one point, it was up almost 8%. Currently, also, it's up almost 7%. SpiceJet, all the airline companies are higher. Even SpiceJet is following that trend. On the screen, you are seeing NSE. We have to tag BSE stock. You'll see that that stock is also up almost 16%. All the gold companies, since the time PN Gadgil or Trent had come out with quarterly updates, and those updates are very strong. Sky Gold is up today also. It's up almost 6%. Swiggy, there was a positive note for Eternal. Now, on the back of that, you are seeing a big move in Swiggy as well. Sona BLW, after a big down move that this stock has seen in the last few months, finally this stock in today's trading session, it's up almost 4%. Now, finally talking about some of the mid-cap losers. First in that list is Info Edge. After the company has come out with Q2 update, in which standalone billings has seen a growth of 12%, but it's slightly below estimates. Second one is ITI, which is seeing profit booking after a big move in the last two sessions. Today it's down almost 5%. Hyundai Motor, if you take a look at the Vahan data, some of the companies are losing market share and two companies which are gaining market share, Maruti and Tata Motors. Hyundai is one company that's losing market share. On the back of that, you are seeing a down move. It's down currently 3%, and two stocks have been under pressure over the last few sessions are Nelcast and Netweb. Netweb is down despite winning an order.
All right, those are some stocks on our radar. Thank you, Sudarshan, for that. Let's welcome Somil Mehta from Mirae Asset Share Khan for a technical check on the markets. Somil, good afternoon. If you can quickly tell us what the levels to watch out for on the Nifty and individual names as well.
Good afternoon to everyone. Nifty has again taken support at 20 daily moving average and has resumed the uptrend in the short term. But in the medium term, the most important thing here is that on the weekly charts, every time it is making higher bottoms. And now I'm expecting the previous high to be crossed on the upside, which is 25,450, which would be my first target. And the next target would be about 25,700. So view is positive. Buy and decline should be the strategy. Same with the Bank Nifty, has made a small flag pattern on the hourly charts. I'm expecting this to break on the upside. The targets for Bank Nifty would be around 57,000 with a stop loss around 55,690. So these are some very important levels, but the bias is positive in the short term, in the medium term. So buy and decline should be the strategy. My picks for today would be Laurus Labs. Laurus Labs has broken out of a small consolidation on the upside. Momentum indicators have given a fresh buy signal, so that would be my first pick. Stop loss would be 840 and target would be 940. The next pick is NBCC. Again, the same setup, small flag pattern on the daily charts, support at 10 daily moving average. Great setup for a short-term trade. Stop loss would be 110 and target would be 120.
Thank you so much, Somil, for joining us. Laurus Labs and NBCC, your topics. Laurus is seen as a beneficiary of some of the worries at Hetero Labs that the company is facing. But we'll now slip into a short break. We'll get him on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Well, the stock on our radar is Interglobe Aviation, as Indigo has expanded further into Europe with the launch of direct flights between Mumbai and Copenhagen. A colleague, Shivani Bazar, caught up with CEO Peter Albers to discuss the opportunities in long-haul routes. Take a listen.
You know, Indigo has had a wonderful journey for the past 19 years and has built up a domestic network which is phenomenal, with 94 cities in India being served. But with that, we felt that the further you go away from India, the lower the market share is from Indian operators. So the opportunity to Europe, where 75% of all the flights are operated by European carriers and only 25 by Indian operators, we thought we should go to Europe and start to offer that proposition for our customers. So we started to Manchester, we started to Amsterdam, we were flying to Istanbul already, and today we have Copenhagen. And you know, I was just at the gate speaking to some of our customers, and then you find a couple who have a son who is working already for 5 years there. A couple come from Ahmedabad, connecting here in Mumbai. So if you listen to those stories, it's really the right moment for Indigo to start to Copenhagen.
Well, tapping on the aspirational and the wealthier Indians now. Peter, we spoke about, you know, how this is the 4th European destination. What lies ahead of Indigo? Are you looking at more and more connecting or direct flights into the longer routes now?
Yeah, absolutely. You know, when we were exiting COVID 3 years ago, we had in the range of 20, 25 international destinations. We've jumped to 45 today. And a lot of them were in the region itself, Krabi in Thailand, and flying more to Singapore and all. But now we see the opportunity to do more and more on the longer haul. And we will start flights to London Heathrow at the end of this month. We start flights to China at the end of this month. So the opportunity to do more and more is really there.
Well, Peter, you know, the market is evolving, and as you said, that Indians want more now. You know, to pay the premium is something that they can do. They want a better service. But the competition is also tough when you come to longer route flights to Europe, to international markets. How is Indigo sort of looking to compete on that stage?
Yes. Well, I think the basis for Indigo, we have our 3 customer promises: affordable fares, on-time performance, and a courteous and hassle-free service. And that very foundation remains. We've added number 4, which is an unparalleled network. And actually, you're on right the visualization of that unparalleled network, which is great. But that keeping our cost leadership allows us to have that affordable service. I think our staff is doing a wonderful job. My colleagues are doing a wonderful job to make sure that the customers have that service. And against that backdrop, I believe that we're very well positioned to cater not only for Indian customers, but increasingly also for international customers.
Well, a very interesting conversation there with the management of Interglobe Aviation. But we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, moving ahead, Reliance Consumer Products relaunched its personal care brand, Velvet. On the sidelines of the launch, our colleague Shilpa Ranipeta caught up with T. Krishnakumar, Director, Reliance Consumer Products, and asked him on the relaunch of Velvet, category expansion plans, and Campa Show. Let's listen in.
We thought the residual equity is very good, at least in some parts of the south. We felt it will be a good place to start and build a good personal care brand. And that was the thought behind Velvet. And here we are launching a range of personal care products, ranging from soaps to shampoos to conditioners to talcum powder to body washes. And we think we will expand this as we go along.
Right, so these are going to be available immediately in Tamil Nadu, and by when will they be available across the country?
It will be available in most of the top outlets of Tamil Nadu in 4 weeks' time. And once we stabilize it, we plan to take it to other parts of the south, starting with Andhra Pradesh and Telangana maybe by December. And then we expect to, within 12 months, roll it out nationally.
You know, until now, you've been largely present in beverages under the Campa brand, and then you've also had independence with staples, etc. So is this now you, sort of expanding your product basket into non-food categories? You know, what is the strategy there?
We are now ready to scale up the other categories in the next few months. And you would find us, as I said earlier, by this time next year, really available nationally with almost every category in the FMCG business. Food, beverages, and in food, biscuits, snacks, and instant ready-to-cook and ready-to-eat foods, and then into home and personal care in a big way, as also beverages, as you mentioned, and general merchandise.
Right, you know, so far, Independence and Campa, both of these are 1,000 crore brands. So as you now look at entering newer categories, etc., so which other brand or which other category do you think will be the next 1,000 crore player for you?
See, I'm not going to name brands, but our aim is by the year 2027 end, we should have in our portfolio at least 5,000 crore brands, if not more.
Right, I want to talk about your next category foray that's just on the anvil with packaged water under Campa Sure. So, you know, when can we expect this to be in the market? If you can help me understand that. And what's the strategy here? How are you looking at disrupting the market with the price points?
So even when we launched the first water brand, which is called Independence, we launched extra quantity of water at the same price as the market. Everyone used to offer 1 liter at 20 and half a liter at 10, and we offered 750 ml at 10 and 1.5 liter at 20. So that made sense for us because the taxation permitted only that. But subsequent to the government really giving us that great opportunity by reducing the GST on this product, we said we should also go with the same size as the market, which is 1 liter and half a liter, and we have offered 1 liter at 15 rupees, and half a liter at 9 rupees. And this is what we said we will go under Campa brand as an umbrella brand, with making it Campa Sure, because that gives us that will give instant recognition in the market. I think as Campa Sure, the first bottle will be rolled out in 3 days' time in the north. And then we believe it will take us 6 months to get it rolled out everywhere in the country.
Well, a very interesting conversation there with Reliance Consumer Brands. Well, some of the pharma stocks continue to do quite well. Remember, the relief on the statement coming in that generics may not be subject to tariffs is something that has aided the pharma pack upwards today, and the Nifty Pharma Index now up over 1%. Another stock on the radar from the pharma pack is Laurus Labs. That particular stock has gone up and reached the day's highest point. Remember, earlier today we spoke to you about and we reported about how Hetero India, which is an unlisted company, was facing significant challenges as far as regulatory compliance was concerned. And analysts have pointed out and experts have pointed out that there are significant product overlaps that Laurus Lab would enjoy. and on the back of that, Laurus Labs up almost 2.5%. Another company that could potentially benefit is Aurobindo Pharma. Aurobindo Pharma too is doing quite well in today's trading session. Some of the other stocks that are doing quite well are some names from the capital goods and defense pack. Have a look at Bharat Electronics. That particular stock has moved to the day's highest point. And other stock is Larsen & Toubro. Remember, this particular company has seen significant order wins in Q2, especially from the Middle East. And on the back of that, that particular stock too is doing quite well in the session. But with that, it's all the time we have on this edition of Midcap Radar. Mutual Fund Corner when we return.
Hello and welcome. You're tuned into MF Corner. I'm Sonal Bhutra, and on the show today we are going to understand everything about Bandhan Aggressive Hybrid Fund, understand the strategy, the composition, the returns and the outlook going forward as well. Just to give you a brief before we introduce the guest on the show today, Bandhan Aggressive Hybrid Fund, that was the date of inception is 30th December 2016, and since then it has seen a rise in its assets under management, which now stand at 1139 crore rupees. It is a fund which has around 75 to 80% exposure to equities. The rest is in debt, that is 20 to 25%. Both equity and fixed income portion of this fund are actively managed by the fund managers. In terms of investment approach, they look at 4 themes, and this is something that they're bullish on as well. This is recovery in consumer discretionary that they're focusing on, the domestic capex cycle, and also companies benefiting from supply chain shifts. That is a theme which is undergoing globally as well. Also, they are looking at domestic healthcare as one of the themes that they are bullish on. The other one is telecom, where balance sheet repair is already underway according to the fund managers. In fact, if you look at the performance, 3-year performance in terms of a return on the SIP has been 14.6%. 5-year has been 14.3%, which compares with the index returns between 11.1 to 11.8% in the same period. So to understand the strategy, the differentiators, the outlook going forward, let's welcome Prateek Podar, who is the Vice President of Equities at Bandhan AMC. Prateek, good afternoon. Thank you so much for joining us today. Well, we've seen the performance of this fund, what the themes that you are bullish on as well. What's the biggest differentiator of the Bandhan Aggressive Hybrid Fund versus other aggressive hybrid funds which are already in the market? What do you think is the unique proposition that you offer here?
Sure. So look, without getting into what peers do, let me just talk about what we do, right? So essentially, the way we think about this fund is that you should generally have very high levels of equity. So typically for a aggressive hybrid equity, the range is 65 to 80% being equity and the rest being debt. The way we manage is generally we keep equity levels to the higher end, on the higher end of the band. So that's one thing which we do. The other is we also take substantial active risk. Typically, this could range anywhere between 40 to 60% of the fund. And lastly, what we have also done is we have looked at our investment philosophy, and the investment philosophy is to have a long-term approach, have deep research, and then as well as have a diversified set of stocks so as to manage your risk. So all these 3 things combined, I think that's how we manage the hybrid aggressive equity fund at this point of time.
All right. So, you've said, of course, both equity and debt portions are actively managed. What does that mean in practice? How often will rebalancing happen? At what juncture do you think, yes, we need to rebalance right on? And does that happen with the debt part as well?
Sure. So there are 2 parts to this question, right? So first is what should be the ideal equity level? As I just said, we generally remain in the band of 75 to 80%, and the rest being debt. And then within equity also, you look at which sectors to go overweight, go underweight, right? So that's the way equity portion is decided. Now, the beauty about hybrid equity or hybrid products is as and when equity rises, automatically the levels of equity go up, and which means that you need to rebalance and get them down to your target range, which could be anywhere between 75 to 80 in this case for us. And the rest is then debt. And it happens vice versa also, right? Whenever equity corrects or in drawdowns in markets are inevitable. So you will see some drawdowns and you see equity levels going down. We would again rebalance, and it's a natural rebalance phenomena where you would see, equity levels again going back towards the target band of 75 to 80%. So that's how we manage, or, it's actively managed, wherein depending on how market moves, equity levels move in the range of 75 to 80%.
Okay, we take that point. So in that case, at the end of the day, anybody would want to see what kind of returns can investors realistically expect over the next 3 to 5 years. We've seen that 14% mark in the last 3 to 5 years. Considering the equity cycle that we are in, the interest rate cycle that we are in, will you be able to mirror those returns?
Look, I cannot comment on the future returns for sure. What I can do is I can talk about my investment philosophy. As I said, our investment philosophy dwells upon having a quite long-term approach, right? So generally we are buying businesses and the idea is to buy them from a 3 to 5 year perspective and not worry about the next quarter or so. That's one. The second is we rely a lot on our research capabilities internally, and that gives us conviction to hold on to them even during drawdown phase. And lastly, to manage risk, as I said, we have a diversified set of stocks as well as we diversify across sectors. We don't take big macro calls, or at least when I run the fund, I don't run the fund on big macro calls. So the sector deviations are quite limited. Essentially, our ability to generate returns is a function of the security selection which we do. So these are the three bases on which, we try to generate returns. In terms of future look, I think the standard practice applies that you can't predict future, and past performance is not a guarantee of future returns. So from that perspective, you'll have to excuse me on that question, but typically this category, right? The beauty about this category is that you have a blend of equity and debt, which means that for a new to market customer or an investor, this is a very good category to get in because the volatility is far lower thanks to the debt component. And historically, as you said, this is a category which has given you Nifty-like returns with lower volatility. Maybe if you have a 3 to 5 or slightly longer time horizon, I think maybe it's a fair assumption. We'll get to that, but it looks like it's a fair assumption that you should get Nifty-like returns.
Yeah, we take that point. And as you rightly pointed out, the past returns are not something that should be taken into consideration to predict what future returns can be. And of course, nobody can time the market moves going forward as well. But what kind of churn will we see if equities correct sharply in the short term, say a 10 to 15% drawdown? That is something which is obvious could happen. Equity is a high risk investment like that. But what happens to the changes that you see in the portfolio there?
Yeah, look, drawdowns are inevitable. That's the nature of equity markets, right? It is not linear. It does not go up every day. The beauty about this fund in general or this category in general is whenever there are drawdowns, your equity levels automatically go down. And on sharp days where there is uncertainty, the prices are quite attractive. The valuations are quite attractive. And because the debt component goes up, you can obviously dip into your debt component and try to rebalance and go more towards equity, right? Which means on those particular days, you need not, it's very easy to buy on those days when the markets are in correction mode. And then vice versa also happens when there is, people always say that you should buy fear and sell greed. This is exactly what this hybrid equity product does, right? Whenever there is greed in the market and equity levels are slightly above our target range, we would again go back and rebalance, and vice versa. Whenever there's fear, we'll go and buy. So from that perspective, I think it's a great category.
All right. So, the fund's top equity holdings, Pratik, include HDFC Bank, we have Reliance, ICICI Bank, Infosys, and Bharti Airtel, all of them largely large caps. Will this remain a large cap bias portfolio, or we'll see shift to mid and small caps over time? At what level do you think you need to make that majority of the shift? Because there are periods where mid and small caps outperform the large caps by a big margin. That is what we saw in 2023. If that is something that you expect in the next year as well, do you drastically change the composition?
No, fair question. The way we think about allocations to large, mid, and small is again a function of valuations. Today, we believe that large caps offer you a slightly higher margin of safety versus mid and small caps. Having said that, look, if you see just the equity portion, right, 60% of the equity portion is large caps, and the other is spread between mid and small caps. So it's not that we are entirely towards large caps. I think we have a balance between large, mid, and small, but obviously slightly over-indexed towards the large cap component part of it. Again, as I said, during sharp drawdowns, and we have done this historically, maybe a couple of months back when there was this, let's say in the period of Jan to March, where we saw mid caps and small caps correcting brutally and the prices became very attractive. You would see us going away from large caps and moving a bit of our allocation away from large caps towards mid and small caps. And during euphoria phase, we kind of, do the other thing, which is move away from mid and small caps, which we have been doing in the last 2 months, to be honest, and then go towards large caps. So that's an active part of the strategy. You keep on evaluating risk reward at all points of time, and basis the risk reward, you kind of position your portfolio on the equity side. On the debt side, I guess the way it works is internally we have a view on the interest rate cycle as well as the spreads. And basis our view on interest rate and cycle, we actively manage durations and allocations between AA, AAA, or the sovereign bonds, right? That's how the overall allocation or this fund is run.
we'll understand fixed income part also in greater detail, because we often talk about equity, not understanding what kind of balance the fixed income part of the portfolio can give your overall return as well. But for now, we'll take a quick break. On the other side, we'll continue our discussion on aggressive hybrid fund, which is an offering from Bandhan AMC. Welcome back. You're still tuned into MF Corner. We have with us Prateek Pudar, who is the Vice President of Equities at Bandhan AMC, and we are discussing that aggressive hybrid fund. Prateek, we spoke about the composition of the fund, the constituents that you have as well. And you're on the equity side, you've identified 4 equity themes: consumption recovery, there's domestic capex, healthcare, telecom revival as well. Is there any particular theme you see driving the next leg of returns? What's the conviction behind all 4 of them? Anything which will work in the near future? What is a long-term theme? If you can bifurcate all these 4 themes for us.
Sure. So look, we've been bullish, or we've been quite vocal about consumption as a theme. And in fact, even before GST, our view was that consumption should do very well, led by, there was this monetary policy push where income tax rates were cut, the interest rates were cut. And then you also had a favorable monsoon. So our view was that after or closer to the festive season, you should start seeing consumption, or especially urban consumption, coming back. And in addition to this, next year, you obviously have this 8th pay commission also, which again is a boost towards consumption. So that's point number one. The GST just added fuel to fire. So the GST rate rationalization, in my view, just added fuel to fire. So I'm of the view that in H2, you should start seeing consumption coming back, especially urban consumption coming back, and even rural should follow. So that's one sector which we still remain quite constructive on. Apart from that, I think energy transition is something, again, we have been vocal, but energy transition is something which I think will continue to do very well from a medium-term perspective. And this is, I think, not even an India theme. I think it's a global theme where the world is actually moving away from molecules towards electrons, right? So the investments into grids, the renewable investments, proxies to these companies, I think that entire basket should do very well in my view. So that's the second big theme I like. The third is obviously healthcare. It's a very well understood theme out there. But what I see is that the disease burden in India is increasing. And especially if you see the population, while everyone talks about demographic dividend, we need to appreciate that the cohort of population above 50, 60, and 70, that's growing at a faster rate, which means India is aging. And the moment you age, the wallet share towards healthcare spends increases disproportionately. And it's not even healthcare, it's also towards insurance, retirement, etc., right? So that entire bucket is something where, or if you can find investment opportunities on those themes, I think that's a sweet spot to be in. And healthcare sits right there, right? You need, I mean, even today, access to good quality health infra is very limited in India. And in my view, this is a theme which should continue to do well over the medium term. And it's quite secular, should not have, I mean, this sector does not have any impact with what happens on a macro level. Generally, it's quite resilient from that perspective. So that's another theme which we like. And lastly, as you just called out, telecom revival is something we were bullish on maybe at least a year ago. And I think it's played out. Most of it is played out. I'm not sure incrementally if there's a lot of money to be made in that sector because it's fairly priced today. Two sectors which or some of the sectors which I think can create the material alpha for you from a 3-year perspective are actually these large or, select large and mid-cap companies which were, and they're spread across sectors, right? It's just not, let's say, maybe across consumers, industrials, domestic cyclicals, global cyclicals, where earlier they were quite frothy in terms of valuation. And just because of narrative change or maybe small short-term growth blips, the valuations have come off sharply. And if you have a 3 to 5 year view, again, I feel that these so-called forgotten names can really create alpha for you from a 3 to 5 year perspective.
So, you spoke about valuations, you spoke about what's happening in the mid and small caps. Some of them, it's not always sector specific, they could be spread across sectors. So in that case, what valuation discipline will the fund follow? Are you comfortable, say, paying premium valuations for growth stocks? You spoke about how telecom, maybe it is priced in completely. So do you take out some money from that? How will it be structured in terms of valuations then?
Yeah, so without getting into this growth /value /momentum narrative, the way I think about it is potential IRR, which a security can offer us over a medium term, right? And if we feel that IRR is below our hurdle rates, we generally look to book profits and move into securities where we get higher risk reward, right? That's how we generally look at security selection. From a risk management perspective, as I said, we typically keep a tight leash on active risks, and as well as we are well diversified. So these three combined, where essentially security IRR, what is the potential IRR a security can offer in the portfolio, the active risk, and the diversification of securities across sectors, all these three combined are the way we think about portfolio construction and management.
All right, take that point. So that was the equity part. You spoke about the themes that you are bullish on, some of them which could work out from different sectors as well. Let's talk about the debt book. What percentage of the debt book will be sovereign versus AA or AAA corporate papers? For anybody who's starting out new, if you can just give some basics of the debt side of things, because, you know, everyone just talks about equity returns, but there's so much happening in debt as well. Is it the right time to look at debt funds holistically as well?
Sure. So look, in our debt fund, the allocation is between AA, AAA, and sovereign bonds. Again, this is, as I said, managed quite dynamically. It is not something which is a very passive. So typically the fund house would have a view, or let's say the team has a view on where are we on the interest rate cycle side, and what is the view on credit spread. Basis that the allocation towards AA, AAA securities as well as sovereign bonds is done. From a holistic perspective, whether someone can consider AA, AAA, my personal view is interest rates might see some bit of correction, and having long duration is something which someone can consider. So that's the way I would think about it. But again, as I said, this is dynamically managed in-house by a fixed income team.
So, okay. So the fund will take credit exposure or duration calls to boost returns in that case, right? And also currently has an average maturity of around 12 years. That's quite long, right? So how do you manage the interest rate risk here in that case, especially if we see yields moving higher?
Yeah, so as I said, it's dynamically managed. And again, it's a function of what our fixed income team, the view of our fixed income team is on the interest rate cycle. And as and when we also have internal caps, it's not that, you know, we will run these high durations at all points of time. There are internal caps already placed in, and whenever we see that the risk reward is not that favorable, we might lower our duration. So the last published portfolio obviously has as you see, has higher durations, but as I said, it's actively managed. So you could see that in the next couple of months, the duration might go down.
Yes, and in the interest rate cycle that we are in, yes, RBI did not cut rates this time, but the expectation is depending on inflation, depending on what demand scenario is like, and the GDP growth as well, there could be some cuts going forward. So a lot depends on that as well when it comes to debt funds, the interest rate cycle, and a lot more. Prateek, a pleasure speaking with you today. Thank you so much for joining us today and explaining to us how this fund works, who all could look at this fund, and the split between equity and debt as well. It was a pleasure speaking with you. Well, with that, we have completely run out of time on this edition of MF Corner today, but stay tuned for Closing Bell to take you through the last hour of trade.
market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng continues to underperform, but the Taiwanese index is now seeing some buying coming in from lower levels.
Noel Tata, the chairman of Tata Trust, N. Chandrasekaran, the chairman of Tata Sons, met with Home Minister Amit Shah and Finance Minister Nirmala Sitharaman in New Delhi.
They're 30 points higher on the GIFT Nifty. 25,074 on the Nifty. Nifty Bank is absolutely flat.
I do think difficult to expect very big returns over next 1 or 2 quarters.
Regulation has always followed what is possible given the environment.
There is news which is circulating that the Trump administration is not planning to impose tariffs on generic drugs from foreign companies.
We're creating a new, modern partnership focused on the future.
All Tata trustees unanimously believe that Tata Sons should remain a private entity.
They say that there was an unregistered testing laboratory that was located outside the official facility of the plant.
Decent gains on the markets, but we are off the highs that we saw for the day.
Well, that is the day so far. It's turning out to be a pretty okay day. Complete reversal of yesterday's 60-70 odd point cut. We're up that much as we enter the last hour of trade. This is Closing Bell, coming to you live from the CNBC-TV18 Motilal Oswal studios, and it's a two-horse show today. I'm Prashant.
Two-stud show. Call it a two-stud show. Come on, you just can't call it a two-horse show here. But, be that as it may, the markets, there's this term when you're just walking around, pacing up and down between two poles or 2 points. That's exactly what the market seems to be doing yesterday. The higher end of the range closer to 25,200, lower end of the range as soon as it goes towards 25,000, just does an about turn and then comes back. Right now we're somewhere in the middle, 25,125, 80 points higher. Nothing really to worry about.
Prateek of Kotak put it, he said it's liquid oxygen.
Liquid oxygen. Okay, you call it a liquid oxygen, but
liquid aapko, you remember the...
Jeene nahi dega, oxygen aapko marne nahi dega. The other way around, figured that.
No, that's
anyway.
Right.
Sorry?
That's the right rendition.
No, liquid won't let you die, oxygen won't let you...
No, it's the other way.
Whatever. The market is as confused as we are about this dialogue.
No, we're not confused. You got it right the first time. Anyway, I think we're up about 25,130 is where we are at, and it's looking pretty decent. But even yesterday when the market was down 70, just the number of single stocks which are moving up on volumes is quite heartening to see. So just a quick look at what's lined up here, right, over the next hour or so as we head into market closing. We'll, of course, talk about markets, firm trade, last hour, and Nifty comfortably perched above 25,100. Autos are trading with a flat to negative bias, but pharma and metal counters are leading the way. Regulatory pressures brewing for unlisted pharma player Hitiro. 6 observations from the US FDA. Shares of Loris are higher on the back of this, and we'll tell you why in just a bit. Vivek's story that comes up in a bit. TCS will report numbers shortly, and we've got interaction lined up at 5 p.m. So we'll get you what the street is penciling in. If there's a beat, what about margins, etc., etc. So that's going to be the other focus point. We'll also get you a story on Policy Bazar, that is PB Fintech, which is going to be with Yash in a bit from now. But how should you position yourself in the last hour? That's the question. Mitesh is here to help us with that. Mitesh, what do you say?
Good afternoon, Prashant. So, I was highlighting the fact that as long as we manage to hold 25,000, I think declines will be chances to possibly buy. And yesterday we had a low of 25,000 and 22, and today I think it's 25,024, so practically the same low. And also is the fact that a couple of days ago we had highs of around 25,220, and today also, I think we're just kind of close to that 25,180 was the high today, 182. So I think broadly it's a market which is good. The structure is positive. I think getting past 25,220, 250 should add more strength, and we could then possibly look at 25,400, 450 zones. But I think there's no extra burst of momentum. So you won't get those big moves which were visible a couple of weeks back. So the idea should be to trade more on the long side with stock specific bias, or on the index if you want to trade. Declines like we had yesterday and today are the chances to buy, where you have at least favorable entry point and a good risk reward equation. For the timing, I have two software names on the buying side. Tata Alexa is a buy with a stop at 54.89 or just below 54.90 and a target of 56.75. And Wipro is a buy with a stop at 241.90 for targets of 255.
Right. Mitesh, just one question on the market breadth, because over the last two trading sessions, the breadth was more in favor of declines. And today, at an index level, the Midcap index is doing a lot better. We do have, the Nifty just about 0.4% higher. The Midcap index is up 0.8%, taken high by a lot of other individual names like you were pointing out. But if you look at the broader market, the breadth is still split right down the middle. Those crisscross lines come up on the screen. They've been stuck to each other for the last 3 hours, 3.5 hours or so, with as many stocks declining as advancing. What would you make of that?
Again, the breadth is something, which typically I don't give much of weightage to, given the fact that it's still about 50 indices, so 50 stocks which make up the index. But broadly, if you have a very positive breadth, that's a good sign and signals more participation. But as I said, I think this is not a market which is giving you that burst of energy. So maybe it will be quiet and slightly, subdued kind of movement.
Right. A range is what you are expecting as well, though metals are doing extremely well this afternoon. JSW Steel has moved higher. The metals index actually comes up for you, has been trading fairly well and is at the high point of trade as well. But on derivatives trading, we have SEBI sources saying that consultation paper is taking time due to the consultative and inclusive approach. Many in the financial markets earn their income through derivatives trading. Regulatory decisions must consider impact on individuals' incomes and livelihoods. Speculation and derivatives, integral and legitimate components of financial markets, are not inherently negative, as a result of which the SEBI is exploring multiple steps to protect retail investors from potential losses. So we do have, this very interesting space that we're in, Prashant, right now, because on the one hand, yes, it contributes to a large part of the volumes, and in turn, as a result of which, revenue and income for a lot of the participants of the market. But on the other, there is this fear that a lot of people are losing money on this as well. So it will be a very interesting regulatory, stand that would come from this.
Yeah. No, Mangalam, the sharp takeaway from this is that there seems to be a change in the thought process at SEBI. I mean, that's what it suggests. Just think about when, we had the earlier chairperson.
Makes sense.
I mean, those reports about how many people are losing money, it was very clear. I mean, actually, till recently, that, the idea is, and by the way, we have the SEBI chairperson on record on camera saying that we want to introduce this consultation paper, focus on longer tenure derivatives, so the idea was move away from these weekly. By the way, this is all related to the weekly options debate, right?
Yep.
And now with, it's not, obviously, it's difficult to say what exactly there will be a consultation paper.
Right.
But two things. One, it's not happening now. It may be delayed.
Yep.
And, the story, all source space essentially saying it's because they want to be inclusive, consultative, and look at the other side also, which is people who are actually dependent on this. So, I mean, my sort of takeaway, and Yash report got the story, and probably we get him on the phone line as well, that there seems to be a change in, thought process, thinking, etc., which is then in a way positive for the intermediaries, which is brokers and exchanges. BSE, I think, is up about 3.5%. Angel, many others actually in the system.
We're seeing all of that. Will be very, very interesting to see how this change in stance, so to say, or at least the approach plays out in terms of regulation and what comes of it. But we do have Dharmesh Kant of Chola Securities joining us now for his view on the markets. Dharmesh, we're in a bit of a range right now ahead of, Diwali, the festivities, result season, most importantly. What are you penciling in this time? From a business standpoint, do you think that maybe the second quarter is a washout and the street will look beyond that and look at the positive triggers that we have third quarter onwards?
Yeah, good afternoon, Mangalam. I think second quarter will be a tad better than what the expectation was earlier. I mean, a couple of months back, it was expectation of 5-6% kind of EPS growth on the Nifty 50 companies. But now I think with, last 10 days being much better than what it would have usually been. So I think it can be around 7% kind of an EPS growth. The biggest problem is second quarter is not a problem. The problem will come with the third and fourth quarter, where even the base effect was high last year. And this time around, since bulk of the heavy lifting has been done earlier in the second quarter itself, because Navratri fell in the month of September. Last year, Navratri and Diwali was both in the month of October. I do think third quarter will be a challenge. So, I mean, proof of pudding will come only in the month of November. So, market will be sluggish. It will be range bound. It will hang around where it is right now, 100, 200 points plus minus. And then after Diwali, I personally see some, profit taking and selling in the market coming into play.
You know, that exchange weekly option story that we were discussing, Dharmesh, good afternoon.
Yeah.
Any thoughts on it's if there is a change in thinking and it materializes into what is then finally decided on this weekly options bit, which has been such a big revenue generator and a volume generator for everyone, what do you think? Stocks at play?
Yeah, good afternoon, Prashant. I think there are three parts to it. One is the government or the regulators on the fiduciary capacity. Other are the intermediaries where we also belong. And the third is the client level. So my thought is that direction has not changed. Stance has also not changed. It's just that delaying the pain. So subsequently, how SEBI's proceeding is earlier it could have been done in a 15 days or 1 month kind of a time frame. Suddenly a notice comes and everything is stopped. Now I think they are willing to go by time, 6 months, 7 months, 1 year they want to give and see whether investor education is good enough to take care of clients on the trading part. Earlier it happened all of a sudden post-COVID and people did not realize that markets can be harsher at times and then the losses were there. So if we as an intermediaries are able to convince the government to show that on the in the black and white as far as clients are concerned, that investor education is helping them to tackle this market in the right way, then there may be a change in stance. Otherwise, I don't think so. It's more of a time buying tactics and giving time to all parties to get this more in a sorted way. But nonetheless, this will definitely be negative for direct brokers who are into trading and investing activities, facilitating their clients. For them, it is not that good. But infra players, I mean, SDS, CDSL, exchanges will continue to have a long-term investment bet in place.
Right. You call this a time buying activity. So do you think that till such time that time is being bought, these stocks will continue to do well? Because, if the regulation were to come today, there will be earnings loss from today. If the regulation is not coming today and it comes, say, in whatever form, it comes, say, a few months later, a few years later, then till then, there is that potential of increased incremental earnings.
Yeah, definitely, sure, Maglab. I think more the time is given, more the measures will be less harsher. And if, as we have been thinking that, retail clients will realize more prudent way of trading rather than, just going berserk on few tips and here and there. So their education itself will take care of the damage which has been done. Then definitely this, incremental revenue earnings will be in place. We have seen this. The last month gone by, the numbers were far better than what it was. One was the market was better, but at the same time, the numbers also started tickling in quite well. So from that perspective, direct plays like, Motilal Oswal and the companies of the likes will benefit on the stock price action. Angel One is one of them. But still, my suggestion would be to create a basket of AMCs, infra players, the broker. Maybe AMCs can go with 40% kind of players, like 30%, and back percent to the brokers and play this market by creating a basket rather than going on individual stock tips.
No, point taken. There's another big story, right? And this is a CNBC-TV18 exclusive. There's a huge US FDA shadow over Hetero Labs. It's unlisted, but it's a very large company, private company. US FDA has issued 6 observations to this company, but there are implications for listed entities as well. Names like Loris, Divi's, and maybe 1 or 2 more. Vivek is going to tell us what the story is about, and of course, where does this go from here? Vivek.
Well, that's right. Hetero Labs is quite a large player, especially as far as the API market is concerned, and especially large player as far as the ARV market is concerned. So the US FDA inspected the company's Unit 9, popularly known as the Nakapalli facility in Andhra Pradesh, and the inspection was conducted between September 19 to September 26th, and the US FDA then issued a 14-page Form 483 with 6 serious observations to the facility. We'll quickly run through the important observations. The first observation in the Form 483 implies that the quality control unit procedures were not fully followed. And the most important statement over here is that the US FDA says that there was an unregistered testing laboratory that was located outside the official facility of the company. Along with that, they say that finished APIs intended for the US market were released to off-site API warehouse without documentation. A few procedural observations are there, number 3, 4, and 5. But if you look at the 6th observation, there's again an observation stating that there was failure to document out of specification results obtained from this particular unregistered facility. So these appear to be quite serious in nature. We spoke to quite a few experts and they believe that there are possibilities that there could be a certain escalation as far as this particular Form 483 is concerned. Now, as far as the implication for listed entities are concerned, Hetero is the number 2 player, especially when it comes to the ARV product list, and some of the companies that could benefit in case supplies are disrupted from this particular facilities include names like Laurus Labs, remember quite a large player as far as the HIV ARV market is concerned, Laurus Labs as well as Aurobindo Pharma. In fact, Nuama says that Aurobindo Pharma and Laurus could benefit in case there is an escalation from this particular site of Hetero. It's a large facility and one of the largest actually as far as the API manufacturing is concerned.
Yeah, so the common, I think Hetero is, Vivek, one of the largest, as you said, antiretroviral makers, right, for HIV, etc. And Laurus is also, so that's a big one where there is overlap. And that's, and just one thing, Vivek, if you can, you said there was an additional facility where this unsupervised facility where products were being tested. Is that what they're saying? This seems pretty serious.
That's right, so that is something that we spoke to a whole host of experts, as far as this is part of observation 1. So what it says is that there was an unregistered testing laboratory. So, this is something that appears to be quite serious, and it does appear to be, as per the tone of the Form 483, it appears as though the US FDA actually knew about the existence of this particular facility, even prior to inspecting. So there appears to have been some doubts before they came to inspect this particular facility, and that is, in fact, the first statement they've mentioned as part of observation 1. And, it'll be important to see how the company responds to the Form 483, and post that, what is the kind of action that US FDA takes.
Yeah. Vivek, thank you very much for that. Dharmesh, any thoughts on Laurus?
Now, first, these observations are quite serious, Prashant. I mean, this is amazing to know that such kind of a facility, was there. I mean, if the beneficiaries can be Laurus, Aurobindo, and others who are into the same segment and into API intermediaries, Laurus has moved quite a lot. I mean, if you see the price traction, it has been too strong a price traction. Valuation multiples are way beyond the reach to be justified. And I do understand that CDMO business has picked up. The management has guided for a better margin going forward from 24 to 28, 29%. And they've also got a land facility where they have serious plans of investing more than 5,000 odd crores, and corresponding benefits will fall to them. But to my mind, given the news which has been circulating that there won't be any tariffs on generic products which are imported into US, there I think Aurobindo Pharma stands a better chance, and the valuations are quite attractive at this point of time. Q1 was not that good, but I think going forward for Q2, the things are likely to pick up for Aurobindo Pharma. So that's a better play to bet on, and maybe a Lupin. So where the Q1 was excellent set of numbers, and it's likely to continue with those set of numbers. So 2 top pharma pick from our side is Aurobindo and Lupin.
All right, Aurobindo and Lupin. Aurobindo actually doing quite well in today's trading session. We'll come back to you in just a bit, Dharmesh, to talk more stocks. As of now, let's get a big exclusive that we're tracking. Sources close to the Tata Group tell CNBC-TV18 that all trustees are confident that the deliberation of the last few days will lead to a harmonious working relationship. Let's bring in Parikshit, who is getting us details on that one. Parikshit, there were a few days of instability, some fear, but now it seems like things are well on track. And what a day for them to be on track, or look like be on track.
Ahead of Tata Trust board meeting on October 10, sources close to Tata Group are hoping that differences between the trustees will be ironed out. Sources familiar with the matter say that all trustees of the Tata Group have had some time to reflect over the developments of the past few days. They told CNBC-TV18 that they are confident that deliberations of the last few weeks will lead to some sort of harmonious working among Tata trustees and Tata Sons board members. We also learned that contrary to some reports, there was no difference among trustees on the appointment of Noel Tata as chairman of Tata Trusts. Noel Tata was in fact appointed as chairman of Tata Trusts unanimously. All Tata trustees unanimously believe that Tata Sons should remain a private entity, even as the RBI had mandated a public listing of Tata Sons by September this year. Sources saying that the government was obviously concerned about differences among trustees and therefore held a meeting with members of Tata Trust and Tata Sons on Tuesday. Apart from differences over the appointment of independent directors, including Anita George, Tata Group trustees were divided over the resignation of Vijay Singh, the former defense secretary, as nominee director on the Tata Sons board, and also the manner in which he was almost led to taking a decision on resigning. While the appointment of nominee directors above 75 years of age is reviewed annually, some believe there was no provocation or reason for Singh to leave the Tata Sons board, considering his immense contribution. We have been told that Tata Trust board meeting tomorrow will only look at routine matters, including disbursement of funds for charitable purposes, including a hospital, and none of the contentious issues and differences that have played out over the last few weeks will be taken up in this meeting.
All right. Thanks a lot for that, Parikshit. So, obviously, sounds better than what it was over the last few trading sessions. Just watch out for CAMS. The company has given an update on the exchanges saying that UPI Offline Plus has been designed for... they've launched a payment aggregator business, CAMS Pay UPI Offline Plus, which will obviously help on UPI payments, etc., on an offline basis. So, that's a positive as against regular UPI payments, which you have to do it only if you're connected to the data. So offline payments would be good. The stock at the high point of trade. But Dharmesh, today the metal space is doing extremely well. Do you think that maybe we're in for a bit of a cyclical up move on the metal space?
Yeah, definitely, yes, Bangla. I mean, they have been doing pretty well and most of them are at all-time highs. But we do expect this momentum to continue for the balance of FY26, that is second half. Because activities have been picking up quite well in the domestic front, and Government of India has safeguarded domestic metal companies as well from dumping of steel and other ferrous products. So I think both non-ferrous as well as ferrous is likely to do well. Copper prices are already running quite high. And, if you are playing a Vedanta Group, so Hindustan Zinc, then silver prices are quite high. Though the numbers reported for the last month was not that high because of the productions were not to that extent. But I think they are likely to catch up. So in the entire metal space, the top three pick which we have been focusing on, one is the Hindustan Zinc because of its silver and lead play. At the same time, we are focusing on Hindalco for copper, aluminum, and other metal plays into it. And the third is the JSW Steel, purely from the domestic consumption point of view. So all these three, though expensive on a 10-year map, if you look at, they are almost nearing the +1 standard deviation kind of a P multiple. But extension of the same is likely to be there in place going forward into the rest of the year. So 10-15% kind of an upside from here till March is likely on the cards.
MCX, we were talking about BSE, etc. MCX is up 6%. MCX, I think, also offers weekly options. I'm not sure if this is the same reason or there's something else.
I think the reason for MCX is that there's a fair amount of trading activity on gold and silver, given the sort of prices, etc. So, and this one's the only one which has, access to commodities as against the other ones right now, with the kind of liquidity, etc., which is available. So I think the street is playing.
Why today?
Why today? Well, that's anyone's guess. That's the market that we're in.
Is there? I don't know. I mean, there's, but I just figured that they also offer weekly contracts. Or I don't know if there's also that added reason. You're absolutely right. I mean, silver, gold, absolutely berserk price movement. The other one is Black Buck, which is Zinca Logistics. I mean, that's the company which is trying to organize trucking. It'll come up on your screen. 8.5%, 675 is where that is now trading at. 30 seconds. I don't know if you have any thoughts on MCX or Blackbuck, Dharmesh.
MCX, Prashant, what is happening these days is people are hungry for any good news. So any trickle of any better news is there. A lot of liquidity is there in the system, and because of illiquidity of the stocks, the prices go up quite rapidly. But the other stock I have not tracked actively, so won't be able to comment. Apologies for that.
Speak about good news, there's none better than what GM Breweries has to offer ahead of the festive season. Because remember, this time around, we had the added disadvantage for the larger players in the form of Maharashtra liquor policy. And in GM Breweries, which has most of its sales and production in Maharashtra, they benefit from the Maharashtra made liquor policy. And as a result of which, they reported their second quarter numbers. I was just looking at the profitability. 21 crores is turned into 35 crores. So there's a big near 70-80% jump out there. And entirely all of that is led by revenue as well as operational profit. So all these factors working for them, stock up 18%.
They do bulk alcohol or branded
They
products?
do branded alcohol.
Branded
They do a lot of country liquor. So GM is, I wouldn't know the actual name, etc. But Narangi is one of them that they sell in all of Maharashtra.
I'd be worried if you know the names, Bangla.
I'd be worried if you consumed it.
Okay, 18%, 900, that's a big mover, and very large volumes as well, by the way, as we speak. You know, talking of names which are going up, there's one name which is going down, but it's kind of sort of retracing an astonishing rise, NetWeb, if you can pull that up. NetWeb is down almost 8%. I'm not sure the last time the stock was down this much. I don't think there's any news flow, maybe except the global news, right? Which is that, NVIDIA, OpenAI tying up with AMD as well. AMD is a competitor, much smaller competitor to NVIDIA. And NetWeb, of course, gets its GPUs from NVIDIA. So 4023 coming off very sharply. Take a quick commercial break. Dharmesh, thank you very much for joining us. We're back with Mithun Avast of Kiva Advisors on the other side.
Well, the market's picking pace now, 120 points for the Nifty. A couple of stocks doing well. We have Balaji Telly, which is now spiked in just the last few minutes. Schloss, which is the Leela Hotels, also off lows, was in the red for a bit and thereafter has moved to the high point of trade as well. But we've been talking about the Tata Group. Hormaz is standing by. He has, with us, the spotlight on the top movers in the market. Hormaz, tell us more about the ones which are buzzing in the last hour of trade.
Putting the spotlight on the Tata Group stocks after a year after Ratan Tata's demise. And it's not been the best of the last 12 months for the Tata Group, particularly for a lot of its larger leaders. Now, from 33 lakh crore as of the 10th of October of last year, the current market cap of the Tata Group stands at around 26 lakh crore. And that's a downtick of around 7 lakh crore gone in the last 12 months. Is led mainly by TCS, and TCS being the largest company of the group, the largest IT services company, 4 lakh crore worth of market cap gone in the last 12 months for TCS, and it's been struggling with issues of its own. The stock fell to a 52-week low as early as the 1st of October. The worst performing stock on the Nifty IT index from when the index had made its peak in December of last year. The stock is down around 30% from those levels. Tata Motors as well is down 30% in the last 12 months. That stock too has lost well over 1 lakh crore in market capitalization as well, and it's struggling with issues of its own, right, facing JLR related issues and so on. And that is why, even because of the GST reforms, the stock did not do well even during those times. Now, a lot of the other Tata Group names that have struggled over the last 12 months, Trent is one of them. Recent entrant in the Nifty 50 index, down 43%. Incidentally, it is in October of last year that the stock had made its record high in excess of 8,300, among the worst performers on the Nifty so far this year. And it continues to struggle with slowing growth in comparison to the guidance given by the company early on. So Trent, of course, being one of the underperformers. Tata Technologies as well, down 32% now in the last 12 months. That too has lost around about 14,000 crore in market cap. And from its post-listing high, the stock has almost halved and also continues to struggle with some key issues faced with some of its top clients as well. Some of the other underperformers in the Tata Group, look at Tata Elxsi down 23, Voltas down 20, Tejas Networks, Tatacom, Nelco, all of them declining anywhere between 20 to 30% in the last 12 months. But there were some names that stood out. Look at Titan, and it hasn't done much, but it hasn't declined in comparison to its other large Tata Group stocks as well. Tata Investment, of course, has been on a tear in the recent past, but despite the correction that it has seen recently, is still up 38% in the last 12 months. And Indian Hotels being the other one, Banaras Hotels being another outperformer, and Tata Consumer has remained largely flat over the last 12 months. So Tata Group stocks have not had the best of times in the last 12 months, led mainly by TCS, but there are certain ones that have stood the test of time as well.
Absolutely. Hormuz, thank you very much. Good wrap up of how the group has fared over the last 1 year. Mithun Aswath is with us. Mithun, great to have you back on the program. It's been a while, I reckon. I want to just start with a quick word on the IT services pack. TCS will report in an hour and a half or so, and we'll have the opportunity to sit down with the management. Do you think it'll do anything for, for itself and for the industry? And do you see, if you look at expectations, Infy is supposed to do better. There is buzz of a large order. HCL Tech perhaps also a little better. Coforge, I guess the management has been on record saying, well, they do, 5-6% kind of CC growth. What else? What's your sense on this pack, and if investors even tactically make money from here?
Yeah, good afternoon, Prashant. I think on the IT space, obviously we've seen, negative news flows in terms of one on the H-1B visa front, plus the whole impact on AI, what it will have on the IT services space. I think having said that, if you look at valuations, I think most of the large cap IT names now trade at a 3-4% sort of a dividend yield. So they're coming to the value end of the zone. So I think they could provide potentially double-digit returns from here. And in the current quarter and the subsequent quarter also, I think, there have not been too much of wage hikes. So the margins could surprise on the upside. I think the main issue has been growth, and that is something that one will need to keep an eye on. But if you look at valuations, I don't think the downside is too much from these levels.
All right, the downside is not too much from these levels. Mithun, thank you for joining in. The consumption themes, what do you have to speak on that? Because, on the one hand, staples are calling it a bit of a lost quarter because of the transition and, everything is now moved towards the third quarter and the second half of the third quarter in particular. Do you think that the street will disregard the current disappointment in earnings and perhaps start building positions for the future, near future? Or do you think they will, stay away until there is actual growth that they see?
Yeah, I think, Mangalam, if you see the consumer space on the staple side, obviously valuations are high, but there has been very tepid growth. But I think in the third and fourth quarter, you will see acceleration in terms of growth. And that could obviously provide upside to a number of these stocks because of those GST cuts that we saw. I actually also see that the consumer discretionary space is something where, the upside could be higher in terms of growth. You've already seen a glimpse of that in the September auto numbers. I think the October numbers also will be quite strong since, it's the festival season. So I think the Q3 numbers is something that you will, people will anticipate. And, the auto sector, other discretionary pockets as well, in terms of consumer durables as well, should bounce back quite well in Q3.
Right. And what about in the discretionary itself? We saw, the jewelry space. Very interesting trends out there. Gold is at a record high. Titans reported a 19% growth. On the other hand, Senco's reported just a 6.5% growth. We spoke with both Joss Salukas and, Malabar this morning. Joss says that volumes were down 20%. Malabar is saying that, people are panic buying because they think that prices will shoot up further from here on as well. Things are being pulled in every direction. What do you think of the jewelry space?
I think, Mangalam, on the jewelry space, obviously with the prices being so high, the volume growth is unlikely to be there. So it's going to be quite anemic. And we are going to see, obviously, revenue growth primarily led by value growth. So I think that space, we need some sort of, stabilization or cooling off of gold prices for demand to come back in a sustainable manner.
Yeah. No, got that. Mithun, stay with us. I think we just want to take a small detour, but very much staying with the markets, right? Take a break. We're back with Mithun. We'll also get you D-Street Chatter. We'll get you our trading calls as well. Coming right back. Okay, welcome back. Markets, of course, up 150 points. So if anything, things have picked up a little bit. Remember, we started an hour, almost about 45 minutes back, actually, with about a 60, 70 odd point pop that has become bigger. Nimish is now standing by with what he's picking up from dealing rooms and what's the chatter like. Nimish, afternoon.
Hi, Prashant. Afternoon. So to me, it looks like a powerful short covering rally. You know, if you look at the top 7, 8 or 10 F&O stocks, there seems to be a bit of an short covering element in all the movers today. For example, like one of those a lot of the metal names and all are buzzing in trade, but no specific reason. It looks like more of a short covering rally. There is a bit of buying as well from domestic mutual funds, so maybe that the DI number may look a bit sizable today. Is the overall feedback. From sector perspective, Pharma is doing good today. Of course, there is a bit of a relief rally and a short covering rally as well in anticipation of some relief for the Indian pharma companies. So that's buzzing. And also metal, as I said, there is a bit of buying as well, but a bit of short covering element as well in that particular space. So, large part of this rally, Prashant, looks to me like a short covering pullback. 50 to, on a technical level, 25,200 is the next level to watch out for. If that gets taken on the upside, you will potentially see further short covering rally. And remember, the FIs are still net short, almost 93%. So there is that cushion of FI short covering which can further happen. But today's large part of the rally seems to be aggressive short covering in most of those F&O names.
Okay, aggressive short covering is the feedback behind this move. In terms of individual names, Nimish, what's on your list today?
Well, a lot of stocks are buzzing. In fact, the broader market also seems to be participating in today's rally. Couple of stocks which stands out for me today, SpiceJet and Dynamic Technologies. Both are buzzing after potential clean-out trades. In SpiceJet, I understand one of the leading wealth fund was a seller and they've completely sold out today. And hence you're seeing a big move of 15%. Even in Dynamic Technologies, it was part of my list a couple of days back as well. PE was a seller there. Looks like that's cleaned out today. And in Dynamics, I understand one domestic mutual fund was a buyer in today's block. So disclosures could be quite interesting in that stock as well. Even that is buzzing up 13%. Inox Wind is the other stock on my list. Again, up 5% in today's market. A bit of short covering element to it as well. But I also understand one of the domestic PMS has been active buyer in Inox Wind of late. The third, a couple of real estate names which are not buzzing, so to speak, but there is some signs of delivery-based buying happening now. Soloda and Godrej Properties are not big moves like what we saw in Prestige, but at least there is some signs of delivery-based buying happening now there. And the last one is Adani Power. Again, buzzing on back of very high volumes. Even there, I understand there was a block trade and a domestic mutual fund was a buyer in that block. So that's the reason why even Adani Power is up 3% in today's market.
Interesting list, as always, Nimish. Thank you very much for that. So that's D Street chatter. How's the F&O sort of part of things looking? Nimish was telling us that perhaps there is short covering. That's the feedback that he's getting. Is it showing up in data? Mangalam has walked across to the F&O desk to tell us exactly that. Mangalam, over to you.
Yes, there are signs of that short covering, but until the range is broken for the Nifty, which is between 24,950 at the lower level to around 25,200 at the upper level, 24,950 rather, and 25,200 at the upper level, we won't see a massive short covering. Right now, it's just, the range-bound trade that we're seeing. But there are individual pockets where we are seeing a fair amount of short covering. The Nifty is being powered ahead by both of its engines, the Nifty Bank as well as the Nifty IT. But look at the outperformers. We have the pharmaceutical space and the metal space. That's where we are seeing a powerful amount of short covering. And that's witnessed in the buzzing stocks as well. Oro, Pharma, Granules, Strides, all of them doing well. Even in the metals pack, you have Hind Copper, NMDC, Tata Steel, all of them fairly well bid in today's trading session. What this up move has done is it's given a lot of support to the bulls to go ahead and write puts. So 25,100 and 25,200 puts. All of them have seen a fair amount of writing, telling you that around 24,950 to 25,100 is where there is strong support. The 25,200 call writers, they're still active in today's trading session. 25,200 call comes up for you on the screen. A couple of crore shares in open interest out there. There has been signs of short covering as the markets moved once again towards the high point of trade. And we've held on to the lows for the last 3 trading sessions. So if you look at it, the Nifty low yesterday was around 25,000. Today's low, 25,024, pretty much in line with the 20-day moving average. Now today's high has been crossed past the 25,182 mark just from a few minutes ago. Now the important part is it should cost October 7's high of 25,221 for further short covering. A lot of long positions added on these exchange-related names. We were talking about BSE, MCX earlier in the show, that these pockets have seen big long build-up. Inox Wind has seen a lot of short covering, and we have seen in this market as well a couple of shorts being added on a few names, Uno Minda and Info Edge. stand out in particular. So by and large for the Nifty, a big short covering move only after it crosses 25,200, but individual sectors like Pharma, IT, all of them seeing some signs of early short covering.
All right, thanks very much, Mangalam, for that. That's the F&O side of things as they stand right now. Mitesh, from the last time we spoke, at least 60 points on the Nifty. What's the sense, Mitesh, and your trades?
I think, there was always this chance of this bounce back getting us to 25, 220, 250 zones. And we're practically there now. And that's an area where I would suggest if there are people with index long positions, at least take 2/3 of the position off the table, book some profits, and see if we can get past 25 to 50. I still don't have a signal on that. But on the stock side, the CG Power is something which has come on radar. I think that's a stock which is showing good traction as we end the day. So BTST here, keep a stop at about levels of 753 and a target of 775. Possibly can be looked at. And the other one is BTST Tata Steel with a stop at 175, just below it, target of 178.
Is there a trade in TCS, Mitesh? We should put the expectations out along as well, but go on.
TCS, I think, was already on the buying list earlier. I think, we had buys on Infosys, Wipro and LTIM as well. TCS, I think, was yesterday, but still looks good to me. I am looking at a target from 3120 to about 3140. Beyond that, even 3180 is possible. And once these levels are cleared, then I think we can look at a much bigger reversal.
Okay, all right, Mitesh, thank you very much for that. We'll be speaking with the TCS management, and that's going to come up a little later in the day. So you'll hear from the MD and CEO, the Chief Operating Officer, the CFO, and of course, this new CHRO at TCS as well. So don't miss the TCS results deep dive. The play out tomorrow morning at 8:35 a.m. right here on CNBC TV18. Take a break. We're back. And Ambrish Baliga is going to be with us in just a bit.
Welcome back. A bunch of stocks doing well in the broader markets right now. We do have, Zinka Logistics, as Prashant pointed out, up around 8%. Latravenues Tech, Exigo up around 6%. A lot of these graphite names also spiking right now. And Solar Industries is the other one, which from the lows has seen a spike and currently at the high point. The Nifty still, hasn't touched that 25,200 mark. Tries to move to the higher end of that range and sees a bit of a supply out there today as well. No different from there. So today's high, perhaps yesterday's high, pretty much close to that 25,200 mark. Market expert Ambrish Baliga with us. Ambrish, the Midcap index on fire today. In fact, we've seen, the red and green lines now move a little with the movement towards the green one. 1,500 stocks as against 1,300 stocks, which are declining. 1,500 are gaining. So they were stuck. Now it's moved a little. What's the stock that you would have on your radar, given the sort of environment that we're in right now?
See, the stock which I have is PI Industries. It's a leading agrochem company, also a pharma player now in biologics and CRDMO. Focused on R&D with about 700 scientists working on about 70 projects. They have about 210 patents, 15 molecules were in fact commercialized in the last 3 years. 90 plus molecules are in fact in the pipeline. And domestic agri brands are quite popular and have an extremely good reach, about 15,000 distributors, more than 1 lakh retail touchpoints. The Q1 earnings were a bit muted. Q2 is also expected to be slightly better than what Q1 was, but I think the main story would start from the second half of FY26, when we should see a decent growth. Next 3 years, revenue CAGR expected is about 10%, PAT CAGR about 11%, EBITDA margin of about 28%. Based on this, my EPS expectation for FY27 is about 140. And with this, my price target is 4,480.
That's interesting. PI Industries. Ambrish, hi, afternoon. Any thoughts on the recently listed jeweler, Bluestone?
No, in fact, I didn't track that. So a bit difficult for me to really comment on that.
That's kind of the pace at which new issuances are coming is kind of hard to track, isn't it?
Exactly.
LG Electronics IPO ends today. Closes for subscription. Did you take a look at it? Asking for some 77,000 crores in market cap.
No, that's true. Because clearly...
A big response so far. Yeah, sorry, go on.
The response has been extremely good. But then whatever issues I think were pointed out, this morning about the contingent liabilities, I think that is something to be a bit worried about. But as of now, I think the listing, at least the opening should be decent. So I would say that those who possibly get allotment should think of booking out on the opening.
All right, that'll be very interesting because, they've left value on the table at 35 times as compared to the others which are trading at 45, 50 times. So not an absolute term, but definitely a relative term. On Bluestone, what was very interesting, Prashant, was that Bluestone decided to IPO after they saw the success of CaratLane. So Titan obviously bought CaratLane at a low valuation, grew that business, and then, gave the money to Mithun Sacheti to buy CaratLane and grew CaratLane into what it was. Everyone said, okay, Bluestone, when they had PE investors, etc., they said there is value to be unlocked out here. That happened. The IPO happened. Bluestone's been doing extremely well. And recently, we got a note from one of the brokers who was now valuing Titan once again, given Bluestone's success, and saying that, okay, if Bluestone has succeeded so much, let's add an SOTP to CaratLane once again. So it was a very nice Excel way of, circular referencing, so to say. So that's about Bluestone. And the current environment, high gold prices, Bluestone, CaratLane, and even Kalyan Scandier, all of their positioning is very affordable.
Is Bluestone mostly sort of gold, or is it like stones,
It's
etc.?
affordable jewelry. So they will have precious, semi-precious, lab-grown, etc. as well. They would have diamonds. They would have some gold, but they'll be lower caratage. It's not necessarily Tanishq, Zoya, or Maya. It's more of the affordable daily wear sort of things.
Yeah, absolutely. Some visuals coming in right now. That's UK Prime Minister Starmer with Indian business leaders. And that's coming in live right now. And next to him is Prime Minister Narendra Modi meeting business leaders. This is happening in BKC here in Mumbai, at the Global Fintech Fest. So those are visuals. It's a pretty packed sort of lineup of CEOs, room full of top industrialists and CEOs. I think Prime Minister Starmer, of course, has talked about the importance of India-UK sort of partnership. This is, by the way, their third meeting since Prime Minister Starmer took over in 2024. 2 were outside India, and this is the first one here in India. And, that's a delegation of leaders from UK and, of course, their counterparts here in India as well. So that's essentially what's going on at this point in time. Another news flash at the bottom of the screen. Israel Deputy Foreign Minister says that the Gaza ceasefire is in effect. I think the is missing. So we'll put that out. But that's of course, has been spoken about earlier as well. We have Ambrish with us. Ambrish, are there any thoughts on, do you track Ixigo?
Yeah, in fact, I've been bullish on that space. Clearly looking at the way travel tourism has been booming. So that's one stock to be kept in the portfolio, at least from a medium to longer term perspective. Possibly we could see levels of about 380 to 400.
Tomorrow they have a board meeting to issue of new shares, and they disclose that they've got interest from a potential investor who wants to buy up to 16%.
Right.
So I think the mystery will be solved tomorrow, as and when that happens. NetWeb is down 10%. My God, huge! It's the number one volume-led loser now. 39.50 on NetWeb coming through. I'm told there is an Equirus note in which, basically they're saying, well, maybe earnings growth, revenue growth for the second quarter is going to be a little underwhelming. 15-20% kind of growth rate is what Equirus is suggesting, and I guess there is some profit booking here. Because there are profits to be booked, it's had a one-way rocket-like move, which is coming through. Another one is E2E Networks, again in that same sort of, AI data center-led move, 7% cut there as well, which is E2E. Any thoughts, Ambrish, these two names?
In fact, this one I don't really track very closely, but I would just like to point out something on the gems and jewelry space, which you're just talking about.
Yeah.
My view out there is that looking at the way the gold prices are going, most of them may show decent profits because of inventory gains. But then at the ground level, if you talk to most of these jewelers, they are in fact talking about the volumes going down. So I think that is something to be disturbed about. And going ahead, in case we see some sort of a correction in gold, because we've never seen this sort of a move in such a short time. I think, at least if you look at the last 60, 70 years history of gold, we have not seen this sort of a movement. And in case there's a correction post that, and what we have seen in the past also, whenever there have been corrections, they've been there for a long time, and we have seen lull for a long time. So from that point of view, I would be a bit careful as far as investing into the jewelry space at this point of time.
Take that point, Ambrish. Thank you so much for that. We'll take a short break, come back. After that, we'll have, a conversation continuing with Ambrish on markets forward. But between that, we have the market close right now. 121 points higher on the Nifty, moved towards the higher end of the range at around 25,200 at one point in time. But the start of the show definitely was the mid-cap end of things. The mid-cap index was up around 1%. Towards the end, the advance decline ratio also moved in favor of advances, breaking a two-day streak of the decliners, moving ahead of the advances. In terms of sectors, the big gainers were obviously the pharmaceutical and the metal names. The pharmaceutical names, obviously, on account of a couple of factors. One, relief coming in, a notional relief at least, that there would be no additional tariffs on generics from the US. And secondly, potential benefits coming in from, the troubles, the regulatory troubles at hetero for some of the animal pharmaceutical makers. Metals, Tata Steel, JSW Steel, top Nifty gainers. We also saw some traction in SBI Life. IT stocks were fairly well bid ahead of TCS's numbers, so we'll monitor what TCS's management has to say about the way forward. That'll be more important than just the reported numbers. On the way down, some profit taking for Titan, and the mid-cap end of things as well. We saw some profit taking in a couple of these names. But all the movers and shakers and the market for tomorrow will be discussed after this short break on CNBC-TV18's Market Forward. Nifty and the Sensex gain 0.5% with IT stocks leading the up move. The Nifty ends just shy of that 25,200 mark. The Nifty Bank underperforms the blue chips, while mid-caps and metals outperform.
Pharma stocks rally as White House spokesperson Kush Desai confirms that the US is not considering imposition of any tariffs on generics. The clarification comes as a relief for Indian pharma companies.
A whole host of stocks on our radar. Senco dips in trade after its modest second quarter update. The jeweler remains confident of 18 to 20% revenue growth in FY26. Shares of Satwik Green surge over good first quarter numbers, and realty firm Prestige Estates also gains over a good second quarter update.
Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Vivek Iyer, and with me is my colleague Mangalam. Good afternoon, Mangalam. A good trading session, just shy of the 25,200 mark. But a couple of sectors, that have seen significant selling pressure in the past, especially the pharma pack, significant overhang. The metal pack, saw a couple of down days, but today was one of the sectors that actually outperformed, right? Or shone very bright.
Yeah, it looked like these two sectors did well today, perhaps accelerated on account of some sort of short presence in the system as well, and on account of that, some short covering. Though the Nifty was fairly well bid in today's session, tested both the lower and the upper end of the range. The low on the Nifty today was 25,024, and the high on the Nifty was closer to 25,200, and that's the 200-point range that we have been witnessing on that frontline index. The two engines that did well for the market today, we did have the IT index, which was fairly well bid ahead of TCS's numbers, and alongside that, we had the Nifty Bank as well, which did not do as well as the other indices, but obviously, undid some of the underperformance that we saw in yesterday's trading session. But we've got you covered for the next 20 minutes on the show. Let's tell you what we've lined up for you. All the big news and key developments on D Street, top corporate voices, events to track tomorrow as well. And to kick off the day's action, we do have Hormaz, who will tell us the top movers and shakers. Senco Gold is the other one which tanked in trade today, while Satwik Green Energy surged after coming out their strong first quarter numbers, a recent listing. So first quarter performance is what it reported. Prestige too was high by about 4.5%, a good update, relative outperformance as against the other real estate players, and the key market events to watch out for tomorrow. Let's start with Hormaz then. Hormaz.
Interesting movers in today's session and across sectors as well, be it pharma, be it IT, all of them saw a healthy performance today. Pharma names, of course, seeing some relief coming in with regards to the generics business, 4.5% higher for Aurobindo. A couple of announcements coming in from Lupin, and Piramal and Sun Pharma also having a relatively good day. But it is IT that is continuing to do well all through this week, and it was another contributor towards the recovery that the Nifty had towards the second half of the session. TCS ahead of results, ending higher by over 1% at the highest point of the day, and as did HCL Tech, LTI, Mindtree and Persistent Systems as well. So stocks doing well within the IT space. And now you talk about the capital market movers, even they were the ones that did well today. MCX was up over 6%. Motilal Oswal did well, that too was up 6% in today's session. BSE was up close to 4%. So capital market names doing well. A lot of other newsmakers as well. GM Breweries reported results, and the stock ended in a 20% upper circuit after good revenue growth and margin expansion during the quarter. NetWeb saw very severe profit booking coming in. The stock was up almost 40% in the last 1 month, some profit booking from higher levels. And Inco Elecon was up yesterday and declined today over nearly 12% after the results that were reported by the company. And lastly, some Jindal Group stocks that did well today, almost all of them. Jindal Photo was up 20, Jindal Poly, Worldwide and others as well, gaining anywhere between 5 to 12% in today's session and on very strong volumes. It'll be interesting to see what kind of delivery data emerges from all of these four names. Back to you guys.
Thank you so much, Hormaz. A neat wrap of all of the action, both on the front line as well as the broad end of the market in today's trading session. But it's a good time to welcome two guests, both Amrish Balika, an independent market expert, and Shrikant Chauhan, EVP of Kotak Securities. Good afternoon, gentlemen. Thank you so much for joining us. Well, Shrikant, let me come across to you first. Nifty just shy of the 25,200 mark. Where do you see markets headed from this point on?
Good afternoon, Vivek. Good afternoon, everyone. So for market, we are of the view that it is inching up towards the levels of 25,500. After a very long time, we are seeing broad-based activity and broad-based participation in the market. In the last two moves, there was activity only in BFSI stocks, but this time we are seeing buying interest not only in BFSI but also in IT companies, which is something positive. 25,000 should act as major support for the market. There we are seeing good amount of buying interest, and on the higher side, 25,500 is the next level to watch out for. For the Bank Nifty, we are specifically bullish because this time buying interest is not only from PSU Bank, but also private banks are participating in the move. So there also we are expecting 58,000 sort of levels in the near term.
All right, so that's about the market setup. Let's talk about individual sectors as well. Pharmaceutical stocks, they rallied in trade today after the White House spokesperson Kush Desai confirmed that the US is not considering any imposition of tariffs on generics. Ekta joins in with the details on that one. Ekta, this wasn't feared, but the fact that this has been confirmed is a bit of a relief.
Well, yes, definitely relief for a lot of the pharma companies. The Trump administration has said that they are not planning to impose tariffs on generic drugs from foreign countries, and the administration is not actively discussing imposing Section 232 of tariffs against generic pharmaceutical companies. Now, why exactly is this important is because India comprises of around 40 to 50% of generic prescription by volume. Nearly 2 out of 5 generics are made by Indian companies in the US, and India comprises of 45 to 50% of the US FDA drug approvals. And when it comes to China, some of the Chinese APIs comprise of up to 80% or 90% of certain drug supply chains. So the fear was that if in case the Trump administration is looking at Section 232, which basically can impose tariffs or other restrictions to protect national security, that could impact Indian businesses or Indian generic drugs which are being sold to the US. Now, why exactly are these generics spared is because the cost is much less to manufacture generic drugs in India. It's only 1/8 or 1/5 of the US or the European manufacturing units, and generic drugs are 80 to 90% cheaper than patented drugs in the US. If in case there is any kind of tariff put, it will become more expensive to manufacture them. For some companies, it might become unviable, and if it does become unviable, it could even result in shortages in terms of drugs in the US, which the US government wants to avoid in all forms and manners. Now, lastly, however, there are companies which are toeing the line in terms of investment, the likes of Eli Lilly, J&J, Novartis, Roche, all of them have pledged in terms of investments, but Indian companies as well. Ipca Labs, for example, partnered with Biosimilar Sciences in Puerto Rico. Lupin announced a $250 million investment today itself, and Aurobindo has recently acquired a company in the US for $250 million, adding a CGMP facility.
Thank you so much for that, Ekta. One main reason why pharma stocks did quite well today was very well put. As far as the Indian pharma space was concerned, earlier today we had also told you about how there was a US FDA shadow over an unlisted company, private company, Hetero Labs. Remember, Hetero Labs is one of India's largest API manufacturing companies, and in its Andhra Pradesh facility in Nakapalli, the US FDA recently went ahead and did an inspection, and post the inspection, the company received a Form 483 with 6 serious observations. Now, within those 6 serious observations, one of the observations, that is the first one, indicates that the company's quality control unit procedures were not fully followed, and along with that, the US FDA has mentioned that there was an unregistered testing laboratory located outside the official facility. While there were other 5 observations as well, largely procedural in nature, a lot of analysts and a lot of experts whom we spoke to said that there is a possibility that there could be an escalation as far as the classification of this particular facility was concerned. In fact, post this particular news break, Nuvama came out with a note indicating that there is significant product overlap that is manufactured at this facility between Aurobindo Pharma as well as Laurus Labs, and they believe both of these companies could benefit in case there is a supply disruption coming in for Hetero Labs. But on this particular development itself, we'll move to Ambrish Baliga. Ambrish, what is your view as far as pharma companies are concerned, and any view you've taken post the CNBC-TV18 news break regarding Hetero Labs?
Overall, I've been maintaining that the Trump administration really can't afford to apply tariffs for generics. I think it's impossible for them to manufacture generics at the cost levels at which we manufacture in India. And they've already increased the inflation for consumption goods for the American citizens. And you really can't afford to increase the medical inflation any further. And in fact, this would have been a political disaster, and it would have created more problems for Trump than for India. So, from that point of view, clearly, I would be positive on the pharma companies, basically because, we had that overhang about the tariffs. Now, since that is out of the way, I think you'll see most of these pharma stocks doing much, much better than what we have seen in the recent past.
All right, so you're positive on pharma. Amrish, do you have a view on metals? Because metals also were one sector that did well in today's trading session. Yes, a bit of an underperformance over the last few trading sessions, but now the street believes that maybe things globally are looking a lot better, especially as demand is concerned, pricing is concerned, commodity prices overall, are higher.
Absolutely. I would be quite bullish on steel again. One of the reasons is the anti-dumping which has been imposed. At the same time, the sort of understanding which is there with the UK as well as EU, I think that's going to be beneficial as far as the steel companies are concerned. I'm bullish on zinc as well as copper. In fact, a stock like Hindustan Zinc, I still see it moving further from here. Copper prices, I'm expecting them to at least move up another 20-25% more from the current levels. So from that point of view, Hindustan Copper would be a pick at this point of time.
Okay, Amrish, thank you so much for that. I request both you gentlemen to stay on, as we have a very interesting piece that's been put up by our colleague Nimesh. India's IPO market is heating up. 78 main board IPOs raised over $14 billion so far this year. Nimesh joins in with a report on how India is transitioning into the new IPO factory.
It's actually the IPOs and IPOs. The secondary market has been so flat, right? The Nifty has been flat for the year, but it's the IPOs which are thriving. 78 IPOs have already been done in the main board so far. Last 2 months, almost 33 listings, and 13 are lined up in the month of October as well. So it's a busy season for investment bankers and for a lot of corporates as well. So that's the kind of record we've seen in the month of 2025 so far. In terms of big things to lined up in this month itself, we've got LG, a big IPO lined up for the month of October, and so is. So October itself will see nearly $5 billion of fundraising on the back of LG, as well as other couple of large IPOs as well. So far in 2025, we've seen fundraising of close to $14 billion. So that's a big amount, though it's not a record year yet. Last year, we saw a big record of $21 billion. So we still have 3 months to go. We'll see how it goes. But it's a big amount in terms of $14 billion already raised so far. This puts India among the top 4 countries in terms of fundraising so far. Look at the data. US markets have seen a record $53 billion of IPOs in 2025 so far. Second is Hong Kong at $23 billion. China at $16 billion, and India is at $14 billion. And we still have 3 months to go. So maybe it's another record year for India as well. So clearly that's visible in terms of fundraising so far in India is concerned. In terms of sectors, while the perception seems to be that it's the new age companies which are raising money, that's not the case. It's actually the traditional businesses which are raising money in IPOs. The biggest sector is industrials. A lot of EPC players, the green energy companies, are the ones who are raising money in this market. The second big sector which has seen IPOs is discretionary, and a lot of sectors, including the jewelry companies, the digital companies, the consumer tech, are the ones who've seen fundraising money by the IPO market. So that's the big sector. Again, as I said, the traditional sectors, 28 IPOs, which is almost 18%, are the companies which have raised money are in from the consumer tech, green energy, and the traditional businesses. So against the perception that traditional businesses continue to raise money via the IPO. This is interesting. What kind of gains we've seen on the listing day since Jan 2024? This is all the Bernstein data. The most striking data is the 26%, which has given zero returns or negative returns. So clearly 1/4 of the IPOs have not made money for the investors since 2024. The other big outperformer is that 40%, more than 40% return in 18 companies. So barring 18 companies or 18% of the IPOs, not many have made money. In fact, as I said, almost 25% or 1/4 of the IPOs have actually not made money on the listing day. So, well, there's a lot of frenzy. Need to see how it goes. But looking at the lineup, it looks like 25 is going to be another record year with almost $14 billion done, and there could be almost $20 billion by the end of 2025.
All right, $14 billion done, on the route to $20 billion by the end of this year. Amrish, big IPOs this month. Anyone particular one in fancy that you like?
In fact, going ahead, the Canara Bank IPOs, I think those two IPOs I would be applying for, because I think there's a decent amount left on the table. At least I think we should get a pop-up of about 15 to 20% on listing.
All right, that's both the life insurance as well as the AMC business of Canara. In fact, we spoke with Canara Rebecca, what the management said. We'll talk to you about that in the later part of the show in Corporate Corner. But a couple of stocks that did not do too well in today's trading session. We had Senco Gold. That was one which actually fell about 4.5% on the back of their second quarter update, where the revenues grew just 6.5%. Why do I call it just 6.5%? Because it was just yesterday that we got Titan, which said that they've grown revenues by over 19%. Kalyan Jewellers also has grown well around 30% for the India business. So all these factors meant that there has been relative underperformance of Senco Gold. And for a company that has a large presence in the eastern part of the country, one would have imagined that the early onset of the festive season would benefit them. Turns out heavy rains and flooding in parts of Kolkata and West Bengal did not do too well for them. There was a high base last time around and highest ever gold prices. All of that impacted them. But the company on its part is confident of 18 to 20% revenue growth in FY26 versus the half one of this year revenue of 17.8%. The state believed that with higher gold prices, more value growth, the company could actually go ahead and go beyond this 20% growth as well. So disappointed by the performance, and which is why we saw a decline in Senco. But you looked out at Satwik as well, Vivek, a big move.
That's right. Satwik Green almost trading the upper circuit today. Very strong Q1 numbers. Remember, this particular company is a recently listed name. So when you look at the numbers, we look at it quite quickly. On a year-on-year basis, revenues higher by almost 3.5 times. EBITDA up by over 5 times. Margins expanding almost 400 basis points, and profitability higher by 6 times. The company also said that they're getting into the solar inverter segment. But let me come across to Shrikant. Shrikant, we discussed two set of stocks. The first one, of course, was the discretionary spend space, Senco Gold. Do you have a view on that particular name or other names within that pack, like Kalyan Jewellers or Titan? Titan yesterday was a large mover. And any view as far as the solar module makers are concerned, either Satwik or Premier or Wari?
See, for specifically from the gold financing stocks, they are doing really well. So there is no as such any complaint. Most of these stocks are quoting at their all-time highs, and they are crossing their previous important levels. And the volume is also indicating us that this rally is going to get sustained. But for Kalyan Jewellers, Senco Golds, I think these stocks are finding real difficulties to sustain at higher levels. Whenever there is a rally in the stock like Senco, close to 380, 390, the stock is having good amount of resistance. And there, in case if we see the stock is moving back because of some reason, then there we should look for reducing some long positions. I think the stock has made a very strong resistance close to those levels. So it will be not that easy for the stock to cross and sustain above those levels. For Kalyan Jewellers, 600 is the next level to watch out for. There the stock is having good amount of resistance, and it is better to stick with stock like Titan. There we are seeing further more upside in the near term.
All right, take that point, gentlemen. Just hang in there. What we'll do is we'll get you some key corporate voices that we had on our channel today. In fact, we were speaking about, the management's coming on our channel from the jewelry space. Joss Alucas, the management said that demand has been resilient despite rising gold prices. However, volumes have dipped 20% in the second quarter. The management believes that lightweight jewelry can actually make up for lost sales in terms of volumes. And there has been a higher inventory valuation and profit on their books because of the gold that they hold. They expect demand to continue. And Malabar, on the other hand, said that there has been a rise in panic buying among customers because the ones who are buying for consumption believe that ahead of the wedding season, prices may go up a lot more. And as a result of which, there has been pent-up demand, which is beginning to pick up as gold prices remain sticky at higher levels.
And before we head into a break, we give you some key market events to watch out for. Gaurav joins in with all of the key events to focus on for tomorrow's trading session.
Well, yes. On the global front, we will get US unemployment data. Remember, the expectation is in the range of 4.3%. So let's watch out for that. But from the Indian market, we will watch out for 3 companies: Elecon Engineering, Wari Renewables, and Avenue Supermarts, because all 3 companies will come up with the Q2 FY26 results. Apart from that, Ujas Energy. Now, this stock bonus issue will be there in the ratio of 2:1 tomorrow. And at the same time, let's also watch out for CAMS, because board meeting is expected to happen tomorrow, where they will consider share split. Other than that, let's also not forget that the IPO of Canara HSBC Life Insurance, now that will open tomorrow. Remember, the IPO size is around 2,517 crores, out of which entire issue is offer for sale, and the price band is set between 100 to 106 rupees. At the same time, we will also see WeWork, a new listing tomorrow. Remember, the issue was subscribed just 1.15 times, with retail subscription of just 0.62 times and non-institutional buyer subscription just at 0.23 times, and the price band was in the range of 615 to 648. Lastly, let's also watch out for some other events like SEBI. Now they have extended timeline to implement margin obligation circulation till October 10th. So that is something that we will be watching out for. And lastly, let's also not forget about India-EU 14th round of FTA, which will happen, which is actually happening right now. So let's see if anything material comes out of that. So for now, these are the events that we will be watching out for tomorrow's market.
All right, and another important event to watch out for would be the street reaction on TCS numbers. The numbers have come out just after market close, and Rima standing by with all those initial details. Rima.
Thanks so much for that. So we have the margin performance with us. The EBIT margin for the company has come in at 25.2% versus the CNBC-TV18 poll of 24.7%. So straight away, there is a margin beat. Margins have also improved on a quarter-on-quarter basis by about 70 basis points and higher than street expectations. There is a restructuring expense, which is at 1,135 crore rupees. This, remember, perhaps is on account of the 1,200 people that the company had to lay off because they were unable to reskill them. So there was expected to be a restructuring exercise. So the impact of that is 1,135 crore rupees. What I'm unsure right now is where it has been accounted for, whether it's been done below the EBIT line, which sort of kind of makes sense given the margin performance, but we wait by for that. The company's top line has come in at 65,799 crore, and that is an increase of 3.7%. These are the only numbers that we have right now. Margin beat 25.2%. The company's rupee revenue growth has gone up by 3.7%. The number that we're awaiting right now is the dollar revenue growth or the constant currency revenue growth. And the expectation is that after 2 quarters of a decline in the top line, this quarter we will see growth. So the expectation is about close to about 0.3% constant currency revenue growth, but we'll wait for those numbers to come in. The statement coming in, there is broad-based growth and disciplined execution delivers a strong Q2. The company has announced strategic investments, a new business entity to build world-class AI infrastructure, 1 gigawatt capacity AI data center in India. The board has also approved the acquisition of List Engage with deep capabilities in Salesforce. So there is an acquisition. Again, the size is not known. I mean, I don't have this number of the size, but it just seems, very recently the company had also announced they had hired Mangesh Sathe as a chief strategy officer, and his role was to, along with conceptualize the strategy, look at innovation, etc., but also look at M&A. And remember, compared to many other companies, TCS has not been very aggressive on acquisition. I think the last big one happened in 2018, but now it looks like the company has approved the acquisition of List Engage with deep capabilities in Salesforce. And here's the important number. Constant currency revenue growth is also a beat, 0.8%. This is higher than expectations of 0.3%. So this is actually looking like a good set of numbers. K. Kritivasan is also making those statements. Okay?
Right, Rima, take that point entirely. That 0.8% versus a growth expectation of 0.3% in the constant currency will definitely have the street excited. We'll probably try and connect with some analysts, etc. as well. But meanwhile, 0.8% in constant currency growth goes down as a beat. EBIT, like you pointed out, margins better than what the street was expecting. The net profit out there. The reason why it's green despite a meet is because there is an 1100 crore rupee restructuring expense. So if you've added that back, then the net profit also would be a beat on TCS. Alongside that, they've made comments on making a small acquisition as well as engaging on artificial intelligence. So we'll obviously, speak a little more on that too. The stock was an underperformer, but fairly well bid in today's trading session going into the numbers. In fact, over the last few trading sessions, we saw the IT stocks do well as well. Will that cause a flutter of a purchase in all the other stocks as well or not is something we'll most definitely keep an eye out on. Piyush Pandey of Centrum India joins in now. Piyush, three key numbers that we have. 0.8% constant currency growth for TCS. The street was working with a number of 0.3%. The EBIT margins upwards of 25.2%. And there has been a restructuring expense. And if you adjust for that, the net profit too, fairly above street expectations. What do you make of TCS's numbers? And more importantly, what do you make of, the IT space going from here on?
So broadly, I would say numbers have been slightly ahead of expectations, both in terms of revenue growth as well as EBIT margin. And in fact, deal TCV also have been healthy at $10 billion. So overall, I would say this number should be taken well by the street. And now it depends on, what the management guides for outlook for the coming quarters. And so that will be something to watch out for.
Okay. Piyush, generally when you talk about TCS, they don't really specify guidance. They don't quantify a guidance, but if you look at the expectations, a couple of MNCs were actually expecting a degrowth in constant currency terms. In fact, Nomura was actually expecting a minus 0.5% constant currency degrowth. What was your own expectation going into this particular quarter, and how does it compare, especially when you look at the CNBC-TV18 poll? You were just expecting a 0.2% growth. It has come in at 0.8%.
Yeah, so as per my estimates, I was expecting close to 1% CC growth sequentially. Okay. And my EBIT margin was roughly close to 24.7%. So margin had been significantly better, much higher compared to my estimates. And revenue growth, I would say broadly in line as per my estimate.
Right. Piyush, we also have the total contract value. That's coming at around $10 billion. Last quarter was $9.4 billion. So it's been an inch up from the previous quarter as well. Were you having any expectations on TCV, and how would you read $10 billion as a TCV for the company?
So broadly, we were expecting something in the range of $7 to $9 billion. But 10 definitely looks better compared to the sort of general expectation. But generally, TCV's values are generally volatile on quarter-to-quarter basis. So it looks good, yeah. So overall numbers are good compared to base expectations. Yeah.
So rough back of the envelope, would you expect everyone else on the street to upgrade their estimates, or maybe stand by and then look at a couple of quarters more before making a change in their estimates and perhaps their structure also?
Yeah, maybe people would like to wait for maybe 1 or 2 quarters before taking a view that numbers are only improving trajectory.
All right, Piyush, thank you so much.
But I think with this current number, I think broadly we can see some upgrades in EPS. Yeah.
Okay, Piyush. Piyush, just another question. Last couple of quarters, there was the impact of BSNL that had a negative impact as far as margins are concerned. This particular quarter, has that gone away, and that has that aided the margin uptick sequentially?
Yeah. So obviously BSNL deal has got completely ramped down, and any contribution from BSNL deal would be negligible or close to zero, and that also led to a slightly higher margin for this quarter. Yeah.
All right. And what would you make of this investment that the company has made in, AI, or the announcement that they've made, the strategic investments where they will build 1 gigawatt capacity AI data center in India, and they will acquire ListEngage with deep capabilities in Salesforce? Would you think of it as an important one? Anything that moves the needle?
It looks good because generally there was a criticism or thought that Indian IT companies are not investing in the new age tech ideas and obviously this decision would be taken positively by the media.
All right, Piyush, thank you so much for joining in and giving us your quick thoughts. So from what we understand from Rima as well as Piyush and the general sentiment that the company has been posting through the results, TCS numbers slightly ahead of street expectations, all the steps in the right direction. Now it's over to the management to speak about the demand environment, the guidance for the next few quarters, for the street to actually take an investment view on the IT stocks, which going into the results season has been fairly well bid because of the underperformance of this sector over the last few months. Take a short break, come back. We'll be back with more news and updates on CNBC-TV18.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sources close to the Tata Group say a truce is in sight as trustees work towards ironing out differences. Say all trustees agree on keeping Tata Sons private. The Tata Trust Board is scheduled to meet tomorrow, a year since Noel Tata's appointment as chairman. TCS beat Street in the second quarter. Margins and constant currency revenue growth exceed expectations. Announces strategic investments and a new business entity to build AI infrastructure. Nifty and Sensex gain 0.5% led by IT and metal stocks. Nifty ends near 25,200. Midcaps outperform the blue chips. 78 IPOs have raised $14 billion so far in 2025. This makes India the fourth largest market for new listings, following United States, Hong Kong and China. The toll in cough syrup-related deaths in Madhya Pradesh rises to 22 after 2 more children succumb overnight. The owner of Srisan Pharmaceutical, the company that manufactured the cold riff cough syrup, has been arrested. Supreme Court agrees to hear a petition seeking a CBI probe and a nationwide drug safety review. Prime Minister Modi and his British counterpart hold bilateral talks in Mumbai, hail the new vigour in India-UK relation partnership. Both nations announce a new £350 million defence deal. Prime Minister Modi says that 9 UK-based universities will open their campuses in India. Celebrations laced with caution across Gaza as Israel and Hamas agree on the first phase of a ceasefire deal. Hamas will release all hostages. Israel will release over 1,500 prisoners and withdraw from the enclave. More than 67,000 people have been killed in Gaza 2 years after Hamas attacks killed 1,200 people in Israel. Veteran banker KV Kamath backs RBI decision to allow banks to fund mergers and acquisitions, calling it long overdue. Warns of hidden dangers in unsecured retail credit boom. Also says banks are spending too much on technology that won't take them anywhere. Reliance Industries chairman Mukesh Ambani tops the Forbes India Rich list for the third consecutive year. He is the nation's only centi-billionaire with a net worth of $105 billion, followed by Gautam Adani and Savitri Jindal. The combined net worth of India's 100 richest individuals fell by $100 billion, primarily due to market volatility. All right, as always, first up, the day's market action. The Lal Street ends higher with Nifty and Sensex clocking gains of nearly 0.5%. IT stocks led the up move. Nifty ended near 25,200. Bank stocks underperformed the blue chips while mid-caps outperformed. Metal names also extended gains with the index soaring 2%. From equities to commodities, gold prices have eased marginally after touching an all-time high. However, prices of the yellow metal increased back home, led by festive demand and safe haven buying. Silver and other precious metals saw a similar minor correction globally after hitting record highs on safe haven demand. Earnings now. TCS beat Street in the second quarter. Margins and constant currency revenue growth exceeded expectations. Rima Tendulkar joins us now. Rima, please take us through the numbers.
Well, as you rightly pointed out, a revenue and margin beat. The company's constant currency revenue growth has increased by 0.8%, higher than consensus expectations of about 0.3% growth. And also, it's a marked improvement compared to the revenue decline seen in the prior 2 quarters. This time, the international business that has seen a growth of about 0.6%, and the company's seen good growth or the momentum continue in BFSI. Life sciences done well, manufacturing is done well, the technology services department too has shown good growth. Margin performance has also been upbeat, an improvement of 70 basis points on a quarter-on-quarter basis, coming in at 25.2%. It's still not at the aspirational band of 26 to 28%, but it's an improvement. If you look at the bottom line, profits are down 5.5% quarter-on-quarter, but that has been impacted by a one-time restructuring cost of about 1,135 odd crore rupees, which is linked perhaps to the 1,200 crore people that the company had to let go in the current quarter. The deal wins have also come in strong, higher than the prior quarter at $10 billion. The company has been talking about the deal wins will be steady between $7 to $9 billion. And plus, in the current quarter, there was a large deal, a mega deal that the company had signed with a Scandinavian company. But what the street also likes is, some of the aggression shown by the company. The press release says, and this is by Kritivasan, we are on our way to be the world's largest AI tech services company. So, TCS maybe for the last couple of years was a bit conservative, and now just going by some of the announcements, we don't have too many details, but it does show some big bold bets. For instance, the company talks about strategic investment, a new business entity to build AI infrastructure. So a new business entity to build AI infrastructure, a 1 gigawatt capacity AI data center in India, which is larger than some of the hyperscalers that are present currently in India. Also, they're talking, there's an acquisition, List Engage, with deep capabilities in Salesforce. Size of the deal is not known, but it's an acquisition from the company after a long time, more than 4-5 years back. So all in all, it's a good set of numbers, and the company, it's a beat on revenues, margins. The profits are lower, but that I think the investors will see through it because it's a one-time exercise restructuring. And the fact that the company is making these big, bold steps and showing that aggression perhaps will be cheered by the street. In fact, the company's stock went into its earnings also fairly, with a good amount of cheer, because over the last 4 days, the stock has gained more than about 5%.
All right, thank you, Rima, for that update. Shifting focus to the big story that we are tracking this evening. The boardroom tussle at Tata Trust could come to an end. Sources close to the Tata Group have said that a truce is in sight as trustees work towards ironing out differences. They're confident that the recent deliberations will lead to a resolution. We also learned that the trustees are united in their view that Tata Sons should continue as a private entity. The Tata Trust board is scheduled to meet tomorrow, a year since Noel Tata's appointment as chairman. Parikshit Luthra is here with more. Parikshit.
Ahead of Tata Trust board meeting on October 10, sources close to Tata Group are hoping the differences between trustees will be ironed out. Sources familiar with the matter say that all trustees of Tata Group have had time to reflect over the events of the past few days. They told CNBC-TV18 that they're confident that deliberations of the last few days will lead to some sort of harmonious working among the trustees and Tata Sons board members. We also learned that contrary to some media reports, there was no difference among trustees on the appointment of Noel Tata as chairman of Tata Trusts. Noel Tata was in fact appointed as chairman of Tata Trust unanimously. All Tata trustees unanimously believe that Tata Sons should remain a private entity, even as the RBI had mandated a public listing of Tata Sons by September this year. Sources say that the government was obviously concerned about differences among trustees and therefore held a meeting with members of Tata Trust and Tata Sons on Tuesday. Apart from differences over the appointment of independent directors, including that of Anita George, Tata Group trustees were divided over the resignation of Vijay Singh as nominee director on the Tata Sons board. While the appointment of nominee directors above 75 years of age is reviewed annually, some believe there was no provocation or reason for Singh to leave the Tata Sons board, considering his immense contribution. We have been told that the Tata Trust board meeting tomorrow will only look at routine matters, including disbursement of funds for charitable purposes, and none of the contentious issues of the past few weeks will play out over there.
Right, thank you, Parikshit, for that. Shifting focus now, LG Electronics India has now become the most subscribed large Indian IPO. It has outbid SBI Cards, who held the record for the last 5 years. Today was the last day of bids. The issue was subscribed over 36 times till about 4 p.m. Qualified institutional buyers led the bid with subscription at over 100 times, which was followed by non-institutional investors and retail investors. The action is heating up in India's primary market. According to a report by Bernstein, 78 companies have raised a whopping $14 billion through the public market this year. This makes India the fourth largest market for new listings, only behind US, Hong Kong and China. Nimesh Shah decodes the IPO boom.
78 IPOs have already been done in the main board so far. Last 2 months saw almost 33 listings, and 13 are lined up in the month of October as well. So it's a busy season for investment bankers and for a lot of corporates as well. So that's the kind of record we've seen in the month of 2025 so far. In terms of big things to lined up in this month itself, we've got LG, a big IPO lined up for the month of October, and so is So October itself will see nearly $5 billion of fundraising on the back of LG as well as other couple of large IPOs as well. So far in 2025, we've seen fundraising of close to $14 billion. So that's a big amount, though it's not a record year yet. Last year, we saw a big record of $21 billion. So we still have 3 months to go. We'll see how it goes. But it's a big amount in terms of $14 billion already raised so far. This puts India among the top 4 countries in terms of fundraising so far. Look at the data. US markets have seen a record $53 billion of IPOs in 2025 so far. Second is Hong Kong at $23 billion, China at $16 billion, and India is at $14 billion. And we still have 3 months to go. So maybe it's another record year for India as well. So clearly that's visible in terms of fundraising so far in India is concerned. In terms of sectors, while the perception seems to be that it's the new age companies which are raising money, that's not the case. It's actually the traditional businesses which are raising money in IPOs. The biggest sector is industrials. A lot of EPC players, the green energy companies, are the ones who are raising money in this market. The second big sector which has seen IPOs is discretionary, and a lot of sectors, including the jewelry companies, the digital companies, the consumer tech, are the ones who've seen raising money by the IPO market. So that's the big sector. Again, as I said, the traditional sectors, 28 IPOs, which is almost 18%, are the companies which have raised money are in from the consumer tech, green energy, and the traditional businesses.
Right. Thank you, Nimesh, for that. Prime Minister Narendra Modi met his British counterpart, Prime Minister Starmer, and held high-level bilateral talks in Mumbai today. Both leaders discussed ways to expand business, trade, education, and defence cooperation between the two countries. Addressing a joint press conference, PM Modi said that the ties between India and the UK are driven by trustworthiness, talent and technology. He added that the trade agreement between the two nations will create more opportunities for the youth and industries. UK Prime Minister hailed the trade ties between the two nations, calling it really important and the biggest deal the nation has struck since Brexit. Both the leaders also announced that 9 British universities will open campuses in India. Prime Minister Modi and UK Prime Minister also met top Indian business leaders today.
भारत और यूके नेचुरल पार्टनर्स हैं। हमारे संबंधों की नींव में डेमोक्रेसी, फ्रीडम और रूल ऑफ लॉ जैसे मूल्यों में साझा विश्वास है। मौजूदा वैश्विक अस्थिरता के दौर में भारत और यूके के बीच ये बढ़ती हुई साझेदारी ग्लोबल स्टेबिलिटी और आर्थिक प्रगति का एक महत्वपूर्ण आधार बनी रही है।
It is the younger generation in India who will lead the charge to deliver on that 2047 target. The demand for the best quality higher education is very high. So I'm really pleased that we're announcing today that more British universities will be setting up campuses right here in India, making Britain India's leading international provider of higher education and delivering on our vision 2035 that we set out in July.
US President Donald Trump has said that Israel and Hamas have agreed to the first phase of his peace deal for Gaza after 2 years of fighting in the enclave. Israel and Hamas have confirmed the agreement. However, differences remain over the interpretation of how Trump's broader plan is to unfold. Israeli hostage and Palestinian prisoners will be released under the agreement. The deal will also see the withdrawal of Israeli forces and the entry of aid into Gaza. The deal will go into effect if it's approved by Israel's government when it meets today. World leaders have welcomed the news of the two sides accepting the deal.
I strongly welcome the news that a deal has been reached on the first stage of the peace plan in Gaza. This is a moment of profound relief that we felt around the world, but particularly for the hostages, their families, and for the civilian population of Gaza.
यूक्रेन कॉन्फ्लिक्ट और गाजा के मुद्दे पर भारत डायलॉग और डिप्लोमेसी से शांति की बहाली के सभी प्रयासों का समर्थन करता है।
All right, it's time for a short break. Coming up next, the toll in cough syrup-related deaths in Madhya Pradesh has risen to 22 after 2 more children succumbed overnight. More details when we return. Welcome back. Madhya Pradesh government has confirmed the death of 2 more children after consuming contaminated cough syrup. The death toll now stands at 22. Ranganathan Govindan, the owner of Station Pharma, which manufactured the cold reef syrup, has been arrested. He and his wife had been on the run since the tragedy came to light and was caught in Chennai early this afternoon. Meanwhile, the Supreme Court has agreed to hear a plea seeking a court-monitored probe into the case. As per reports, the matter has been listed for urgent hearing and will be taken up tomorrow by a bench presided by Chief Justice Gavai. Manoj Sharma joins us now with all the details.
Well, it's a major breakthrough in cough syrup tragedy case in Madhya Pradesh because the prime accused, Ranganathan Govindan, is arrested from Chennai. Govindan was, he was running his factory of cold reef syrup from Kanchipuram. It was brand name was Cold Reef and the name of the company was Sreshan, and Ranganathan was the owner of that company. Obviously, his arrest is a major achievement for Madhya Pradesh police. Now, the police would take his transit remand from a local court in Chennai, and from there he would be brought to Chhindwara and would be produced before the Chhindwara district court, from where the Madhya Pradesh police would take his police remand for interrogation. So obviously it's a big achievement for Madhya Pradesh police. And secondly, another important accused, Dr. Praveen Soni, he was already arrested, he was interrogated, and then he sought bail from local court. But the bail plea of Dr. Praveen Soni was rejected by the local court in Chhindwara, and now he is sent to judicial custody.
Central drug regulator is starting a pan-India drive to test and audit all cough syrup makers. Sources say the Central Drug Standards Authority has sought a detailed list from all states and union territories of cough syrup manufacturers. Hetero Pharma is under the US FDA's scanner after it inspected its facility in Andhra Pradesh. The health authority has said that the pharma unit failed to follow quality control unit procedures. The FDA added that the raw materials and quantities do not support actual active pharmaceutical ingredients, yield reduced. The pharma firm also failed to reconcile quantities of identification labels. SoftBank-owned Graphcore will be opening a new AI engineering campus in Bengaluru. This will create 500 new semiconductor jobs with an investment of $1.3 billion over the next decade. The AI engineering campus will help in building the future of AI computing. In the first phase, the company will recruit 100 AI semiconductor engineers in India. All right, it's a shot in the arm for Indian pharma companies. According to a report by the Wall Street Journal, White House spokesperson Kush Desai has confirmed that the US has shelved plans to impose tariffs on generic drug imports. Remember, India is the largest single source of generic drugs for the US market. In fact, Indian-made generics cost 1/5 of what it takes to produce in the US or Europe. All right, it's a CNBC-TV18 exclusive. Veteran banker KV Kamath has said that the Reserve Bank's sweeping regulatory changes open up equal opportunities for banks. The RBI has recently allowed banks to finance M&A. Kamath believes acquisition financing is an excellent avenue of business for banks. Speaking with Ritu Singh, Kamath also warned about hidden dangers in the surge in unsecured credit. He also said banks are spending too much money on technology which won't take them anywhere.
So I would think, looking at the risks at that point in time, the way business was being done at that point in time, that was something that was not allowed. And now, in a completely different context, I believe the Reserve Bank has done the right thing to open it up because it's an excellent avenue of business for banks. It's not investing enough or not. They are investing a lot more than they ought to, but they're not investing it right. I'll make this very clear. Technology investments by big players in the fintechs around the world, in the financial services industry, not fintechs, around the world, they're not investing what they ought to invest. They're investing much more than what they ought to invest, but in things which will not take them anywhere. So they are basically taking forward legacies. You need to make a complete break from legacies and move to platforms which are current. That's not happening.
French President Emmanuel Macron's office has said that he will nominate a new prime minister in the next 48 hours. The announcement followed 2 days of the outgoing prime minister's last-ditch talks with party leaders to break the country's political deadlock. The outgoing premier said that the possibility of dissolving parliament was beginning to fade following the talks. Ukrainian drone strikes killed 3 in Russia. Moscow claimed that it destroyed 53 Ukrainian drones overnight. Zelensky also said Ukraine's attacks on Russia's oil facilities had degraded them to an extent that the country was experiencing energy shortage. Both Russia and Ukraine have been targeting critical energy generating facilities as winter approaches. The latest edition of the Forbes Rich list is out. Reliance Industries chairman Mukesh Ambani is India's richest person for the 3rd consecutive year in a row, with a net worth of $105 billion. Infrastructure tycoon Gautam Adani and family is at number 2, with a fortune of $92 billion. Retaining the 3rd spot on the list is Savitri Jindal of the OP Jindal Group. Telecom magnate Sunil Mittal is the biggest gainer, with his net worth which he shares with his family, increasing to $34.2 billion, seeing him climb 3 places to the 4th richest spot. And with that, it's a wrap on this edition of Business 360. News and updates continue right here. Thank you for watching.
Well, gold's glitter is timeless, but this festive season, it's also priceless. With the yellow metals prices touching record highs and silver also following the lead. The question on every investor's mind ahead of Diwali is to buy, to wait, or to look elsewhere. So we are turning the studio into a strategy room. We have gathered your burning questions from across the internet and brought in the sharpest minds in metals to help you invest and crack them open. Well, welcome to this edition of Commodity Champion Special. I'm Nigel D'Souza, and without further ado, let's dive into the festive season's golden puzzle. Joining us on the program today is Feroz Aziz, the joint CEO at Anand Rathi Wealth. We have Chirag Seth, the principal consultant of India at Metals Focus, and Kunal Shah, the head of commodities research at Nirmal Bang. Hi, gentlemen. Thanks a lot for joining in. And we've got a lot of queries that have come in there. So let's get straight to the first one that's on the show. We have Ramesh Jain from New Delhi, who brings us this query. And it's a very valid one. He's saying last year has been very good for gold, but, while equities have slumped. Now, the question is between gold, equities, and fixed assets, what should the split be? Well, Feroz, let's come across to you. What do you make of this? Asset allocation is top of mind. Equity investors, they've been left behind, but most housewives, well, they're dancing away to the bank because they're the ones that have seen a 50% appreciation in gold prices. How do you read this?
Yes, Nigel, when it comes to asset allocation, the classic ways of doing asset allocation, I personally think you have growth assets and protection assets. So if you're going to have debt in your portfolio, at least half the debt of your portfolio should be gold. Like, for example, in my portfolio, or most wealth managers don't have debt in their portfolio. Will gold beat equities over long periods of time? It can still beat Nifty, but the answer is no. So if you look at the 5-year rolling return of gold over the last 15 years, you'll be surprised to see that gold's 5-year rolling return is 8.32% is the mean. And the best case is 18%, 17.99. So what I'm trying to get to is that if your monies are 5 years, then your gold allocation should be half your debt allocation. If you have near zero debt, it's okay to not have gold. That's point. So what should be the asset allocation? I would suggest at least 75, 80% in equity for long-term monies, and the residual divided between debt and gold, 50-50. And if your money is short-term, for example, because gold does beautifully well in the short term as well. So if you look at the 1-year best return ever in the last 15 years, rolling, has been 58% for gold, and minus 21% is the worst. So point I'm trying to make is gold is more of a trading instrument or a debt replacement is what data clearly points out. If you look at on the rolling basis, Nifty beats gold hands down. On a 10-year basis, Nifty would beat. So swap your debt to gold as much as you want.
Okay, all right. And Feroz, that's an important point because I was looking at global view as well. An ideal portfolio is normally 60% good quality equities and 40% could be debt. But now the call is that, in fact, maybe it could be 60-20-20 between equities, gold as well as debt. And in your case, as you're telling us, 75 to 80% equity over a longer term and the remainder split between debt as well as on gold. But let's get in Kunal into the discussion. Kunal, I wanted your view. Gold has been really glittering. But the one that's catching up now is silver. And in fact, in the recent past, it's outperformed gold. But we have seen this in the past, right? That $50 per ounce mark on silver. 1980, 2011, and 2025 as well. Can it get past this $50 an ounce? And then, in fact, it could be in for a bigger breakout. How do you read silver at current reckoning? And what would your investment advice be between the two?
Okay, so the 1980s $50 for silver was one of the major reasons for that was the cornering of silver by Hunt Brothers. So that had nothing to do with fundamentals. Now, if you look at what has happened in the silver market, the market is a major supply side shortage story from last almost 7 to 8 years, where we are seeing a constant deficit year after year. Every year, the deficit has a range between 7 to 12%. And clocked with that, we are seeing some of the largest producers of silver, some of the largest mines of silver are getting exhausted. So in Mexico, top 2 mines of silver are likely to get exhausted by the year 2026. So if you look at the supply side, is continuously getting weaker, and at the same time, the demand side is getting stronger and stronger with solar. And look at the new demand, like the development of data centers requiring a lot of silver. US, we are aware about a lot of new data centers are coming up across the globe, for that matter. So on one hand, the demand is rising exponentially, and the supply side is not picking up at all. So this is the perfect storm in commodities. Whenever there is this kind of proposition, when there is a major shortage is developing in this complex, the upside prediction becomes very difficult. So if you say that silver price will go to $55, $60, most likely you are going to get wrong. It can really shoot up and even breach those levels quite easily, because for silver to stabilize, we desperately need supply side to respond, and that is not taking place at this moment. So we believe that with the bouts of correction here and there, silver is a very volatile metal. The trajectory for silver for next 1.5, 2 years still going to be very bullish, and whatever correction, whatever dips, whatever profit taking, what we see over a period of time, that should be used as a buying opportunity. And we remain very optimistic about the overall outlook of silver going forward, and we are very bullish.
All right, got that, Kunal. In fact, the Hunt brothers, William as well as Nelson, in 1980, they cornered most of the silver stock. That made silver spike up, and then silver lost its way from there. 2011 as well, we did see that speculative action. But as Kunal is mentioning, now we have a fundamental, argument for silver to move off from here. There's a deficit, and the amount of demand as well with regard to silver being used across various platforms is increasing. So he believes fundamentals could hold silver this time around in good stead. Coming across to you, Chirag, then, what is the commodity that you're most bullish on? You have precious metals that have done well, both gold as well as silver, but copper is the new gold as well. We've heard that. What is your reading of it? And in the pecking order, what would you bet on?
Well, Nigel, I won't be able to comment on base metals since we are a precious metals consultancy company.
Okay, so let's talk about gold, silver, as well as platinum.
I think, if we look at, and Kunal has covered it very well, I think silver is one that we are extremely bullish on. We've been saying this for the last couple of years. I think in terms of silver, there are multiple things, you mentioned about 2011, and I would say, everybody say this time is different, but this time it is really different for silver, given the fact that you've got now both demand and supply kind of helping silver, prices. You've got essentially in last 8 to 10 years about 500 million ounces of drawdown of silver stock. So you are really seeing, demand kind of pick up, especially because of the new usages. So you've got photovoltaic, which is essentially solar, EVs, and also defense equipments where silver demand has seen, consistent growth. So I would say silver is something that we should be looking at. And I think gold also still interests us quite a lot, given the fact that it's a fear asset at this moment. And given the fact that the world is not stable, both geopolitically and economically, I would say having a negative view on both in gold and silver would be, harakiri.
Okay, all right. Well, we've got to take a short break, but Firoz, just coming across to you, the last 12 months have looked very, very bright for, gold as well as silver, while equities have struggled. If you had a 24-month horizon from here on, do you think equities actually outperform from here on, give and take everything? The last year has been difficult for equity markets on various parameters. But the way ahead, would you be betting more on equities doing well? We're talking about a 24-month horizon.
Yes, Nigel. I think like I had always said, equities and gold complement each other. But yeah, having said which, I would say that on Nifty also, because we've already gone through a 1 year time correction, almost 7% price correction, 12% earnings correction, I would say that there is some degree of pent up tension in Nifty for it to move up. The shorts, of course, you track it best. I learned it from you. The FII shorts are at about 92%. If there is any short squeeze, that could be tremendous. In my statistical estimate, 53 lakh crores is supposed to come from domestic institutions in the next 8 years. 15 lakh crores has come. The total free float of the 524 stocks in MSCI small cap index of India is only 34 lakhs. 52 lakhs is expected, crores is expected, 34 lakhs is the free float. So prices, the stocks will transact at a higher price over the next few years. So I would say it will be difficult for gold to beat on a compounded basis 3 years. But having said which, Nigel, quickly, 30 seconds, I checked the worst, in the last 24, 30 months, whenever Nifty was negative, I took the 12 negative months of Nifty, and all those 12 negative months, gold was positive. So I'm trying to create the hypothesis that they are negatively correlated assets and they complement each other. Is the point I was trying to get to.
That that graphic plate on the screen, in fact, is telling you the picture out there with regard to when the Nifty doesn't do so well, gold, in fact, has done well, and that could possibly reverse as well. But Feroz, Chirag, as well as Kunal, requesting you all to stay with us. We'll slip in a short break. We'll come back. We'll continue answering all your queries. Don't go anywhere.
Hello and welcome to News Centre. I'm Parikshit Luthra. The top story we are tracking this evening. Prime Minister Narendra Modi met his British counterpart, Prime Minister Starmer, and held high-level bilateral talks in Mumbai today. Both the leaders discussed ways to expand business, trade, education and defence cooperation between the two countries. Addressing a joint press conference, PM Modi said that the ties between India and the UK are driven by trustworthiness, talent and technology. He added that the trade agreement between the two nations will create more opportunities for the youth and industries. UK Prime Minister Starmer hailed trade ties between the two nations, calling them really important and the biggest deal the nation has struck since Brexit. Both the leaders have agreed to boost their ties in fields of technology, innovation, education, trade, investment and climate research. India and the UK will establish joint connectivity and innovation centre and an India-UK joint centre for artificial intelligence as well. Both nations will also be launching the second phase of the UK-India Critical Minerals Supply Chain Partnership, along with the establishment of a new satellite campus at IIT ISM Dhanbad. Both the leaders also announced that 9 British universities will open campuses in India. A new joint investment in the Climate Technology Startup Fund will also be set up. This will be a strategic initiative between both the UK government and the State Bank of India for supporting innovative entrepreneurs. Finally, Prime Minister Starmer announced that 3 new Bollywood blockbusters will be made in the UK from next year. Yash Raj Films has confirmed plans to bring their major productions to locations across the UK from early 2026. This will create over 3,000 jobs and will boost the economy by millions of pounds. Joining us now to take the discussion forward is Sangeeta Reddy, Joint Managing Director of Apollo Hospitals, Anand Goenka, Vice Chairman at the RPG Group, Harshvardhan Agarwal, Vice Chairman and Managing Director of Imami, and Harish Ahuja, Managing Director at Shahi Exports. Ladies and gentlemen, we have the entire FICCI Presidium with us. And let me go across to Harshvardhan Agarwal first. Mr. Agarwal, at a time when there are major tensions related to trade and India's exports could be facing stress in the next few months, how do you think the India-UK FTA will open up opportunities for Indian businessmen once it is ratified by the UK Parliament?
Thank you, Parikshit, for having us with you here. I think in today's geopolitical scenario, it's very important for any and every country to diversify their risk, not being dependent on few countries. And from that perspective, yes, this UK-India Trade Pact is a very, very good step forward. It is expected that, the 60 billion trade by 2030 can go up to double to 120 billion. That shows the potential of it. And I think what is very heartening to see that, maybe around 99% of the Indian export items will have no duty. And apart from that, also it will benefit a lot of the labor-intensive sectors like leather, garments, jewelry, marine goods, etc. So overall, I think it's a very, very good deal, and we really look forward for it to get implemented.
Right. Let me also go across to Mr. Harish Ahuja. Mr. Ahuja, when it comes to boosting textile exports to the UK, how do you think Indian textile companies, garment companies are set to benefit over the next 5 to 6 years? Are you already getting advance queries and orders from UK companies?
Yeah, thank you, Parikshit, for having me. India-UK trade is a dynamic partnership with sectors like apparel playing a vital role. The free trade agreement opens exciting new opportunities. We already are working with the UK with too many retailers, but we were kind of not having level playing field because our competitors, Bangladesh, Sri Lanka, Pakistan, and Vietnam, they have FTA with UK. Now, we also getting FTA soon, in some time, soon after this is formalized. So we'll come in the same level also. So our exports will almost go 3 to 4 times in a matter of 2 years, apparel. Because, despite having 12% duty disadvantage, we were having good orders coming from our customers in UK. Now, after duty not being there, orders will go much higher. So this will be a good boost for our apparel trade in India.
Right. Let me get in Ms. Sangeeta Reddy at this point. Ms. Reddy, how do you see India-UK ties growing as a result? How do you expect the healthcare sector in India to benefit? There have been 2 important agreements when it comes to medical research which have been signed. One is launch of phase 3 of biomedical research career program. The second is letter of intent between ICMR and NIHR UK on health research as well. Could you throw some light on this, and how do you plan to grow healthcare ties and leverage this FTA to your benefit?
So Parikshit, I want to take the conversation a little broader. Is that one is the healthcare in terms of treatment. The NHS clearly has a waiting list and is looking for partnership opportunities from Indian hospitals under the Heal in India aspect, as well as the movement of doctors to help serve them. The second very important aspect, like you spoke about, is research. And both these tie-ups are yet milestones in the progression of science and new science to create innovation, where the whole world is actually racing at a breakneck speed. And therefore, partnerships and broadening the database to different genetic profiles will create more comprehensive artificial intelligence algorithms. So this partnership is critical. So besides treatment and research, the third very important one is education. So actually at Apollo, we already have a tie-up with the Leicester University and have created a joint center for precision medicine, which lays down the tenets of AI, digital analytics, and artificial intelligence towards future predictive analysis and precision medicine. So many of these are things that clinicians from across the world are looking at so that they can enhance the type of clinical work that they're doing. Having said that, on the healthcare field, I also want to add one very important point at the overall level, which is that the India-UK Comprehensive Economic and Trade Agreement is kind of like a front runner in what I believe will be many more FTAs. So the flavors which have been introduced in this, some are for the first ever chapters on consumer protection, anti-corruption, labor rights, gender equality, innovation and development. All these are things which were hitherto not really focused on in FTAs. I'm very appreciative of the vision of the leaders to create this kind of a comprehensive agreement on the CETA. And I think that this will really signal to the rest of the world that India, of course, has always been ready for business and is further ready. And India is looking at a comprehensive futuristic framework towards these partnerships. I look forward to Europe and many other countries following on these footsteps.
All right. So let me get in Anand Goenka as well. Anand, the FTA that has, of course, been agreed upon, while we await the ratification, which will happen next year, clearly both sides have begun work. Keir Starmer came to India with a almost 150-member strong CEO delegation as well. How does this FTA encourage you to increase your presence in the UK? And within India, would there be certain companies from whom you would like to increase investments or seek investments from in order to broaden your footprint, not just in India, but also in third countries?
Right. So I had the opportunity to be there yesterday with the two trade ministers. And I think the great thing to see was their camaraderie that they had, the trust that they had, the positivity in their body language. So all of that gave a lot of confidence even to the business leaders, all who were there in Bombay yesterday. And I think that just strengthens the opportunity of looking at business. From our side, I'd say we were one of the first few Indian companies to invest in the UK. This is Zensar Technologies, which invested just about a day or two after Brexit. So irrespective of the geopolitical situation or the political situation, we continued to invest in the country. I think there's a big benefit as a result of the CETA that will come in because of the 3-year exemption of social security payments for Indian employees working in the UK. And I think that itself will be great for the tech sector in general. Otherwise, I'd say we have a pharmaceutical business, and in that we are looking at possibly something on the, there can be an opportunity of partnerships because there's large pharma companies there. A large dependence of APIs exists in China. India can be a source of supply to many of the manufacturers. And not only as trading, but also R&D, partnerships in sharing technology and all of that as well. So I think various opportunities emerge for us, and we are looking at the UK and growing there.
All right, let me go back to Harshvardhan Agarwal. Mr. Agarwal, when it comes to increasing investments in India, now this is going to be a priority for the Indian government over the next few years. Does this FTA lay the ground for greater UK investments into India? Are those conversations ongoing between businesses as well?
Yes, certainly. I think everything helps. And as we all know, India is a big market with a population of 140 crores. So yes, for any country, for any industry, it's a big market. I think around 1,000 UK companies are already present in India, giving an employment to around 5 to 7 lakh people. And yes, after this FTA, the presence will increase because a lot of goods can directly come to India from UK, and the investment will increase, no doubt about that. And I see the same also, a lot of Indian companies increasing the investment in UK as well.
All right. On that note, we take a short break, but we tell all our guests to stay with us. We'll be right back. Welcome back. You're watching CNBC-TV18 News Centre, and we're focusing on the visit of UK Prime Minister Keir Starmer, who has brought the first ever trade mission to India. He is here with almost 120 to 150 UK businessmen to deepen ties ahead of the ratification of the FTA by the UK Parliament. Now, let me go across to Sangeeta Reddy once again. Sangeeta Reddy, when it comes to cooperation on R&D, cooperation on innovation, we have seen how the two sides have agreed on establishing an India-UK Connectivity and Innovation Centre, establishing an India-UK Joint Centre for AI. Apart from increase in goods and services, exports and imports between the two countries, how important are these deals and agreements on artificial intelligence and innovation?
So, Parikshit, I would actually say they're one of the most significant because, factually speaking, the size of the UK market is not very large. And if you look at the FDI from UK, it's about only 5% of the total FDI coming into India. But the intellectual and the educational and research angles are, I think, the most significant because UK is very well known for its positioning in the education field, for its advancement in knowledge, and therefore combining the Indian capability with UK and UK traditional institutions. So large universities of global repute tying up with our institutions, opening campuses here will enable a global education to reach India at Indian prices. So I think education, research, and AI are actually one of the critical foundations of the CETA agreement. And business was the first thing spoken about, but every leader definitely mentioned research, innovation, science, technology, and knowledge as the pillars of this cooperation framework. So they have called out 3 or 4 immediate initiatives, but I actually foresee many more of the universities seeking Indian campuses. And like I said, we have the Apollo campus in UK, and the Leicester University has put up their campus and their joint venture in our campus in Chittoor. I believe that this is going to happen at a much, much larger scale now.
Right. Do you believe Apollo Hospitals and the group at large can look at expanding its business in the UK after this agreement?
So I think this agreement will be like a forerunner for many Indian hospitals to look at the potential, not only of setting up hospitals in the UK, but of inviting patients from the UK. In fact, they're already coming for treatment. I think this flow will enhance and increase.
All right. Let me focus on the education bit a little more. Anand Goenka, we've seen how the Prime Minister announced that there will be 9 UK universities which will set up their campuses in India. How does this give greater impetus to India's education sector, especially at a time when we are prioritizing skilling and innovation for the future as well?
Right. I think both are important, whether it's skilling, whether it's innovation or basic education. I think the complementarity is what is very beneficial, where we have the people and in India, people save up all their money for education in that sense. So I think and UK, on the other hand, has the brands of universities, years and years of history of very large universities. So bringing that in and fulfilling the aspirations of young Indians, I think it's absolutely excellent and much needed in the country.
All right. Let me go across to Mr. Ahuja. Mr. Ahuja, now that this FTA is done, if we want to take the full advantage of that, what more reforms can the Indian government bring? GST was one major reform and a major ask of the industry here in India and globally as well. What more can be done?
You see, as per GST is concerned, mostly when we export, we are funded all GST. So GST for exports actually is more for domestic than for exports. But for going forward, I think we can have more labor reforms. That is what will really, enhance this because, as a country, we have 90% of the raw material in the country. And apparel exports is one product which is has 90% value addition compared to any other product. So everything we have in country. And if you see also, we have got good education, good engineers to run the factories. Mostly our neighbors who are our competitors like Bangladesh and Vietnam. There are many Indian experts working there and, running the factories. All of that we have. If you see Vietnam or Bangladesh, their value addition is 30 to 40% on this apparel. Ours is 90%. So we can become like, another China in apparel making, So I think what is really keeping this because of, labor intensive. See, if there's some labor reforms come, that will really boost up this trade. And from this present 15 billion, we can go 10 times higher in maybe 10 years, So major thing I asked is more, yeah.
All right, for labor reforms is what you would be asking for. Mr. Agarwal, what would be some of the reforms that you would ask for going ahead now that the UK-India FTA is done? And speaking about the Imami Group specifically, what kind of investments or possibly an expansion of business that you would be considering in the UK?
See, coming from the perspective of the reform, I think from the industry perspective, we have been really pushing the government and requesting for more ease of doing business. I think that's one of the most important reform and step if the government takes that will certainly help the overall industries and help in also bringing in more investment. I think government is now seriously looking into it. A high-level committee has been formed. So we are very, very hopeful, that we are going to see some very good initiatives in that regard. Apart from that, yes, as Mr. Ahuja said, labor reform and land reform are some of the other important reforms that we would like to see. In context to when you talk about...
And within FICCI, has the industry body done an analysis as to which sectors are going to benefit the most? Of course, labor-intensive sectors are important, but for the next 5 to 10 years, which parts of the Indian industry will benefit the most from this FTA?
I think all these sectors, as we have seen, 99% of the goods are covered in this FTA where, the duty will be nil. And from that perspective, yes, auto, renewables, energy, I think all these sectors, has the potential to get benefited from this.
All right. When it comes to the mobility of individuals, Anand Goenka, how do you feel the movement of professionals is going to benefit from this, and how can the Indian industry leverage the mobility partnership?
Right. So I think there are about 70,000 plus workers that are there today in the UK. We have over 900 companies that are there, and all of these are expected to benefit. The big one, as I highlighted, was the 3-year exemption on Social Security that was there, which is the double contribution convention. And I think that's a big relief to the workers as well as to the companies in that sense. So I think that's the real big benefit that we expect to come in. We've not heard much yet on the visas. We were hoping that there's something more, but I think otherwise it's been fairly positive on the people front.
All right, Anand Goenka, Harsha Agarwal, Harish Ahuja and Ms. Sangeeta Reddy, thank you very much for joining us on the program, giving us your view on the deliberations between Prime Minister Modi and Prime Minister Keir Starmer. A historic visit indeed. Let's hope the FTA gets ratified and the Indian industry can benefit from it as well. That's all we have time for. Goodbye and thanks for watching.
role do you believe large conglomerates like the Tatas, like the Reliance Group, etc., can play? Because one of the aspects that you just brought up was that startups are much more agile, much more nimble, perhaps in many ways more disruptive than legacy businesses. So we are now starting to see conglomerates acquire startups. We're starting to see partnerships and collaboration. How do you see that playing out?
Well, I think the plays are the same. Who looks at it as a question of what kind of vision one has. But there could be two kinds of roles that we're talking about. One is an area where I am now putting myself back into the industrial entity that there was. I've got disposable funds. I'm going to start investing in startups, which I will control and I will own, and I will provide myself with activities which I would otherwise not get into. And I could do this by setting up family offices, by creating small venture capital based companies, where you can argue that I'm using my shareholders' money, but I'm providing them the opportunity of being in this activity. That's different from what you've seen in the Bay Area time and time again. I put all my money into this. I borrowed money from investors and friends. I have a responsibility to see this become a reality. And I'm going to give it all my best to make this happen. That segment of the enterprise has been the one that I've been most impressed by. Usually a bunch of ex-students who have had a common view of something that could happen. A company like Google that's been established, where two colleagues in college could decide that they're going to start a search engine. Then you look behind the vision and the entrepreneurial spirit that there is, and you have to say, wow, that's something that's very impressive to look at, for someone to put their money into, and to become a part of their life. But look what it's done. So it's so exciting, an area that I find it difficult to put words behind it. But when you look at a deck of investable options, and you look at some of the propositions that are made, a lot of them are copies of successful startups, and those are, unless there's a jewel somewhere, those are probably not going to be successful. Maybe would become Me Too companies, and that would be all. But the one which has the greatest vision and a spark that explains how he's going to get to that goal, which you don't find that with everyone. Those are the jewels that one looks for. that creates the enterprises that you and I are referring to just now.
Well, he was ahead of many when it came to identifying new trends. In fact, in an age of social media, he joined Instagram back in October 2019, and the bio said, "I made it to the gram." So he was as good as an influencer. In fact, I would say he was an Insta sensation who beat many influencers there. In fact, he also spoke about how he wanted to be remembered in the age of social media. Listen in.
You know, you're active on social media, you're on Twitter, you're now also on Instagram. Are you enjoying that experience? And you know, you said previously that there's nowhere to escape from the virus and from the pandemic, but you know, with the vaccination and hopefully with the world opening up, where would you like to escape to?
If I think about how would I like to be remembered, I would like to be remembered as a person who was able to make a change, who is able to be responsible for some change in the way we looked at things. What that might be spelt out as, I can't really say, because I have a feeling that that's going to just happen one day, where you become the innovator of something that people have talked about and not done. And you have found that little alley that enables you to do something which people thought was unviable and not possible. That would be an immensely exciting area to be in. And if one could have that satisfaction of saying, I enabled an artificial eye to be created, or I enabled X or Y or Z to happen, that to me, even if it were not financially the most successful, what it brings to the world would be exciting to a person like me.
There are very few people in the world, and more so in India, who inspire with decency, with a strong set of values, who believe in what they say, who are torchbearers of not just a legacy, but who are deeply passionate about India. Even fewer are from the world of business. But today, I have a guest who is not just a colossus, but actually an inspiration to people across ages. Age doesn't define him, his work does. And he continues this tirelessly as someone who always believes in what he does and does what he believes in. Welcome, Mr. Tata.
Thank you, Sahil. It's nice to be here.
Sir, Ratan Tata Trust will be completing almost 125 years of its existence, the first of the trusts. When you look back at the work that the Tata Trusts have done, what do you feel, and what ignites this feeling of compassion and giving back?
Well, I have a great sense of pride that over these 125 years, Sir Ratan Tata left his legacy to the philanthropic causes, followed by his brother, when Sir Dorab Tata, when he passed away, did exactly the same. And over the years, Tatas have been structured by the holding company or the proprietor's ownership being held by two charitable trusts, and over the years, an increase in the number of charity trusts that were created to work on the disparities that one found in the country, at that time a colonial country, and to work for the common good of the common man. This was a different thing. It set up cancer hospitals, schools, and institutions of that nature. It had also dealt heavily in terms of individual hardships. So through the years, the trusts have dealt with individual hardships. They have given scholarships to students. We've had past presidents of India who have been scholars of those Tata scholarships. We have created institutions which stand today, like the Indian Institute of Science, which the trust did not actually set up. Jamsetji Tata set that up.
But there's an interesting anecdote there, right? Between Swami Vivekananda, the conversation that Jamsetji Tata had with Swami Vivekananda aboard a ship.
I don't specifically know about that conversation, but they met each other and were inspired by each other. I know that. So over the years, the trusts have focused on either creating institutions that serve the common good, like cancer hospitals, etc., and institutions of learning, some international and some domestic, and causes which were said to be for the common good. What is refreshing is that the holding company for the whole Tata Group, which Jamsetji Tata set up, that 66%, or at that time more, 85% of its income and dividend outflow became income to the trusts for the common good of the Indian citizen and foreign causes.
But as you rightly said, at that time there was no need, there was no mandate. Today we have CSR, much abused as it is a phrase. But what do you think went through the minds of the founders when they set this up, and especially transferring their value in Tata Sons to the trusts?
Well, I think it was a different view of ownership. Mr. J.R.D. Tata often used to refer to Tatas as being the trustees of the people. The Tata family could have become tremendously wealthy by having distributorships, partnerships, etc. in the businesses. But most of the businesses, whether it was steel, whether it was power, or institutions, were set up as institutions for the country. So Jamshedji Tata could just as well have dedicated Tata Steel to the nation or dedicated Tata Power to the nation. They belong to the shareholders and to the people. Personal ownership and personal wealth happened when it happened, but was never the criteria for these companies to be established. So it was natural that he did leave his ownership to his two sons, and then his two sons, who had no children, left them in charitable trusts as beneficiaries of the companies that they held. So it was a refreshing change that gave way to ownership in an industry not being for the beneficial interest of A or B or C, but for the better good of humanity.
So if you look at the trusts today, they span a wide range of sectors. And there's a certain stress that you've laid on technology being a great intervention in some of the applications. Where do you believe the transformation of the trusts actually began and why?
Well, you know, if you look at India through the years, the needs of India have changed. We had famines, food famines in the British times.
Yeah.
We don't have famines any longer. We had a majority of the people living in the rural areas. Today there's a mass migration to the urban areas, giving finally an important issue of creating an important issue of urban poverty and hardships that didn't exist before. The creation of jobs in industrial organizations. Today, automation and differences in terms of value chains, etc., make human jobs less important than machine jobs in many companies. So the needs of the nation have changed. Food shortages continue to exist in pockets. Water shortage is something that never existed in the past, but is an issue today. A much larger population and creating jobs and knowledge. These are all issues that are issues of the changing times. For the trust to continue to do what they did at the turn of the century would be to be sitting in the twilight thinking that the issues of the country were the same. And to me, that would have been a disappointment. So I think the trusts have gone through and are going through a transformation that, to use short term, is making the trusts relevant today. If we had not done that, they would have become irrelevant and creator of edifices that stood out as evidence of what the trust did, but did not make a contribution to the country.
While I completely agree about the relevance of the trust, the one thing that a lot of people talk about is the Tata culture, the Tata way of life. If you work for the Tatas, on the one hand, it's almost as we are working for a family. On the other, it's almost as if you're part of a legacy. How have successive leaders, you, before you, JRD, how have you managed to retain that Tata culture in times which are sadly materialistic, competitive? How have you maintained that culture?
First of all, that culture becomes embodied in the DNA of an organization. It's set off by the early leaders, the founder in our case, who never was in need of wealth because he had it all, but it wasn't what drove him. Success of giving India its own independence in steel or power or the hospitality area were what gave him the pride that he had made India self-sufficient. He didn't at that time look at the companies as being his, but belonging to the country. Somehow that prevailed through the years, through his sons, and then through J.R.D. Tata for 50 years or so, where J.R.D. would stand in a line rather than jump a queue.
Yeah.
Where he would give way to a customer first and not him. And that humility, I think, became embodied in what all the leaders of Tata companies had done. And we should protect that ferociously. The day we lose that, I think we've lost an important facet or input in the companies that we have. And the day we decide to cheat, the day we decide to do something that holds something for us and not for the customer, I think we will have lost a very, very important asset.
Has it been tough to stick by these values, especially during times when values were being trampled upon because of politics, competition, blah, blah, blah? Were there times that you often felt that, thank God, we are not the shortcut Tatas? Because you could have taken that shortcut.
Yes, I'd be lying if I said there weren't moments when those issues came up and those decisions had to be made. Happily, at every time, boards stood together and leadership stood together in saying that's not what we do. We, over the years, on occasion, have suffered as a result of that. But on the whole, I think we have, I believe that it's very important to come back at night and say, I have not succumbed.
I love that. Because it's very easy to succumb.
Yeah.
I mean, you must have faced political pressure, economic pressures, and yet you stood the course.
Sometimes you didn't know if you were doing the right thing. All things are not black and white. You have a choice. One choice leads you down a certain path long term. Another leads you down another path short term. And then you have to weigh one issue against another. Hopefully you make the right decision. Sometimes we don't, but we do it with innocence or naivety rather than intent and negativity. So I think that's a sort of dilemma that faces many leaders in the corporate world or politics. So it does in the business community too.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sources close to the Tata Group say a truce is in sight as trustees work towards ironing out differences. Say all trustees agree on keeping Tata Sons private. The Tata Trust Board is scheduled to meet tomorrow, a year since Noel Tata's appointment as chairman. TCS beat Street in the second quarter. Margins and constant currency revenue growth exceed expectations. Announces strategic investments and a new business entity to build AI infrastructure. Nifty and Sensex gain 0.5% led by IT and metal stocks. Nifty ends near 25,200. Midcaps outperformed the blue chips. 78 IPOs have raised $14 billion so far in 2025. This makes India the fourth largest market for new listings, following United States, Hong Kong and China. The toll in cough syrup-related deaths in Madhya Pradesh rises to 22 after 2 more children succumb overnight. The owner of Srisan Pharmaceutical, the company that manufactured the cold riff cough syrup, has been arrested. Supreme Court agrees to hear a petition seeking a CBI probe and a nationwide drug safety review. Prime Minister Modi and his British counterpart hold bilateral talks in Mumbai, hail the new vigour in India-UK relation partnership. Both nations announce a new £350 million defence deal. Prime Minister Modi says that 9 UK-based universities will open their campuses in India. Celebrations laced with caution across Gaza as Israel and Hamas agree on the first phase of a ceasefire deal. Hamas will release all hostages. Israel will release over 1,500 prisoners and withdraw from the enclave. More than 67,000 people have been killed in Gaza 2 years after Hamas attacks killed 1,200 people in Israel. Veteran banker KV Kamath backs RBI decision to allow banks to fund mergers and acquisitions, calling it long overdue. Warns of hidden dangers in unsecured retail credit boom. Also says banks are spending too much on technology that won't take them anywhere. Reliance Industries chairman Mukesh Ambani tops the Forbes India Rich list for the third consecutive year. He is the nation's only centi-billionaire with a net worth of $105 billion, followed by Gautam Adani and Savitri Jindal. The combined net worth of India's 100 richest individuals fell by $100 billion, primarily due to market volatility. All right, as always, first up, the day's market action. The Lal Street ends higher with Nifty and Sensex clocking gains of nearly 0.5%. IT stocks led the up move. Nifty ended near 25,200. Bank stocks underperformed the blue chips while mid-caps outperformed. Metal names also extended gains with the index soaring 2%. From equities to commodities, gold prices have eased marginally after touching an all-time high. However, prices of the yellow metal increased back home, led by festive demand and safe haven buying. Silver and other precious metals saw a similar minor correction globally after hitting record highs on safe haven demand. Earnings now. TCS beat Street in the second quarter. Margins and constant currency revenue growth exceeded expectations. Reema Tendulkar joins us now. Reema, please take us through the numbers.
Well, as you rightly pointed out, a revenue and margin beat. The company's constant currency revenue growth has increased by 0.8%, higher than consensus expectations of about 0.3% growth. And also, it's a marked improvement compared to the revenue decline seen in the prior 2 quarters. This time, the international business that has seen a growth of about 0.6%, and the company's seen good growth, or the momentum continue in BFSI. Life sciences done well, manufacturing is done well, the technology services department too has shown good growth. Margin performance has also been upbeat, an improvement of 70 basis points on a quarter-on-quarter basis, coming in at 25.2%. It's still not at the aspirational band of 26 to 28%, but it's an improvement. If you look at the bottom line, profits are down 5.5% quarter-on-quarter, but that has been impacted by a one-time restructuring cost of about 1,135 odd crore rupees, which is linked perhaps to the 1,200 crore people that the company had to let go in the current quarter. The deal wins have also come in strong, higher than the prior quarter at $10 billion. The company has been talking about the deal wins will be steady between $7 to $9 billion. And plus, in the current quarter, there was a large deal, a mega deal that the company had signed with a Scandinavian company. But what the street also likes is, some of the aggression shown by the company. The press release says, and this is by Kriti Vasan, we are on our way to be the world's largest AI tech services company. So, TCS, maybe for the last couple of years, was a bit conservative, and now just going by some of the announcements, we don't have too many details, but it does show some big, bold bets. For instance, the company talks about strategic investment, a new business entity to build AI infrastructure. So a new business entity to build AI infrastructure, a 1 gigawatt capacity AI data center in India, which is larger than some of the hyperscalers that are present currently in India. Also, they're talking, there's an acquisition, List Engage, with deep capabilities in Salesforce. Size of the deal is not known, but it's an acquisition from the company after a long time, more than 4-5 years back. So all in all, it's a good set of numbers, and the company, it's a beat on revenues, margins. The profits are lower, but that, I think the investors will see through it because it's a one-time exercise restructuring. And the fact that the company is making these big, bold steps and showing that aggression perhaps will be cheered by the street. In fact, the company's stock went into its earnings also fairly, with a good amount of cheer, because over the last 4 days, the stock has gained more than about 5%.
All right, thank you, Rima, for that update. Shifting focus to the big story that we are tracking this evening. The boardroom tussle at Tata Trust could come to an end. Sources close to the Tata Group have said that a truce is in sight as trustees work towards ironing out differences. They're confident that the recent deliberations will lead to a resolution. We also learned that the trustees are united in their view that Tata Sons should continue as a private entity. The Tata Trust board is scheduled to meet tomorrow, a year since Noel Tata's appointment as chairman. Parikshit Luthra is here with more. Parikshit.
Ahead of Tata Trust board meeting on October 10, sources close to Tata Group are hoping the differences between trustees will be ironed out. Sources familiar with the matter say that all trustees of Tata Group have had time to reflect over the events of the past few days. They told CNBC-TV18 that they're confident that deliberations of the last few days will lead to some sort of harmonious working among the trustees and Tata Sons board members. We also learned that contrary to some media reports, there was no difference among trustees on the appointment of Noel Tata as chairman of Tata Trusts. Noel Tata was in fact appointed as chairman of Tata Trust unanimously. All Tata trustees unanimously believe that Tata Sons should remain a private entity, even as the RBI had mandated a public listing of Tata Sons by September this year. Sources say that the government was obviously concerned about differences among trustees and therefore held a meeting with members of Tata Trust and Tata Sons on Tuesday. Apart from differences over the appointment of independent directors, including that of Anita George, Tata Group trustees were divided over the resignation of Vijay Singh as nominee director on the Tata Sons board. While the appointment of nominee directors above 75 years of age is reviewed annually, some believe there was no provocation or reason for Singh to leave the Tata Sons board, considering his immense contribution. We have been told that the Tata Trust board meeting tomorrow will only look at routine matters, including disbursement of funds for charitable purposes, and none of the contentious issues of the past few weeks will play out over there.
Right, thank you, Parikshit, for that. Shifting focus now, LG Electronics India has now become the most subscribed large Indian IPO. It has outbid SBI Cards, who held the record for the last 5 years. Today was the last day of bids. The issue was subscribed over 36 times till about 4 p.m. Qualified institutional buyers led the bid with subscription at over 100 times, which was followed by non-institutional investors and retail investors. The action is heating up in India's primary market. According to a report by Bernstein, 78 companies have raised a whopping $14 billion through the public market this year. This makes India the 4th largest market for new listings, only behind US, Hong Kong and China. Nimesh Shah decodes the IPO boom.
78 IPOs have already been done in the main board so far. Last 2 months saw almost 33 listings, and 13 are lined up in the month of October as well. So it's a busy season for investment bankers and for a lot of corporates as well. So that's the kind of record we've seen in the month of 2025 so far. In terms of big things to lined up in this month itself, we've got LG, a big IPO lined up for the month of October, and so is. So October itself will see nearly $5 billion of fundraising on the back of LG, as well as other couple of large IPOs as well. So far in 2025, we've seen fundraising of close to $14 billion. So that's a big amount, though it's not a record year yet. Last year, we saw a big record of $21 billion. So we still have 3 months to go. We'll see how it goes. But it's a big amount in terms of $14 billion already raised so far. This puts India among the top 4 countries in terms of fundraising so far. Look at the data. US markets have seen a record $53 billion of IPOs in 2025 so far. Second is Hong Kong at $23 billion, China at $16 billion, and India is at $14 billion. And we still have 3 months to go, so maybe it's another record year for India as well. So clearly that's visible in terms of fundraising so far in India is concerned. In terms of sectors, while the perception seems to be that it's the new age companies which are raising money, that's not the case. It's actually the traditional businesses which are raising money in IPOs. The biggest sector is industrials. A lot of EPC players, the green energy companies, are the ones who are raising money in this market. The second big sector which has seen IPOs is discretionary, and a lot of sectors, including the jewelry companies, the digital companies, the consumer tech, are the ones who've seen fundraising money by the IPO market. So that's the big sector. Again, as I said, the traditional sectors, 28 IPOs, which is almost 18%, are the companies which have raised money are in from the consumer tech, green energy, and the traditional businesses.
Right. Thank you, Nimesh, for that. Prime Minister Narendra Modi met his British counterpart, Prime Minister Starmer, and held high-level bilateral talks in Mumbai today. Both leaders discussed ways to expand business, trade, education, and defence cooperation between the two countries. Addressing a joint press conference, PM Modi said that the ties between India and the UK are driven by trustworthiness, talent and technology. He added that the trade agreement between the two nations will create more opportunities for the youth and industries. UK Prime Minister hailed the trade ties between the two nations, calling it really important and the biggest deal the nation has struck since Brexit. Both the leaders also announced that 9 British universities will open campuses in India. Prime Minister Modi and UK Prime Minister also met top Indian business leaders today.
भारत और यूके नेचुरल पार्टनर्स हैं। हमारे संबंधों की नींव में डेमोक्रेसी, फ्रीडम और रूल ऑफ लॉ जैसे मूल्यों में साझा विश्वास है। मौजूदा वैश्विक अस्थिरता के दौर में भारत और यूके के बीच ये बढ़ती हुई साझेदारी ग्लोबल स्टेबिलिटी और आर्थिक प्रगति का एक महत्वपूर्ण आधार बनी रही है।
It is the younger generation in India who will lead the charge to deliver on that 2047 target. The demand for the best quality higher education is very high. So I'm really pleased that we're announcing today that more British universities will be setting up campuses right here in India, making Britain India's leading international provider of higher education and delivering on our vision 2035 that we set out in July.
US President Donald Trump has said that Israel and Hamas have agreed to the first phase of his peace deal for Gaza after 2 years of fighting in the enclave. Israel and Hamas have confirmed the agreement. However, differences remain over the interpretation of how Trump's broader plan is to unfold. Israeli hostage and Palestinian prisoners will be released under the agreement. The deal will also see the withdrawal of Israeli forces and the entry of aid into Gaza. The deal will go into effect if it's approved by Israel's government when it meets today. World leaders have welcomed the news of the two sides accepting the deal.
I strongly welcome the news that a deal has been reached on the first stage of the peace plan in Gaza. This is a moment of profound relief that we felt around the world, but particularly for the hostages, their families, and for the civilian population of Gaza.
यूक्रेन कॉन्फ्लिक्ट और गाजा के मुद्दे पर भारत डायलॉग और डिप्लोमेसी से शांति की बहाली के सभी प्रयासों का समर्थन करता है.
All right, it's time for a short break. Coming up next, the toll in cough syrup-related deaths in Madhya Pradesh has risen to 22 after 2 more children succumbed overnight. More details when we return.
all heard about finding your match online, finding love online. Matching with your vegetable and fruit is completely a new experience.
Why Handpick is there is because Handpick has existed for decades.
Indian retail, grocery retail is dominated by the Kirana store network. And our insight was, what if we make this Kirana store virtual?
When you say lowest cost model, can you explain that in numbers?
So let's say you order on quick commerce, 400-500 rupees order. To the platform, it would typically cost somewhere between 110 to 130 rupees. It costs us 1/3 of that.
We do not pack anything. We are plastic free. Everything is loose. Khulla aata hai, khulla jata hai. You kill wastage, otherwise wastage will kill you.
Large part of Bharat, for large part of their use cases, don't need a 10-minute delivery.
If a Parle G has to come, it's the same Parle G, then I would go for where do I find it cheapest and where do I find it fastest. But if the product is going to be different, then suddenly there's a big difference between a Honda and a Mercedes, right? And then you're willing to wait to customize your Ferrari.
So what do you want to be, Honda, Mercedes or Ferrari? In the food and vegetable world.
See, for us, it's like
the Ferrari of daily essentials, is it? From a guava chosen to your taste, sweet, crunchy or extra ripe, to bulk groceries delivered at the lowest cost to India's heartland. Two very different models, one common mission: to reinvent how Bharat and India buy their daily essentials. Handpicked, founded in 2024, is building India's first matchmaking platform for fruits and vegetables. No inventory, no warehouses, no dark stores, just a digital mandi at your doorstep. Customers don't just order produce that they want, they design it down to the very last detail, that's sweetness, size and ripeness. In less than a year, Handpicked is scaled to multiple cities, raised $15 million and is now looking at expanding beyond the current cities that it operates in. On the other hand, we have the story of City Mall, which started in 2019. It's taking e-commerce to tier 2 and tier 3 towns in India through the power of community by transforming local shopkeepers and neighborhood leaders into digital Kirana stores. It's created one of India's most cost-efficient last-mile distribution networks in the country. Today, City Mall is profitable, clocking nearly 700 crore rupees in revenue and on track to hit the 1,000 crore rupee milestone next year. Hello and welcome to the Young Techs Reloaded podcast. I'm Shireen Bhan, and joining me on the program today are two very different entrepreneurs running two very different businesses, Angad and Anant. Many thanks for joining us here on the Young Techs Reloaded podcast. You know, the reason why we chose to put the two of you together is because while you're addressing the last mile distribution and access problem, you're addressing two different cohorts entirely. You're addressing Bharat and you're addressing India. And I want to understand from the two of you how both your models have evolved and what it takes to serve these two very different markets. Let me start with you, Angad, because the last time that you were on Young Turks was through the COVID period. Yes. And, you know, a lot has changed. We've seen quick commerce arrive and surge. As you look at the way that your vision of democratizing e-commerce was back then and where it is today, what's changed? What's different? What's new for City Mall?
Thank you, Shireen, for inviting me here. Vision hasn't changed. It's remained the same. We are very focused on delivering value essentials at the doorsteps of the end consumers. So the vision has completely remained the same. Hows have evolved a lot. I wouldn't say changed, but it has sort of evolved from one model to another. Today, we are sort of from COVID times. Yeah. Those times were very different. Consumers, so the supply chains were completely broken, fragmented. We started with a very different model of having community partners to create demand on one side, right, and deliver demand on the other side. So we've pivoted from that model to now community partners exclusively being these very low-cost fulfillment partners for us.
What you call micro entrepreneurs. So break that up for us and explain how the model works to the viewers.
Sure. So think about a micro entrepreneur as, let's say, somebody who does milk delivery in the morning and then does City Mall delivery during the day. Okay. It's a local entrepreneur in those same areas and neighborhoods, knows a lot of users or at least the localities that he or she is serving in. And this guy is the backbone of our business. So this micro entrepreneur essentially operates like a digital kirana store.
Okay.
Without any investment into inventory space and people. Practically over his own labor and set of tech tools that we provide to him. So as a model, the way it works is a consumer orders on any given day. We have our warehouses at the back end. We sort, pack by the community partner, ship it to them early in the morning, 6, 7 a.m.
Okay.
Then this guy will do like all the sorting, consumer-wise packing, and the last mile delivery within a very low radius to the end consumers. The reason the micro entrepreneur exists is because
trust.
It is a trust, and second, it brings down costs significantly. So imagine a supply chain network where you don't have to invest anything in your fixed cost. Everything is variabilized at the last mile level, and everything is moving in a hyper batched fashion. So our warehouses are hyper batched. Nobody in our warehouse knows who the end consumer is and what is the order of the end consumer.
Okay.
Everything is happening by the community partner. So the products move in a hyper batched way, and a last mile network is 100% variabilized with no fixed cost of investment.
And why did you believe that this would be successful? Why did you believe that this would work in an era where, you had, of course, the big boys like Amazon, etc., but then you also had a lot of Indian players entering this space, and they continue to exist in this space as well. So what did you think would be the reason for your right to win?
Yeah. So the insight was, let's think about the offline world. Indian retail, grocery retail is dominated by the kirana store networks. Now, what are these kirana stores? These are basically 300 square feet box, very close to the end consumer, 2 to 3 people manning it, and about 3-4 lakh rupees of inventory. That's what comprises of a kirana store. And these kirana stores are replicated every 200 meters across the geography of India. And our insight was, what if we make this kirana store virtual? You don't have to store inventory very close to the end consumer. That in storage, that is expensive model. So if that kirana store becomes virtual, we would be able to offer a significantly better price to the end consumer. And also for that kirana store or the micro entrepreneur, he doesn't have to make this investment in inventory space and people. So it's basically mapping the offline world into the online world to make it more efficient.
And how many virtual kirana stores are you currently operating? How many micro entrepreneurs do you currently have?
About 7,000-8,000.
7,000-8,000 micro entrepreneurs. And how many cities are you operating in today?
60.
60, but you're very focused on Bharat.
Yes.
While Anant, you're very focused on India. And explain to our viewers the difference between servicing Bharat versus servicing India in the context of what you were able to do with Milk Basket, a company that you founded and then sold to Reliance Retail Ventures and exited in 2021, only to start Handpicked. I mean, we've all heard about finding your match online, finding love online. Matching with your vegetable and fruit is completely a new experience.
Thanks, Shireen, for having me. Yes, it's a very intriguing question, and the way you put it, it becomes even more intriguing. So, again, it's an inspiration from the offline world. It's an inspiration from day-to-day life. What does a mom do when they go and buy fruits or vegetables to the local shop or to the ready wala? They say, okay, I want 3 mangoes because I have kids at home who want a medium-sized mango.
Yeah.
And I want a guava, which is crunchy because my younger one likes crunchy guava. But I also have a parent in the house who wants a soft guava. So they will buy 2 crunchy guavas and 3 yellow guavas.
Right.
Now, let's take a step back. 10 years ago, that's what's happening. Today also that's happening. You go online and suddenly what you will have to do is buy a pack of 4 guavas or 1 kg guava. And there is no way that you know that it's going to come ripe or green or extra green. It depends on the batch and some random logic of what we call standard quality in fruits and vegetables. So why Handpick is there is because Handpick has existed for decades.
Yeah.
It's each mom, each father doing it for their kids, for their family on a daily basis. That's what we used to do when we used to go to Mandi. People used to buy. And I can guarantee you, if 3 of us go to a fruit vendor today and you'll buy mangoes, I'll buy mango. And
I can't buy mangoes because I'm allergic to mangoes, but
let's buy papayas. Let's buy papayas.
Yeah.
Let's pick up apples. Your apples would be different from mine.
Yeah.
So we said every family is unique, so is their F&B. Now, and when we look at supply chains that have been created or what we have been doing online, the question was, why are people not adapting to F&B? Why? Another internal quote, and I quote a lot of them, is like, why everybody is selling but nobody's buying? And the reason is because we are selling a standard product in a standard quantity.
Yeah. So you're actually solving for choice.
We are solving for preference. We are solving for the fact that a family, when an individual in a family buys a fruit or a vegetable, it depends on who is going to eat, when are they going to eat, and how are they going to eat. Think about grapes. Think about mango. Think about papaya. People buy papaya. If they go to market, they buy 2 papaya. One they want to eat today, one they want to eat tomorrow.
Correct.
So one would be good ripe, one would be semi-ripe. Try buying it online, and I'm sorry, you cannot. So it's not that people don't want to buy online. See, having done Milk Basket, the core thought process is very simple. We are going to become lazy. It depends on who makes us the laziest. We are humans. We tend towards the path of least resistance.
Correct.
So why am I taking so much pain to go out? Why a 70-year-old auntie is going to the shop while knees are hurting, but still going and handpicking their mooli for paranthas and their mangoes and their vegetables? It's because they have not been provided what they wanted at home. We said we will do that. And literally it started like that. We launched on WhatsApp last year without any app.
That's a big common feature for the two of you, because your model was also largely WhatsApp driven and WhatsApp based, right?
Yeah.
Before you pivoted.
Yes.
Yeah. And for us, it was never, and we started in Gurgaon. It was a educated society. Everybody has like 70% of our users have an iPhone. So just from a contrast perspective, but we said we do WhatsApp. The reason is because we said, okay, we'll give us an order will come. And the first thing we did was we looked at the products and we went back to the customer saying that you have ordered mangoes. Do you want ripe, semi-ripe, medium or large? And for the first time they said, oh, give me 2 medium and one of them should be ripe, one of them should be semi-ripe. And that was the moment of Eureka where customers demanded because somebody asked. Otherwise, it's like, okay, we'll order, somebody will come. You know, there was this consistency thing that was going on. And so many people that I have talked to, they said, the problem with this industry, F&B industry, is that today I'm happy with what I get. Tomorrow I'm not happy with what I get. Then 3 days later, I'm happy. Then 4 days later, I'm frustrated. And I told them, it's not because somebody is screwing up the supply chain. And I've done that at 7 years in Milk Basket. We will have a standard SKU, standard quantity. Itna hi round hona chahiye. It should be, you know, this color of guava, light green, light yellow, because that's the best guava.
Yeah.
The problem is that the family need of every instance of buying is different.
Yeah.
So you're not getting frustrated with what's coming. You're getting frustrated that your need was different that day.
Yeah.
And nobody was asking you.
But that begs the question of how do you do this at scale? Because how do you provide, you know, a business model that operates to each family's preference, each family's choice, but do it at scale? Doing it in Gurgaon and 2 other cities is one thing. How do you create the back end to be able to service for this kind of choice and preference?
So it can be done. And I think this is a question that was asked to me in 2016.
By an investor.
By an investor for Milk Basket. Yes, you deliver 500 orders every morning before 7 o'clock. Can you do it at scale? So I have done it at 50,000 and 100,000 also every morning before 7 o'clock. And I can tell you that supply chains can be created for that. So it's like, it's doable.
It's doable.
It's doable.
It's not rocket
workable.
science.
It's not rocket science. See, rocket science in our business is doing the same thing again and again. And there could be 1,000 things that can change on a daily basis, and keeping track of them and being very diligent about it. And I'm not saying that we do not have an error or we do not have customer complaints. There would be. There is a human error.
Yeah.
There's a process error.
Sure.
There's an availability problem. These things will come. But can it be done? Yes, it can be done. So a very simple thing that we talk about in business is in 2 years, we want to be the local guy who knows 1 million families on the tip of their tongue to say, Mehta ji, aapke like mango nahi hai, कि जब आएगा भिजवा देंगे. You know, I need to know my customers at that level.
Handpick से भिजवा देंगे.
Handpick से भिजवा देंगे. I need to know my customers at that level, that I know their family preference of what is मेरी वाली quality at मेरे वाला price.
Let's talk about scale at City Mall and what you've been able to do now with micro entrepreneurs as well as the use of technology. What's been the biggest challenge of scaling up and how did you address that as you made the many pivots that you've made?
Yeah. So our biggest challenge in scaling has been to manage the trade-off between building a supply chain that's super efficient at a super low cost and providing reliability to the end consumer. That every order at this particular, so what we promise is what we deliver. So that trade-off around cost and reliability has been the biggest challenge for us across, all these years. And that's where we realized that the best friend that you have in such a situation is technology. You cannot do this at scale, at that cost, at a certain reliability levels
without technology.
Yeah, and that's been our sort of biggest, if you ask me, what's the mode of City Mall? It is not just the lowest cost model, but lowest cost model with a high reliability to the end consumer. That's what defines us.
When you say lowest cost model, can you explain that in numbers? Can you quantify that for us? I mean, I understand that there might be competitive reasons why you wouldn't want to share it to the last detail, but give us some idea when we talk about the lowest cost model, what does that mean?
So Shireen, so if you order, let's say, a 400-500 rupees order on...
Which is the typical average order size for you? Yeah.
For us, for most of the other people, actually. So let's say you order on quick commerce, 400-500 rupees order. To the platform, it would typically cost somewhere between 110 to 130 rupees to deliver to the end consumer.
Okay.
At their doorstep. If you place an order on a typical e-commerce company, I'm talking about a grocery order, not the packets. It would typically cost about 140-150 rupees for other e-commerce companies. It costs us 1/3 of that.
And you're saying that at this point in time, the consumer in Bharat is not that concerned about quick delivery. They can wait for 24 hours. What they are more concerned about is price and choice, and convenience perhaps is at the lower end of what they expect from a service, correct?
Yeah. So yes, absolutely. What our consumers really want is they want the best value essentials. And when I say value, there's a trade-off between price and quality. Delivered at home. Delivery at home is in itself a big convenience. Just imagine, like Anand mentioned, 70-year-old lady taking 30, going to a supermarket or a wholesale market, carrying 30 kgs of ration. It's super inconvenient.
Yeah.
So just delivering them to their doorsteps and giving them the best value is what Bharat really needs. They don't, large part of Bharat, for large part of their use cases, don't need a 10-minute delivery.
They don't need a 10-minute delivery. How different is the Bharat that Angad is servicing from the India that you are servicing, Anand?
So I think I bring it down to the lowest common denominator. We are all human.
Yes.
And I think as I remember, I think Jeff Bezos put it together. It's like faster, cheaper, better. And there is always a trade-off between faster, cheaper, and better. So if you are giving me the same product, I would like it to be the fastest and the cheapest. As a normal thing, I say if a Parle G has to come, it's the same Parle G, because Parle G is, there's a Parle behind it, and who's saying that, or if a Head and Shoulder has to come, or if a surf has to come, it's the same surf. Then I would go for where do I find it cheapest and where do I find it fastest, depending on the preference. But if the product is going to be different, then suddenly there's a big difference between a Honda and a Mercedes, right? And then you're willing to wait to customize your Ferrari. Means just to the extent that people are willing to wait. There is no hurry.
So what do you want to be, Honda, Mercedes, or Ferrari? In the food and vegetable world.
We have many essentials. See, for us, it's like
the Ferrari of daily essentials, is it?
It's not the Ferrari. No way. You cannot say it Ferrari. Though, see, we have customers who spend north of 30,000 rupees on fruits and vegetables in a month.
North of 30,000 rupees.
North of 30,000 rupees.
On,
a single family.
Yeah.
On handpicked. And we only sell fruits and vegetables.
Right.
We don't have any grocery. We don't have any GST product. We are zero GST, right? Only
Look at the smile on his face when he says that we are zero GST. The smile.
I got it.
No, it reduces so much paperwork because we are a zero GST platform. Yeah. But see, at the end of the day, everybody wants to eat fresh bindi. Everybody wants to have an aubergine, and it would be at the price where you feel comfortable buying. And then there would be families who would go for avocados on a daily basis in breakfast, and dragon fruits, and want salaries and want super greens. So there is a spectrum.
Yeah.
And within that spectrum, we want to serve everyone. So we say that we are a mass premium. We are not the Ferrari. We are not even the Mercedes. We are a good, comfortable, but the quality is good of whatever you buy. So it would be a good bhindi, and bhindi is eaten by everyone.
Let's talk about how preferences of consumers are changing in Bharat. What are you picking up as emerging trends? Where are people spending their money? What are people now aspiring to experiment and try out with beyond just the daily essentials? What's the data telling you?
So did you sell any iPhone 17s? Lots of them. Just kidding. So it's actually
maybe at some point maybe
someday,
you will.
yes.
Why not?
Why not? So it's very surprising. I recently looked at what are our users searching, and I was super surprised. There are searches, lots of searches around Korean noodles.
Okay.
I never thought Bharat. So Korean noodles is a rage in Bharat.
Okay.
There are sort of searches around all the aspirational sauces, peanut butters, a lot of searches around that. So what we took away from there is that value doesn't mean that you are not aspirational about it.
Correct.
There is a lot of aspiration. We in fact deep dived and understood where this behavior is coming from. And this is actually content. Content is so homogenized. Everybody is watching the same content.
Yeah, Instagram and YouTube
and all the Korean dramas and all of that.
K-pops.
So yeah, K-dramas. So content is creating aspiration.
And demand.
And demand. Aspiration is creating demand. Supply chain and fulfillment models are failing it. That's what our biggest, because it takes a lot of time to actually build the fulfillment and supply chain to meet those aspirations and hence those demands. And that's where we see a huge opportunity. Our consumers in Bharat, they are extremely aspirational. They are wanting to try newer and newer products. The supply chains are actually failing them.
Supply chains are failing them, but has the cart size gone up significantly since the time that you started City Mall?
Cart size have gone up almost by 30% since we started.
You're also now getting into things like private labels, etc., right? So,
Yes.
so you can then not just control the supply chain, but you, in fact, put your own stuff onto
Yeah.
shelves in the supply chain.
Yeah.
And how's that working for you?
Very good. I think it's the fastest growing category for us.
What all are you doing currently under your private label brands?
Everything. From staples to sauces to toilet cleaners and everything that you can think about in between. So we are going very heavy, very aggressive on our private label portfolio. And it is being driven by, we are working consumer backwards.
Right.
For us, consumer wants best value delivered at home. Now, if in order to give the best value, if we have to go even deeper in our supply chain to build those private labels and transfer that value to the end consumers, we will do that. So we think about ourselves, Shireen, like a low-cost distribution pipe with lowest cost products and product categories, stacked vertically. And all those categories are then sort of flowing through that distribution pipe. So our job is very simple. We've already created this lowest cost distribution pipe. Now we are building lowest cost product categories either through private labels or partnering with small regional brands and manufacturers. So going very deep in our supply.
Okay, so we got some math in terms of how many SKUs he's having to deal with. How many are you dealing with, both on the private label side as well as carrying everything else from everybody else today?
10,000.
10,000. And
Yes.
what's the aspiration? What do you believe that number could potentially look like a few years on?
We'll go as high as 25,000, 30,000.
Let's talk about fundraising. You've recently raised funds, enough to further and fuel the growth aspirations that you currently have?
Yeah. So we are growing 2x year on year. We'll continue to do that. And we'll soon hit company level profitability as we sort of grow 2x. So we are well capitalized.
You started with how much and where are you today in terms of revenue?
We started with 0. Today,
Okay. What was the first check that came your way?
our first raise was 2 crores.
Okay.
And our last round was 47 million.
2 crores to 47 million and the aspiration of hitting 1,000 crore rupees in revenue next year.
We've already crossed that.
You've already crossed 1,000 crore rupees in revenue. What's been the most exciting part of going from 0 to 2 to 47 million to 1,000 crores?
I think just understanding the users, how users are evolving, actually understanding that need of how the equation around price, choice, and convenience works. and recalibrating ourselves every quarter that, hey, we need to do this more, that more. So this process of recalibrating, sometimes pivoting, has been the toughest and the most exciting part.
And did you think while you were studying here in IIT Delhi that this is what you were going to end up doing?
No, not in my dreams.
Not.
Yeah, I wanted to become an entrepreneur, but
I mean, you could have been you could have continued with sports because you were a national level table tennis player, but you had to give up on that aspiration for IIT Delhi.
Yes.
And then you went through the same consulting route and so on and so forth, but realized that that was not for you. So in hindsight, it worked out well. But while you were going through that process, what was the biggest fear?
Well,
of making that pivot?
Well, while I was making that pivot, it was just the uncertainty of whether. So when I started, it was like, okay, yeah, we've done a few things in my life, and I'll do this too. But I've had 3 failed entrepreneurial stints before City Mall. 2-3 years into it, I totally realized that this is not easy. It's gonna take a lot of time, sacrifice. But yes, the common denominator there was. That entire journey I was really enjoying, while I was not, in technical terms, making progress, but I was enjoying the process.
While you weren't making it, you were still enjoying the journey.
I was enjoying the process a lot. Yeah. And that was actually not true while I was going through that
consulting and I would imagine. And what has it been like for you? I mean, you've also had a bunch of ventures before you did Milk Basket, and now, of course, Handpicked. What's been the most exciting part about this journey, and what have you learned, more importantly, from the setbacks, because both of you have had plenty?
So I had 2 failed startups before I did Milk Basket.
Competing with each other now.
Competing with one of them. So no, my third was successful. Hopefully, I don't know. But I think every time you do something, and especially from the 7 years of Milk Basket, what I have and I personally look at very closely is a big list of not to do's. Because I think as an entrepreneur, we do things, we fail, we do things, we fail. And every time you do things, you would spend your time and resources. Having a list of not to do's to me is more important, because every business is so unique.
What is the not to do list?
I think not to take shortcuts is a big thing. Not to feel, they say customer is forgiving, but customer is not forgiving. It's always easy to acquire a customer than to reacquire a customer.
Yeah, it's been an absolute pleasure to speak to the two of you. Thanks very much for your time, and we wish you the very best of luck as you grow Handpicked and as you grow City Mall. And we look forward to hearing more from you on where these 2 companies are going to be 5 years on. But thanks very much for joining us here on Young.
Thank you so much for having us.
No, it's wonderful to speak with you. With that, it is time for us to wrap up this edition of the Young Turks Reloaded podcast from all of us here on the show. Thanks very much for watching. You watched 2 entrepreneurs on the show today. If you liked hearing from them, send us your feedback and tell us who you'd like to hear from next. Goodbye, and thanks very much for watching.
There are very few people in the world, and more so in India, who inspire with decency, with a strong set of values, who believe in what they say, who are torchbearers of not just a legacy, but who are deeply passionate about India. Even fewer are from the world of business. But today, I have a guest who is not just a colossus, but actually an inspiration to people across ages. Age doesn't define him, his work does. And he continues this tirelessly as someone who always believes in what he does and does what he believes in. Welcome, Mr. Tata.
Thank you, Sahil. It's nice to be here.
Sir, Ratan Tata Trust will be completing almost 125 years of its existence, the first of the trusts. When you look back at the work that the Tata Trusts have done, what do you feel, and What ignites this feeling of compassion and giving back?
Well, I have a great sense of pride that over these 125 years, Sir Ratan Tata left his legacy to the philanthropic causes, followed by his brother, when Sir Dorab Tata, when he passed away, did exactly the same. And over the years, Tatas have been structured by the holding company or the proprietor's ownership being held by two charitable trusts, and over the years, an increase in the number of charity trusts that were created to work on the disparities that one found in the country, at that time a colonial country, and to work for the common good of the common man. This was a different thing. It set up cancer hospitals, schools, and institutions of that nature. It had also dealt heavily in terms of individual hardships. So through the years, the trusts have dealt with individual hardships. They have given scholarships to students. We've had past presidents of India who have been scholars of those Tata scholarships. We have created institutions which stand today, like the Indian Institute of Science, which the trust did not actually set up. Jamsetji Tata set that up.
But there's an interesting anecdote there, right, between Swami Vivekananda, the conversation that Jamsetji Tata had with Swami Vivekananda aboard a ship.
I don't specifically know about that conversation, but they met each other and were inspired by each other. I know that. So over the years, the trusts have focused on either creating institutions that serve the common good, like cancer hospitals, etc., and institutions of learning, some international and some domestic, and causes which were said to be for the common good. What is refreshing is that the holding company for the whole Tata Group, which Jamsetji Tata set up, that 66%, or at that time more, 85% of its income and dividend outflow became income to the trusts for the common good of the Indian citizen and foreign causes.
But as you rightly said, at that time there was no need, there was no mandate. Today we have CSR, much abused as it is a phrase. But what do you think went through the minds of the founders when they set this up, and especially transferring their value in Tata Sons to the trusts?
Well, I think it was a different view of ownership. Mr. J.R.D. Tata often used to refer to Tatas as being the trustees of the people. The Tata family could have become tremendously wealthy by having distributorships, partnerships, etc. in the businesses. But most of the businesses, whether it was steel, whether it was power, or institutions, were set up as institutions for the country. So Jamsetji Tata could just as well have dedicated Tata Steel to the nation or dedicated Tata Power to the nation. They belong to the shareholders and to the people. Personal ownership and personal wealth happened when it happened, but was never the criteria for these companies to be established. So it was natural that he he did leave his ownership to his two sons, and then his two sons, who had no children, left them in charitable trusts as beneficiaries of the companies that they held. So it was a refreshing change that gave way to ownership in an industry not being for the beneficial interest of A or B or C, but for the better good of humanity.
So if you look at the trusts today, they span a wide range of sectors. And there's a certain stress that you've laid on technology being a great intervention in some of the applications. Where do you believe the transformation of the trusts actually began and why?
Well, you know, if you look at India through the years, the needs of India have changed. We had famines, food famines in the British times. Yeah. We don't have famines any longer. We had a majority of the people living in the rural areas. Today there's a mass migration to the urban areas, giving finally an important issue of creating an important issue of urban poverty and hardships that didn't exist before. The creation of jobs in industrial organizations. Today, automation and differences in terms of value chains, etc., make human jobs less important than machine jobs in many companies. So the needs of the nation have changed. Food shortages continue to exist in pockets. Water shortage is something that never existed in the past, but is an issue today. A much larger population and creating jobs and knowledge. These are all issues that are issues of the changing times. For the trust to continue to do what they did at the turn of the century would be to be sitting in the twilight thinking that the issues of the country were the same. And to me, that would have been a disappointment. So I think the trusts have gone through and are going through a transformation that, to use short term, is making the trusts relevant today. If we had not done that, they would have become irrelevant and creator of edifices that stood out as evidence of what the trust did, but did not make a contribution to the country.
While I completely agree about the relevance of the trust, the one thing that a lot of people talk about is the Tata culture, the Tata way of life. If you work for the Tatas, on the one hand, it's almost as we are working for a family. On the other, it's almost as if you're part of a legacy. How have successive leaders, you, before you, JRD, how have you managed to retain that Tata culture in times which are sadly materialistic, competitive? How have you maintained that culture?
First of all, that culture becomes embodied in the DNA of an organization. It's set off by the early leaders, the founder in our case, who never was in need of wealth because he had it all, but it wasn't what drove him. Success of giving India its own independence in steel or power or the hospitality area were what gave him the pride that he had made India self-sufficient. He didn't at that time look at the companies as being his, but belonging to the country. Somehow that prevailed through the years, through his sons, and then through J.R.D. Tata for 50 years or so, where J.R.D. would stand in a line rather than jump
Beat
a
the
queue.
Yeah.
Where he would give way to a customer first and not him. And that humility, I think, became embodied in what all the leaders of Tata companies had done. And we should protect that ferociously. The day we lose that, I think we've lost an important facet or input in the companies that we have. And the day we decide to cheat, the day we decide to do something that holds something for us and not for the customer, I think we will have lost a very, very important asset.
Has it been tough to stick by these values, especially during times when values were being trampled upon because of politics, competition, blah, blah, blah? Were there times that you often felt that, thank God, we are not the shortcut Tatas? Because you could have taken that shortcut.
Yes, I'd be lying if I said there weren't moments when those issues came up and those decisions had to be made. Happily, at every time, boards stood together and leadership stood together in saying that's not what we do. We, over the years, on occasion, have suffered as a result of that. But on the whole, I think we have, I believe that it's very important to come back at night and say, I have not succumbed.
I love that. Because it's very easy to succumb.
Yeah.
I mean, you must have faced political pressure, economic pressures, and yet you stood the course.
Sometimes you didn't know if you were doing the right thing. All things are not black and white. You have a choice. One choice leads you down a certain path long term. Another leads you down another path short term. And then you have to weigh one issue against another. Hopefully you make the right decision. Sometimes we don't, but we do it with innocence or naivety rather than intent and negativity. So I think that's a sort of dilemma that faces many leaders in the corporate world or politics. So it does in the business community too.
In 1991, when you took over, you were stepping into giant shoes, JRD's shoes. And then you brought the entire group together. I still remember the work that you did around brand Tata and royalty, blah, blah, blah. When you took over and sat in that corner office in 1991, what was the one thought that raced through your mind? Because you were now the torchbearer and the legacy holder of almost 120, 130 years of existence.
On the one hand, it was a big move for me. But on the other hand, I joined the group in '62. So I'd been in various positions on the shop floor in Australia, in textiles and steel, in Tata Motors, through the years, and it was, in relative terms, easy for me to relate to the bigger issue. The one thing I had, which maybe is not so evident, is I had a terrific mentor in J.R.D. Tata. I remember walking back from the meeting and where I was appointed chairman, when he walked back, I walked with him to his office and he told his secretary, Alu, we'll have to move out of here now.
Superb.
And I said, no, Jay, you don't move out. This is your office as long as you want it. So he said, really? So I said, yes, it is. He said, where would you sit? I said, where I'm sitting today. I have an office down the hall, and that's fine. Then I was deadly afraid that that JRD would forget that he stepped down, and time again, because he never stepped off the companies. He remained on the board of Tata Steel or Telco at that time. And I thought, suppose he runs the group from behind and forces his view on. He never did. In fact, he was my greatest mentor, and the years that he was alive, I used to go into his office and say, Jay, I wish this had happened 10 years ago. We have got such a great relationship. And he said, yes, I wish so too. So I was very lucky in having him there. He lent his weight when he had to. Example, the retirement age. Without his support, I could never have done that. He would explode if he thought something was being done that was wrong. But on the whole, he was a terrific mentor. He was like a father, like a brother, gave advice. He always had time for you. It was a terrific relationship and very, very important. Not enough is being said about that.
But you too have been pretty reticent and shy, if I may add, about talking about the experiences that you went through, your relationship with Jay. I mean, some of the things that we're hearing now, we've never heard before. In your interactions with JRD, what was the one thing that you took away from that interaction? What was the core of his brand values, or his kernel, as it were?
I would think if I were to have to pick one, humility would be on the top of the list. He was just a person who longed to be anonymous. And to some extent, that's rubbed off on me.
Yeah, you love being anonymous.
Yeah, I do. And as you go through life, you find that becomes less so and less possible. And then you look at seeking anonymity by hiding.
But were you always shy? Were you always away from, you didn't want to not meet people, you didn't want the arc lights on you?
I think so, because when I was in school, etc., you wanted to be part of the school and not the rich man's son or the chairman's son, or have a big car take you home while your classmates went by bus or smaller cars. You just wanted to be a normal person. And from time to, I think I owe a lot to my father to ensure that we at no stage grew up, my brother and I, as pompous young people, but as people who'd like to be every day. And I think that has stayed with me.
I want to come back to a larger national picture. You've seen prime ministers, you've seen governments at work at the state level, at the international level. India is at an exciting time, at an exciting place. What are your views about Narendra Modi?
First of all, let me just say I've known Mr. Modi when he was the Chief Minister of Gujarat. I turned to him when we had to change factories from Singur in West Bengal to Gujarat. So I've seen him and will never forget the way he found solutions for a company that was looking for a home.
How was that meeting when you met Mr. Modi in those days and told him about this move?
What I've said publicly is he invited me to come to move the factory to Gujarat. And I said, we'd come if we had a home. And he said, I'll get you the land you want in 3 days.
Amazing.
And then he delivered that on the third morning. He said, Ratanji, here's the land that I promised. And that just doesn't happen in India. So Mr. Modi, as Prime Minister now, is offering India, the Indian people, a new India. I think we need to give him that opportunity to offer that new India. He's able and capable of and innovative enough to look at India afresh. And I, for one, am optimistic that with his leadership, India will be that new India that he has promised.
There are very few people in the world, and more so in India, who inspire with decency, with a strong set of values, who believe in what they say, who are torchbearers of not just a legacy, but who are deeply passionate about India. Even fewer are from the world of business. But today, I have a guest who is not just a colossus, but actually an inspiration to people across ages. Age doesn't define him. His work does. And he continues this tirelessly as someone who always believes in what he does and does what he believes in. Welcome, Mr. Tata.
Thank you, Sahil. It's nice to be here.
Sir, Ratan Tata Trust will be completing almost 125 years of its existence, the first of the trusts. When you look back at the work that the Tata Trusts have done, what do you feel and what ignites this feeling of compassion and giving back?
Well, I have a great sense of pride that over these 125 years, Sir Ratan Tata left his legacy to the philanthropic causes, followed by his brother, Sir Dorab Tata, when he passed away, did exactly the same. And over the years, Tatas have been structured by the holding company or the proprietor's ownership being held by two charitable trusts, and over the years, an increase in the number of charity trusts that were created to work on the disparities that one found in the country, at that time a colonial country, and to work for the common good of the common man. This was a different thing. It set up cancer hospitals, schools and institutions of that nature. It had also dealt heavily in terms of individual hardships. So through the years, the trusts have dealt with individual hardships. They have given scholarships to students. We've had past presidents of India who have been scholars of those Tata scholarships. We have created institutions which stand today, like the Indian Institute of Science, which the trust did not actually set up. Jamsetji Tata set that up.
But there's an interesting anecdote there, right? Between Swami Vivekananda, the conversation that Jamsetji Tata had with Swami Vivekananda aboard a ship.
I don't specifically know about that conversation, but they met each other and were inspired by each other. I know that. So over the years, the trusts have focused on either creating institutions that serve the common good, like cancer hospitals, etc., and institutions of learning, some international and some domestic, and causes which were said to be for the common good. What is refreshing is that the holding company for the whole Tata Group, which Jamsetji Tata set up, that 66%, or at that time more, 85% of its income and dividend outflow became income to the trusts for the common good of the Indian citizen and foreign causes.
But when as you rightly said, at that time there was no need, there was no mandate. Today we have CSR, much abused as it is a phrase. But what do you think went through the minds of the founders when they set this up, and especially transferring their value in Tata Sons to the trusts?
Well, I think it was a different view of ownership. Mr. J.R.D. Tata often used to refer to Tatas as being the trustees of the people. The Tata family could have become tremendously wealthy by having distributorships, partnerships, etc. in the businesses. But most of the businesses, whether it was steel, whether it was power, or institutions, were set up as institutions for the country. So Jamsetji Tata could just as well have dedicated Tata Steel to the nation or dedicated Tata Power to the nation. They belong to the shareholders and to the people. Personal ownership and personal wealth happened when it happened, but was never the criteria for these companies to be established. So it was natural that he did leave his ownership to his two sons, and then his two sons, who had no children, left them in charitable trusts as beneficiaries of the companies that they held. So it was a refreshing change that gave way to ownership in an industry not being for the beneficial interest of A or B or C, but for the better good of humanity.
So if you look at the trusts today, they span a wide range of sectors. And there's a certain stress that you've laid on technology being a great intervention in some of the applications. Where do you believe the transformation of the trusts actually began, and why?
Well, if you look at India through the years, the needs of India have changed. We had famines, food famines in the British times.
Yeah.
We don't have famines any longer. We had a majority of the people living in the rural areas. Today there's a mass migration to the urban areas, giving finally an important issue of creating an important issue of urban poverty and hardships that didn't exist before. There was the creation of jobs in industrial organizations. Today, automation and differences in terms of value chains, etc., make human jobs less important than machine jobs in many companies. So the needs of the nation have changed. Food shortages continue to exist in pockets. Water shortage is something that never existed in the past, but is an issue today. A much larger population and creating jobs and knowledge. These are all issues that are issues of the changing times. For the trust to continue to do what they did at the turn of the century would be to be sitting in the twilight thinking that the issues of the country were the same. And to me, that would have been a disappointment. So I think the trusts have gone through and are going through a transformation that, to use short term, is making the trusts relevant today. If we had not done that, they would have become irrelevant and creator of edifices that stood out as evidence of what the trust did, but did not make a contribution to the country.
While I completely agree about the relevance of the trust, the one thing that a lot of people talk about is the Tata culture, the Tata way of life. If you work for the Tatas, on the one hand, it's almost as we are working for a family. On the other, it's almost as if you're part of a legacy. How have successive leaders, you, before you, JRD, how have you managed to retain that Tata culture in times which are sadly materialistic, competitive? How have you maintained that culture?
First of all, that culture becomes embodied in the DNA of an organization. It's set off by the early leaders, the founder in our case, who never was in need of wealth because he had it all, but it wasn't what drove him. Success of giving India its own independence in steel or power or the hospitality area were what gave him the pride that he had made India self-sufficient. He didn't at that time look at the companies as being his, but belonging to the country. Somehow that prevailed through the years, through his sons, and then through JRD Tata for 50 years or so, where JRD would stand in a line rather than jump a queue.
Yeah.
Where he would give way to a customer first and not him. And that humility, I think, became embodied in what all the leaders of Tata companies had done. And we should protect that ferociously. The day we lose that, I think we've lost an important facet or input in the companies that we have. And the day we decide to cheat, the day we decide to do something that holds something for us and not for the customer, I think we will have lost a very, very important asset.
Has it been tough to stick by these values, especially during times when values were being trampled upon because of politics, competition, blah, blah, blah? Were there times that you often felt that, thank God, we are not the shortcut Tatas? Because you could have taken that shortcut.
Yes, I'd be lying if I said there weren't moments when those issues came up and those decisions had to be made. Happily, at every time, boards stood together and leadership stood together in saying that's not what we do. We, over the years, on occasion, have suffered as a result of that. But on the whole, I think we have, I believe that it's very important to come back at night and say, I have not succumbed.
I love that. Because it's very easy to succumb.
Yeah.
I mean, you must have faced political pressure, economic pressures, and yet you stood the course.
Sometimes you didn't know if you were doing the right thing. All things are not black and white. You have a choice. One choice leads you down a certain path long term. Another leads you down another path short term. And then you have to weigh one issue against another. Hopefully you make the right decision. Sometimes we don't, but we do it with innocence or naivety rather than intent and negativity. So I think that's a sort of dilemma that faces many leaders in the corporate world or politics. So it does in the business community too.
In 1991, when you took over, you were stepping into giant shoes, JRD's shoes. And then you brought the entire group together. I still remember the work that you did around brand Tata and royalty, blah, blah, blah. When you took over and sat in that corner office in 1991, what was the one thought that raced through your mind? Because you were now the torchbearer and the legacy holder of almost 120, 130 years of existence.
On the one hand, it was a big move for me. But on the other hand, I joined the group in '62. So I'd been in various positions on the shop floor in Australia, in textiles and steel, in Tata Motors, through the years, and it was, in relative terms, easy for me to relate to the bigger issue. The one thing I had, which maybe is not so evident, is I had a terrific mentor in J.R.D. Tata. I remember walking back from the meeting in where I was appointed chairman. When he walked back, I walked with him to his office and he told his secretary, Alu, we'll have to move out of here now.
Superb.
And I said, no, Jay, you don't move out. This is your office as long as you want it. So he said, really? So I said, yes, it is. He said, where would you sit? I said, where I'm sitting today. I have an office down the hall, and that's fine. Then I was deadly afraid that the JRD would forget that he stepped down, and time again, because he never stepped off the companies. He remained on the board of Tata Steel or Telco at that time. And I thought, suppose he runs the group from behind and forces his view on. He never did. In fact, he was my greatest mentor, and the years that he was alive, I used to go into his office and say, Jay, I wish this had happened 10 years ago. We have got such a great relationship. And he said, yes, you know, I wish so too. So I was very lucky in having him there. He lent his weight when he had to. Example, the retirement age. Without his support, I could never have done that. He would explode if he thought something was being done that was wrong. But on the whole, he was a terrific mentor. He was like a father, like a brother, gave advice. He always had time for you. It was a terrific relationship and very, very important. Not enough is being said about that.
But you too have been pretty reticent and shy, if I may add, about talking about the experiences that you went through, your relationship with Jay. I mean, some of the things that we're hearing now we've never heard before. In your interactions with JRD, what was the one thing that you took away from that interaction? What was the core of his brand values, or his kernel, as it were?
I would think if I were to have to pick one, humility would be on the top of the list. He was just a person who longed to be anonymous. And to some extent, that's rubbed off on me.
Yeah, you love being anonymous.
Yeah, I do. And
There are very few people in the world, and more so in India, who inspire with decency, with a strong set of values, who believe in what they say, who are torchbearers of not just a legacy, but who are deeply passionate about India. Even fewer are from the world of business. But today, I have a guest who is not just a colossus, but actually an inspiration to people across ages. Age doesn't define him, his work does. And he continues this tirelessly as someone who always believes in what he does and does what he believes in. Welcome, Mr. Tata.
Thank you, Sahil. It's nice to be here.
Sir, Ratan Tata Trust will be completing almost 125 years of its existence, the first of the trusts. When you look back at the work that the Tata Trusts have done, what do you feel and what ignites this feeling of compassion and giving back?
Well, I have a great sense of pride that over these 125 years, Sir Ratan Tata left his legacy to the philanthropic causes, followed by his brother, when Sir Dorab Tata, when he passed away, did exactly the same. And over the years, Tatas have been structured by the holding company or the proprietor's ownership being held by two charitable trusts, and over the years, an increase in the number of charity trusts that were created to work on the disparities that one found in the country, at that time a colonial country, and to work for the common good of the common man. This was a different thing. It set up cancer hospitals, schools, and institutions of that nature. It also dealt heavily in terms of individual hardships. So through the years, the trusts have dealt with individual hardships. They have given scholarships to students. We've had past presidents of India who have been scholars of those Tata scholarships. We have created institutions which stand today, like the Indian Institute of Science, which the trust did not actually set up. Jamsetji Tata set that up.
But there's an interesting anecdote there, right? Between Swami Vivekananda, the conversation that Jamsetji Tata had with Swami Vivekananda aboard a ship.
I don't specifically know about that conversation, but they met each other and were inspired by each other. I know that. So over the years, the trusts have focused on either creating institutions that serve the common good, like cancer hospitals, etc., and institutions of learning, some international and some domestic, and causes which were said to be for the common good. What is refreshing is that the holding company for the whole Tata Group, which Jamsetji Tata set up, that 66%, or at that time more, 85% of its income and dividend outflow became income to the trusts for the common good of the Indian citizen and foreign causes.
But as you rightly said, at that time there was no need, there was no mandate. Today we have CSR, much abused as it is a phrase. But what do you think went through the minds of the founders when they set this up, and especially transferring their value in Tata Sons to the trusts?
Well, I think it was a different view of ownership. Mr. J.R.D. Tata often used to refer to Tatas as being the trustees of the people. The Tata family could have become tremendously wealthy by having distributorships, partnerships, etc. in the businesses. But most of the businesses, whether it was steel, whether it was power, or institutions, were set up as institutions for the country. So Jamsetji Tata could just as well have dedicated Tata Steel to the nation or dedicated Tata Power to the nation. They belong to the shareholders and to the people. Personal ownership and personal wealth happened when it happened, but was never the criteria for these companies to be established. So it was natural that he did leave his ownership to his two sons, and then his two sons, who had no children, left them in charitable trusts as beneficiaries of the companies that they held. So it was a refreshing change that gave way to ownership in an industry not being for the beneficial interest of A or B or C, but for the better good of humanity.
So if you look at the trusts today, they span a wide range of sectors. And there's a certain stress that you've laid on technology being a great intervention in some of the applications. Where do you believe the transformation of the trusts actually began and why?
Well, you know, if you look at India through the years, the needs of India have changed. We had famines, food famines in the British times.
Yeah.
We don't have famines any longer. We had a majority of the people living in the rural areas. Today there's a mass migration to the urban areas, giving finally an important issue of creating an important issue of urban poverty and hardships that didn't exist before. The creation of jobs in industrial organizations. Today, automation and differences in terms of value chains, etc., make human jobs less important than machine jobs in many companies. So the needs of the nation have changed. Food shortages continue to exist in pockets. Water shortage is something that never existed in the past, but is an issue today. A much larger population and creating jobs and knowledge. These are all issues that are issues of the changing times. For the trust to continue to do what they did at the turn of the century would be to be sitting in the twilight thinking that the issues of the country were the same. And to me, that would have been a disappointment. So I think the trusts have gone through and are going through a transformation that, to use short term, is making the trusts relevant today. If we had not done that, they would have become irrelevant and creator of edifices that stood out as evidence of what the trust did, but did not make a contribution to the country.
While I completely agree about the relevance of the trust, the one thing that a lot of people talk about is the Tata culture, the Tata way of life. If you work for the Tatas, on the one hand, it's almost as we are working for a family. On the other, it's almost as if you're part of a legacy. How have successive leaders, you, before you, JRD, how have you managed to retain that Tata culture in times which are sadly materialistic, competitive? How have you maintained that culture?
First of all, that culture becomes embodied in the DNA of an organization. It's set off by the early leaders, the founder in our case, who never was in need of wealth because he had it all, but it wasn't what drove him. Success of giving India its own independence in steel or power or the hospitality, self-sufficient. He didn't at that time look at the companies as being his, but belonging to the country. Somehow that prevailed through the years, through his sons, and then through J.R.D. Tata for 50 years or so, where J.R.D. would stand in a line rather than jump
Beat
a
the
queue.
Yeah.
Where he would give way to a customer first and not him. And that humility, I think, became embodied in what all the leaders of Tata companies had done. And we should protect that ferociously. The day we lose that, I think we've lost an important facet or input in the companies that we have. And the day we decide to cheat, the day we decide to do something that holds something for us and not for the customer, I think we will have lost a very, very important asset.
Has it been tough to stick by these values, especially during times when values were being trampled upon because of politics, competition, blah, blah, blah? Were there times that you often felt that, thank God, we are not the shortcut Tatas? Because you could have taken that shortcut.
Yes, I'd be lying if I said there weren't moments when those issues came up and those decisions had to be made. Happily, at every time, boards stood together and leadership stood together in saying that's not what we do. We, over the years, on occasion, have suffered as a result of that. But on the whole, I think we have, I believe that it's very important to come back at night and say, I have not succumbed.
I love that. Because it's very easy to succumb.
Yeah.
I mean, you must have faced political pressure, economic pressures, and yet you stood the course.
Sometimes you didn't know if you were doing the right thing. All things are not black and white. You have a choice. One choice leads you down a certain path long term. Another leads you down another path short term. And then you have to weigh one issue against another. Hopefully you make the right decision. Sometimes we don't, but we do it with innocence or naivety rather than intent and negativity. So I think that's a sort of dilemma that faces many leaders in the corporate world or politics. So it does in the business community too.